Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the you're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open with Tamanna, Alex and Neeraj.
Welcome, you're watching India Market Open, and what eventful and in part emotional weekend it has been. Alex, we just ran that beautiful montage before we started, the passing away of the legendary Asha Bhosle at the age of 92 in Mumbai.
Yeah, so you must say at the end of it, of course it's sorrowful, but then what a life. Yeah. And what a journey. And I think it's beautiful for artists, right? Because you truly are immortal at the end of your life.
Yeah, you live on, and everyone has a favorite song. It's in the collective consciousness, no matter what age they are.
Yeah.
So truly a life to be celebrated.
Yeah, certainly.
The other, of course, the big one, and which is why you're probably going to see that downtick on the implied open and quite a gash in over 350 points, is because nearly 350 points, is because the talks in Islamabad over the weekend between the US and Iran's delegation failed. The ceasefire is holding for now, but there's going to be a blockade. So it's sort of a new spin to this entire war and this entire sort of head-on-head conflagration between the United States.
What do you think
Iran.
that means, though?
A blockade?
Yeah, I mean, so if Trump is going to stop all ships.
No, but it's not all. So if you see the US CENTCOM statement, and I'll come to that in a second, if you see the US Central Command statement, they're saying they're going to stop all ships coming in and out of Iranian ports. And ships that are passing through the Strait of Hormuz from any other ports will be allowed through. But it's before they even come to any kind of
blockade after a blockade.
If anyone comes to that sort of a blockade, Iran has already said that any military vessel approaching the strait will be seen as an enemy attack.
Yeah.
So it's going to get complicated, to say the least. So the talks have ended with no agreement. There was a 21-hour negotiation. Iran's nuclear program and control of the Strait of Hormuz are clearly major stumbling blocks. Trump has now threatened a blockade of the Strait of Hormuz. The blockade threat worsens the situations for countries managing to get their ships through the strait so far, including India. This is what Trump is saying. No one who pays an illegal toll will have safe passage on the high seas. Here's what the US CENTCOM, that's the US Central Command, is saying. They're saying the blockade will be enforced impartially against vessels of all nations entering or departing Iranian ports and coastal areas, including all Iranian ports on the Arabian Gulf and Gulf of Oman. They go on to say CENTCOM forces will not impede freedom of navigation for vessels transiting the Strait of Hormuz to and from non-Iranian ports. But let's listen in to what US President Donald Trump has said. There's been a series of posts, but a statement as well.
I would say it's holding well. Their military is destroyed. Their whole Navy is underwater. You know that 158 ships are gone. Their Navy's gone. Most of their mine droppers are gone. We have a lot of people, as you know, at 10 o'clock tomorrow, we have a blockade going into effect. That'll be 10 o'clock tomorrow. Other nations are working so that Iran will not be able to sell oil. And that will be very effective. But what we want to do is we want to, and again, we don't need it. What we notice and what we see and what I think is maybe my idea, maybe not, I don't know. But there are many boats heading toward our country to fill up with oil and then go and take it. So they're not going to go through the Hormuz Strait. And ultimately that'll be corrected. But in the meantime, they're using us. We have more oil because of drill baby drill. We have more oil than Russia and Saudi Arabia put together. So if you look at Russia and Saudi Arabia, two big ones, we have much more oil than they have put together. And what's happening is boats are coming over here, filling up. We don't have to go through the Hormuz. I think Iran is in very bad shape. I think they're very desperate. We had a meeting that lasted 21 hours. We understand the situation better than anybody, and Iran's in very bad shape. And just so you understand, Iran will not have a nuclear weapon. Will not have. There is no way that they're going to get. They still want it, and they made that clear the other night. Iran will not have a nuclear weapon. Oh, I don't know. I don't care if they come back or not. If they don't come back, I'm fine. Their military is gone. Their missiles are largely depleted. The manufacturing capability for missiles and drones is largely defeated. We've been very nice. We haven't ripped down too many bridges. We did one only because they broke their word. They broke their promise. And remember, their promise was that they were going to open the Hormuz Strait. They didn't do it. They lied.
The bad news is that we have not reached an agreement, and I think that's bad news for Iran much more than it's bad news for the United States of America. So we go back to the United States having not come to an agreement. We've made very clear what our red lines are, what things we're willing to accommodate them on, and what things we're not willing to accommodate them on. And we've made that as clear as we possibly could, and they have chosen not to accept our terms. But the simple fact is that we need to see an affirmative commitment that they will not seek a nuclear weapon, and they will not seek the tools that would enable them to quickly achieve a nuclear weapon. That is the core goal of the President of the United States, and that's what we've tried to achieve through these negotiations. Again, their nuclear program, such as it is, the enrichment facilities that they had before, they've been destroyed. But the simple question is, do we see a fundamental commitment of will for the Iranians not to develop a nuclear weapon, not just now, not just 2 years from now, but for the long term? We haven't seen that yet. We hope that we will.
All right, so those very long series of bites, the long and short of it is the American side has walked away saying that the whole thing is about nuclear weapons. And of course, the blockade questions what's going to happen with the Strait of Hormuz. Clearly, for markets around the world, this is bad news. Khun Go, head of Asia Research, ANZ Research, is joining us on the show. We're also speaking with Anju Gupta, strategic geosecurity expert. Welcome to both of you. Mr. Go, I'm going to come to you first on how you see all of these developments, because if you look at the collective view of global markets, sort of a sigh of relief coming in as soon as we had that ceasefire details on. That is kind of reversing now, isn't it?
Good morning to you. Yes, it has partially reversed, but markets are not back to pricing in a worst case scenario at this stage. I think that's very important. Yes, the negotiations did not reach an agreement, but the ceasefire is still holding, as you mentioned, and there's still hope. I guess hope is important in this current environment, that negotiations can continue. Now, Trump's announcement of the blockade of the Strait of Hormuz has created confusion in terms of what that actually means. It doesn't seem like a complete total blockade, but more of a blockade of Iranian oil. So I think that's also helping to prevent a more aggressive sell-off during the Asian market hours at this stage. But markets are still very much uncertain and still very much headline-driven at this stage.
Khun, please stay on with us. Anju, do stay on with us as well. I think we should just set up what's been happening overnight with the markets. US markets closed mixed in Friday's trade ahead of weekend talks between US-Iran. So already before the talks, it was not as if there was any great hope, because if you pull up how US markets closed on Friday, it was a bit of a mixed bag one way or the other. Only tech stocks sort of holding up the whole situation. Futures, though, are showing the pain that is being seen right now, and that's very, very clearly in place. The Dow about 2.5% down. Bond yields rose slightly as core inflation in March came in lower than expected, the 10-year at 4.31%. Crude prices, meanwhile, is where all the action is, right? Because there's a blockade at one end, and on the other end, the Wall Street Journal has reported the US is considering limited strikes on Iran. The Brent was above 100 at last count, and we'll get you the updated rates in just a second. Asian markets also opening up in the red because of what we've been seeing happening, and you're going to continue to see those pain points rolling out through the rest of the trading day across global markets. The Hang Seng nearly 1.5%. Let's look at what India Implied is doing, and of course crude prices, which popped nearly 8.5% after this announcement came through. So you have really the screen telling you what the story is throughout. Khun, I want to come to you on that point. Looking at all of this, why do you say that market participants aren't taking these threats too seriously?
I'm not saying they're not taking it seriously. I'm just saying that I think they're still holding up hope that this is a bump in a road towards some, hopefully negotiated agreement to end the conflict at some point. If you look at the markets as a whole, yes, they've fallen on Friday and indicating a much sharper decline today, but they're still at levels that are better prior to the ceasefire announcement a week or so ago. So that's why I'm saying that, whilst we are seeing a risk-off tone at the moment, we're not, weakening back towards, the lows that we saw at the height of the conflict.
Okay, so it would be fair, I think, to say that markets are a little more optimistic at the start of this trading week than they were perhaps at the start of the conflict. And I wonder if that's the appropriate stance. Anju Gupta, strategic geosecurity expert, joining us this morning as well. Anju, very good morning to you. I just want to get a sense from you. Did you anticipate that there would be significant ground made up in the talks that took place this weekend, or is this along the lines of the expectations that you had, and where do we go from here in your opinion?
Good morning to you and others on the show. Thanks for having me on the show. I hope I'm audible.
Yes, you are.
Yeah. Okay. So the ceasefire is fragile, right? And under what circumstances does the ceasefire come about? When there was a threat to wipe out the entire civilization, and Iran was not backing out. At that point in time, we saw external actors getting into the act. And I'm not going to talk more about them in this question. And then we saw the ceasefire. So ceasefire was basically bring the both side back from the brink, because it only meant more devastation for Iran, for GCC, and also the other allies that the US have, and the global energy and other markets and trade. So they were brought back, and that is how the Islamabad process started. Now, one side has given a list of 15 points and the other of 10 points, and there was no meeting ground between the two. So not much was expected of the Islamabad talks, but yes, it has to be welcome. It was welcome because this is some kind of a process of talking to each other, exchanging each other's red lines and other things. But not much was expected. And let's look at it. Within less than 24 hours of engagement, the US said that we cannot continue with this.
Sure. So, Ms. Gupta, what happens from here then? Because ultimately you had a mediator in the form of Pakistan. Is that now completely out of the window? Two, and more importantly, with comments about Trump saying, whatever he's saying on blockading the strait and not allowing certain vessels to pass through, what happens from here?
Pakistan is the face of a set of international players who got Pakistan to become the face. So to say that Pakistan was the mediator is something that I don't agree with. Pakistan doesn't have that kind of heft, but Pakistan was the face because it has that kind of relationship. And they had to find a Muslim country. And they found Pakistan. So I'm not reading too much into Pakistan's ability to swing things. However, what my understanding is that US went back to the drawing board and they said they thought that we need to have a real leverage beyond economic leverage, beyond carpet bombing that we can do at any point in time. And that is how I think they came up with the idea of a naval blockade, which is actually an act of war. So naval blockade is an act of war. Now they are trying to define this act of war against their adversary, which is Iran. But it is going to affect everybody. Through collateral damage, through sheer presence, through sheer act of a blockade in the Strait of Hormuz, outside of it, in the northern part of Indian Ocean and Gulf of Oman. So it's going to affect everyone. My sense is that this is a leverage that the US has tried to create. It is going to create a lot of problem for the global energy market and trade and businesses, absolutely no doubt. It's going to lead to collateral damage and maybe much more fighting in the seas. However, the talks might still continue because now both sides have given each other the red lines. So there would be effort for the talks, for deal, but I don't see it happening immediately. I think we are in for a very bad time.
I'm just trying to understand, Ms. Gupta, what this blockade means for India. Because Trump says no one paying a toll to Iran will be able to pass through. The US CENTCOM says this is for ships that are passing through Iranian ports, considering that we have had some Indian flagged vessels passing through the Strait of Hormuz. Does this blockade announcement threaten that movement as well?
Absolutely. It threatens everybody because now you will have to prove that you're not paying any toll or you don't have any kind of a deal. So while the Iran was policing Strait of Hormuz, now US is policing area outside Strait of Hormuz. So now you have two policemen. I think the only hope is that the Russians and the Iranians will try and, the Russians and the Chinese may try and send in their troops backed by their naval power. I think that would be the real challenge for the US. Other nations, I don't see. Maybe France could do that.
That's a fair point. Kun, so all of that, putting into context all of what was just spoken about, and from the India perspective, I wonder what you think, because it might have just been a flash in the pan, but there was a buy figure from foreign institutions on Friday after a period of 44 days, 27 sessions. We've been counting because there has been no sign of buying. So is this likely to continue, or was that a flash in the pan?
Unfortunately, I think you're going to see continued pressure on Indian financial assets and more foreign investor outflows, I'm afraid. As long as oil prices remain very elevated, we all know what that's going to do to India's current account balance of payments because of the high oil import bill. So that's going to significantly impact on that. And for the Indian rupee, I think got to brace yourself. Potentially, we could be seeing a weakening back towards testing that key 95 level. I mean, the measures, administrative measures that the RBI took, a couple of weeks ago did help to relieve some pressure on the rupee, but that has only proven temporary. And now that all those NOP positions have been cleared out, I think now we're set towards potentially further weakness in the rupee to come.
Okay, thank you so much, Kongo and Anju Gupta, for joining in with us this morning and just giving us a perspective of all of those developments over the weekend. It's really made things clear. The screen is even clearer, Alex, on how this morning is going to open. But what I'm taking heart from is both our experts saying that this does not mean negotiations are done. I know J.D. Vance has left Islamabad and both sides have said, there was no solution. But talks are definitely going on. Red lines have drawn and the ceasefire is still on for all practical purposes. Just that Wall Street Journal report that says that US is planning limited strikes in Iran.
Yeah, I think all very important points. The only barometer at this juncture, and this I think has been the case through the last 3 weeks from our perspective, is the way that crude oil prices have moved. And they are well above that $100 per barrel mark. And there has been action over the weekend from the administration.
But it's not gone back to 119, 108, 110. You're at 101.
Which is still not the best news.
No, 100%. No one is saying this is party time. I'm just saying it's not as scary as it sounds. That the first time you hear talks have failed, you think you're going back to status quo. No, you're not right now.
It's the first round of talks that have failed.
This is something which the Iranian side has also said. So we'll wait and see how that goes. Of course, you're going to see a dip in the markets. How should you prepare for the markets morning? All of that after this very short break. Stay tuned.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
कुछ बड़ा होने वाला है.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching India Market Open, and there's quite a bit that we had to unpack for you, and which is why we started early today, but we're likely to see cuts of as much as 344 points at the start today. That's what the implied is showing, and it's shuttling between that 320 to 350 kind of a downtick for the benchmark Nifty 50. Bear in mind, of course, that we've gained quite a considerable amount of ground over the last 6 or 7 sessions, and so therefore this is par for the course. We will talk about that in just a bit, but let's talk about a few stocks you should keep on your radar over the course of the day and at the start of the week. Varsha joining in to tell you about that. Varsha, morning.
Good morning. Let me start with the business update given by Josh Engineering, wherein they're expecting FY26 to be flattish here. This is of course on the back of US tariff and the Middle East disruptions, but FY27 revenue is expected to grow at 19%, and the order book as of April 1st stands at around 827 odd crore. Then you have Enviro Infra Engineers, wherein they've won a 587 crore EPC order for STP and sewer network projects in Maharashtra, and this order is under Swachh Bharat Mission 2.0. Then Shalby Hospital will be in focus as they have received 5-year approval for kidney transplant services at Ahmedabad. AstraZeneca will be in focus as they have received approval to sell and distribute the tablets which treats leukemia. Lupin will be in focus as they have launched tablets in US which manages type 2 diabetes. NTPC has commissioned 4th unit at Tehri PSP, and the total capacity stands at around 3,907 megawatt. Then you have Carborundum Universal, wherein they have signed 18 megawatt peak solar PPA in Tamil Nadu, and also they have acquired 30% stake in Putrim Renewables for almost 7 crore. And lastly, Advait Energy will be in focus as they have emerged as the L1 bidder for an MVCC turnkey contract.
All right, so quite a few stocks that you've told us about. Thanks so much, Varsha, for that. Let's talk about what happened in trade last week, because what a week it was. It makes your portfolio look significantly better than it did just about 8 or 10 days back, because equity markets saw strong gains across the board. You had the Nifty 50 that ended the week with gains of as much as 6%. This was the best week for the benchmark, get this, since February of 2021. The Nifty 50 has gained in 6 out of the last 7 sessions, and the benchmark actually broke a 6-week losing streak. Foreign institutions' net bought equity at the end of the week, that is on Friday, to the extent of 672 crore rupees, small number, but they turned net buyer after 27 sessions and 44 days. Domestic institutions continuing to buy. About 410 crore rupees worth of equity was bought by domestic institutions, and that dry powder is quite considerable based on the AMFI data for the month of March that came through. Mutual funds have gotten considerable inflows in their equity funds. Broader markets keep pace with the benchmarks, of course, and you had the mid-cap index that gained as much as 7.5% last week. Small cap index gaining about 7%. The bank Nifty outperformed all 3 of those benchmarks and gained as much as 8.5%, but it was a bit of an underperformer in the run-up to last week, of course. Most sectors gained, but you had the Nifty IT that underperformed, and you know the various reasons why. We'll talk about some of those at the start today as well, but that index gained only 2% because it was one of the big losers on Friday.
Okay, I was just thinking about the point about portfolios looking better.
Yeah, relatively.
The fact is that you could see a bit of a slide down. Maybe all the gains of the last session, Friday session, could be wiped out in
quite possible,
today. Yeah.
Quite possible. But if you account for at the benchmark level, you've seen, and if you've got a large cap portfolio, so therefore at Nifty 50 level, if you gained 6% last week, then it's possible that if you've done a better job at stock selection, and hopefully if you've invested with a mutual fund that's going to give you alpha when the market is going up, then you've gained between 7 and 8%. So if you were losing money, or if your gains over the last 3 or 4 years had dissipated somewhat, you made a bit of a comeback.
Yeah, so that was a good week. We don't know if it will continue is the bigger question. I think even FIIs, 1.6 lakh crore rupees have been sold since this war broke out. And that really is just a deepening of FII sells. So markets are opening to that kind of a complex backdrop, isn't it? It's very unclear what's happening next. Technical charts are showing a bullish crossover and strengthening momentum, but the fundamentals, the geopolitical landscape has shifted significantly over the weekend. It's a classic tug of war between technical strength and geopolitical volatility. The Nifty has finally broken its 6-week losing streak with a massive 6% weekly surge. The failure of the high-stakes US-Iran talks over the weekend creates a high-risk opening for the bulls. So the immediate hurdle then is 24,200. You do have a target zone of 24,300 to 24,500. Bulls need a decisive move above Friday's high to maintain momentum towards the 24,570 resistance levels. Having said that, at least the start of trade is going to be difficult for the bulls. Immediate supports now at 24,000. Sustainability above 24,000 is make or break for the bulls today. Immediate support at 23,800. A breach here could signal that the Friday rally was a bull trap. So a crucial base at 23,700. This level must hold to prevent the index from sliding back into the multi-week downtrend, because we've just broken out of it over the last few trading sessions. For the Bank Nifty, resistance at 56,000, 56,150, 57,000. Supports at 55,000, 55,360 and 55,000 for the day. Let me go across to Puneet for the F&O setup this morning.
Well, thank you for that. It's a very important session today because we have a market holiday today. So the expiry for tomorrow, market holiday tomorrow. So we have the expiry today essentially for the Nifty 50, and hence you could see a short squeeze, as you've rightly highlighted, that all the bulls and the calls that largely were being made could be covered early in the session today. So that could have another layer of pressure on the index today, specifically about 24,000 for the week, as you guys rightly highlighted, the best weekly gains since 2021, but continue to monitor 23,800 and 23,200, which is a long-term downside support in that sense, but 23,800 continues to be one of the key levels which we might likely breach today given what we're seeing at the implied open. But an important session nonetheless for the Nifty Bank as well. Now we just started to see some momentum yet again for the PSU banking index, and that could be under pressure yet again. So just a tad below 56,000, 55,500 is a long-term support level, but you could see that getting broken into yet again. And from there on, there's not too many supports even in the 54,000 odd level. Just at 54,400 is the next one. So not too much historical evidence for the level of support there. Continue to monitor that. Foreign investors back in the green, but today that data might get overshadowed with what we are seeing in the global market. So a couple of days late from what we saw on Wednesday's move, but back in the green nonetheless for foreign investors after a really long time. And in terms of the index longs for foreign investors, we maintained that about 20 odd level, currently trading at 22.06. Put call ratio also manageable at between 1.1 to 1.2. And in terms of stocks, just to wrap up very quickly, an open interest distribution of course remains the same at 24,000 and 24,500. Continue to monitor the open interest for 24,500 now, given what we might see at the pressure the start. So continue to monitor 24,000 as a level yet again for both calls and puts going forward. And for stock specific action, in terms of the gainers, you've seen Godfrey yet again be a massive long build up up 64% in terms of OI change. Motilal Oswal yet again features on that list, and so does Nippon Life, continuing to be one of the key gainers of mutual fund inflow. In terms of open interest losers also, you've seen Bosch being one of the key ones where shorts are being covered, a big acquisition by the company on Friday and so on Wednesday last week, and a lot of discussion today on this particular counter too. And Ashok Leyland was the other one. But overall, continue to monitor the first hour definitely of the session and where could we stabilize. But a short covering could be something to watch out for today.
Okay, short covering is what one can hope for if one looks at the events of the last 24 hours or so just as a hurdle in what could continue to be at least a better situation than the pre-ceasefire space. Saurabh Mukherjee joining us this morning. He's founder and chief investment officer at Marcellus. Mihir Vora, CIO of Trust Mutual Fund, joining us this morning as well. Welcome to both of you and a very good morning to you. Saurabh, I'm going to start with your take of how you see this new announcement of a blockade, because this is front and center, right? What does it mean for nations like India, oil importing, who were managing to get some shipments through?
Yeah, I guess Trump is upping the stakes. I think he's telling India, China, the whole world that you now have to work with Iran and figure out a way to get Iran to surrender. So it's in poker terms, he's ramped up the stakes, doubled his bet. I think from a market perspective, we just watch the oil price. My reckoning is Brent will move towards 110, and if Brent moves towards 110, we'll give up the gains of last week. That I think is reasonably obvious that sequence follows, that oil goes up and they give up the gains of last week. The bigger question is, how does this impasse get resolved? Can the rest of the world cut a deal between Iran and America, which suits America? As we speak, you can see Brent crawling towards 110. So my reading is that we're back to the troubled situation where we were before the ceasefire, and now I think China becomes a key actor here. How the Chinese play their cards, because China will now get hurt because they were getting their oil supplies through by cutting a deal with the Iranians. How China responds to this blockade over the next 3-4 days, I think, would be critical to the fortunes of the rest of the world.
Well put. Mihir, sort of morning, and Mihir, I want to come to you because at least because shots haven't been fired, missiles haven't been launched as of yet, there seems to be a little bit of comfort for the markets relative to what we saw when there was so much violence, right? And so the threat of violence exists, but we've not actually devolved yet. So do you think that till that time there will be a sense of cautious optimism?
I'd say there'll be a sense of cautiousness. I wouldn't say optimism, because this is definitely not good news. But the situation is not very clear to me, frankly speaking, when they talk about blockade. What does it mean? Because in some of the reports I read, it meant that Trump won't allow ships which are paying something to the Iranian regime for safe passage. Those kind of things won't be allowed. But as far as I remember, countries like India, China, Pakistan already had a deal with Iran where our ships were getting safe passage. So I'm not clear whether those ships will be covered under this treaty. And to some extent, you're right that the shots have not been fired and the ceasefire seems to be holding so far. And it's also reflecting to some extent in the oil prices. So while oil is up about 7-8%, it's reacted from the intraday peaks that we saw early in the morning, which means there is still some hope that maybe this is the first round of negotiations, and hopefully talks will continue, and the ceasefire for the 2 weeks will hold.
Here, good morning. And I remember the conversation that we had on the Editor's Cut show, wherein you mentioned that the outcomes of a lot of the variables are not known, and therefore it becomes difficult to determine what happens or what becomes a good level, because this seems to be different than the past. In some sense, is this the day one of the new order of the conflict, and therefore is it hazardous to call whether a 500 or 1,000 point fall on the markets merit a look in? Because we do not know what happens next. I think Saurabh made a good point too. China now becomes a really important actor in the scheme of things. Is it prudent to not be looking for buying the dips?
Absolutely. I wouldn't do anything in a panic either ways. I would be buying in a euphoria just because there's some announcement, and I would be selling in a panic because things are still fluid, and the pain is going to be felt all over the world, whether the US likes it or not. The Brent prices and WTI prices do reflect in the gas station prices in the US also. And with November midterm elections coming in, I'm sure the Republicans are not liking the way things are going. And the longer this drags on, the worse it is for everybody. So that's one of the key hopes, that nobody wants this to last beyond a point. And hardlining and negotiations are fine, but ultimately we need to find a solution sooner rather than later, because it's going to get impacted in a host of supply chain issues, not only oil and gas, but things like helium, sulfur, where again we are seeing announcements of shortages, etc. So I think we are in this, as I to repeat, I don't think it's the timing that matters here or levels that matter. It's just the length of the uncertainty that is going to matter.
The question is, how do you navigate the situation right now? Saurabh, is it time to start looking at I would say good buys at decent valuations through all of this? Because investors who did that in the worst period of this 5-week war have found themselves, at least last week, feeling pretty good about their choices.
To give you my limited understanding basis what I read on the BBC and the CNN websites about the blockade, from what I understand, there's 3 things Trump has done which are quite novel. He's saying no ships can go in either. So if, say, you are UAE and you are getting essential supplies in, even that becomes problematic, because no ships can go into Hormuz either. Secondly, he's saying all countries, including countries which had been able to cut deals with Iran for oil and gas, will stop getting oil and gas because it's a total blockade. Right. So the second thing, and third thing he's saying is, if other countries, and specifically he's mentioned China, supply arms to Iran, he will impose 50% tariffs on them. So he's ramped up the ante. And my reading of why he's doing this, from what I can see of the situation, is the Americans are fatigued of the cost of fighting, right? He made a good point. They are a democracy as well. And there was a lot of kharcha going on as they were blasting away at Iran. So they want to stop the spend, blockade the Middle East, and it might be a multi-month blockade, because they want to squeeze the whole world, including China, India, and the Middle East.
Saurabh, I just on this, if you pull up the US CENTCOM statement, that's the Central Command. I know what Trump tweeted, but sometimes the guys who are going to do it, what they say is important. They are talking about this being enforced against vessels of all nations entering or departing the Strait of Hormuz and going to Iranian ports. It's Iranian ports and coastal areas, including all Iranian ports on the Arabian Gulf and Gulf of Oman. So going back to your own example of, say, a ship going out of the UAE, that is not subject to the American blockade. It might still be subject to the Iranian blockade.
Right. So that could well be true. And maybe that, if that's the case, then the UAE and Saudi will not be putting pressure on Iran. It'll be just other countries like India and China who jump on the Iranians and say, let's cut a deal here. So now let's move up one step. What America is doing is they're saying, we will not do that much kharcha on bombing you now. We will just get our aircraft carriers and our frigates to destroyers to block Hormuz and impose costs on the rest of the world, rather than imposing costs on us Americans, right? So that's how he's changing the onus. And thus my reading is he's setting himself up for a extended blockade here, where the costs are less. And remember, America is a net exporter of oil and gas. They have they have 70 years of gas reserves, and courtesy their conquest of Venezuela, they now have formidable oil reserves as well. So whilst the American public does get hit, as Mary was saying, net on a GDP basis, they are less badly off than India and China from this blockade. So now let's think of investment implications. I think back home in India, we continue to do what we've been doing over the last few months, which is try to use pharma stocks as one way to buffer ourselves from the pain, the pharma and the pharma supply chain. The currency aspect, I'm sure, will come into play. The RBI's restrictions on banks, I think, gradually wear off over the course of the week or so. I think the rupee will come under pressure thereafter. The second piece is IT looks to be a safe haven in the context of everything that's playing out. And the third piece is we continue loading up on markets in Europe and America, on defense and aerospace companies, on the tech companies in the Western world and in Taiwan, because we've seen over the last 2 months that the tech piece is far less exposed to the oil price volatility. So those are the three ways for us to deal with what is a very tricky situation.
So the more things change, the more they stay the same. Effectively, this is a siege that is underway, and this is pretty much how military action used to be taken even 200 years back. But having said that, Mihir, what are your strategies in that you're talking about, and Saurabh is effectively talking about beaten down sectors where there is relative margin of safety, or he's talking about products that are non-negotiable consumables. You cannot not consume medicines, and so therefore this seems to be a more defensive strategy. Are you also taking that up?
Yes, and a bit of more cash than usual. That's the strategy going over the last few weeks, I would say. But these are frankly tactical moves. I don't think a huge overrate on pharma or a huge overrate on IT is a structural call. It's more of a tactical sort of a hiding place. As and when things recover, I think the sharpest recoveries will be in the domestic cyclicals, will be in the usual India stories. And so that's what we are positioning for. So we're not going overboard on pharma and IT while we have increased exposure. We'd rather keep cash and some dry powder so that we can take advantage of any sharp dips, etc.
What is the extent of cash, Mihir? You said some more cash than usual. What is the extent of cash you think would be apt for this situation right now?
So normally we keep about 3 to 5% cash. This time around we are closer to 8-9%.
Wow. Okay. The last point, and Mihir, this one is to you, is that there's a lot of talk about how between now and the time New York opens, there is about 12, 13 hours. And who knows, there might be another post about how there is a new regime, or this is looking so good that, okay, we've found a resolution, etc. Is that therefore the new normal, that we live on the markets tweet by tweet, truth social post by truth social post?
Absolutely. And I think the global markets are getting used to this. As I mentioned in the beginning, while oil prices are up, they are not like up as they should be in case there was a complete, panic mode. So the markets are not in panic mode. Markets are kind of beginning to look through the posturing. And I think it's only a matter of time. I think the markets are expecting that it's only a matter of time before this thing folds up because the pain is creeping up into various parts of the system. And while you might say that the US economy is more resilient than others, but there is always the global situation to take care of. There will be international pressure, and US will increasingly find itself isolated in its approach, which is not what the American public wants. It's very clear from the actions in the recent weeks. So I think we should be seeing some kind of a resolution sooner rather than later.
Okay. Well, great having both of you. Some very valid points. Thank you so much for coming in. I love the point about the levels. I love the point about China being the new actor as well. So a lot of interesting things. Thank you, both of you. All right. Well, we got some pretty heavy duty voices right at the start of the show. Just sets the benchmark for what we'll do during the course of the show as well. A quick trade setup really of what might be the course of the day, right? To my mind, war is back to its pre-ceasefire ambiguity, and frankly, you can't contest that this is ambiguous. You may have a point of view that, this will not be as bad as the past, or it could be worse, but you do not know, and therefore there is pre-ceasefire ambiguity in place, and a path to a permanent settlement, possibly as less clear as it has been at any point of time since the conflict began. Again, this may change in 12 hours, it may change in whatever the next 24, 36 hours. Let's wait and watch. And which is why it becomes difficult to call support levels on the markets on day one of the new ambiguity. Hopefully it is not too long lived, but for now, that is the template that you probably play with, and you expect all sensitives to react very, very negatively. I mean, that is the most obvious one. The other question is, there are a lot of stocks and sectors which now have positive news flow. So day one of the new ambiguity, do they not react positively, or do they say, hey, we've seen this tape play out before, now let's get back to business. Maybe you don't give a 10% positive reaction to a really strong news flow, you give a 4%, but you give positive reaction. So I think that will be interesting to see at 9:15. Is this time day one of the new ambiguity different than day one of the old? Remains to be seen.
I think beyond the point, people also get used to things going back and forth. At no point am I saying that all is well.
Yeah.
There's not an all is well kind of a situation. It's about just reading between the lines at this point, I suppose, as long as the bombing doesn't start again.
Yeah, exactly.
Because that will be difficult. That's what the Wall Street Journal is reporting, that they are learning from sources that Trump and his team looking at the opportunity or the option of limited strikes again in Iran, because then that starts the whole process again and the whole cycle again. So we'll have to wait and see where that goes. Having said that, I mean, let's just focus on what's happening domestically, because when all of the dust settles, which it will at some point, this will become important, right? How companies are performing, and there's so many stocks in news this morning. I'm starting off with M&M on my watch list. Healthy production and sales numbers have come in for March, which is on track on what their guidance has been. So here are the numbers. Total sales is at 1 lakh units, up 22.3% for the year. Total production is 1.03 lakh units, which is up about 13%. Total exports have grown 7%. The 3XO petrol production has increased from 6,963 units to 8,369 units, and the electric origin SUV production has gone up almost 3x, increased to 6,604 versus 2,963. So that's a thumbs up on their updates. Remember, all of the stocks we'll talk about today is ensuring that is with the caveat that what the market mood is to be seen, and the GIFT Nifty is still showing you a cut of nearly 350 points. Jyoti CNC Automation is the other one I'm looking at. That's a thumbs down. The French authorities have initiated a probe into a subsidiary of the company called Huron Grafenstaden SAS over dual-use machinery export controls, and bank accounts of this subsidiary have been seized worth 4 million euros. So this is going to be a bit of a negative for the stock. Eternal is the other stock I'm looking at. Goldman Sachs has a report out. They have maintained a buy, though they have cut the target price from 380 to 350. But look at the commentary from Goldman Sachs on the stock. They say they believe the total addressable market concerns for Blinkit may be overdone. They expect Blinkit's share gain versus Swiggy to continue, believe there are enough levers to offset potential headwinds, and see positive risk reward with 74% upside in a bull case versus 18% downside in a bear case. So different commentary coming in on Eternal compared to what we've seen in the last few days, which is why I thought it was noteworthy.
It certainly is. I have a couple of order wins on my list, and first there is, of course, Enviro Infra Engineers. It's a 587 crore EPC order, and this is for a sewer network project in Maharashtra under the Swachh Bharat Mission 2.0. So generally you have reactions to these kind of updates, but remember that the overall mood is a little tentative, shall we say, at the start today. GHV Infra Projects is a second counter, and this is also a significant order win, 1,250 crore rupees. This is also an EPC contract for the development of expressway connectors from Jalna to Nanded in Maharashtra. And finally, I've taken a brokerage note. This is Goldman Sachs on Solar Industries. They maintained a buy with a target price of 18,900. That's quite the upside that is implied in that target price. They're saying that rising explosive prices in India is in line with the positive view on the stock. There is evidence of pass-through of elevated ammonium nitrate prices to the end users as well, and there is a good possibility of
the company adding on the higher ammonium nitrate prices to end users in other non-defense segments as well, including the international division. So the positive note coming through for solar industries.
Two observations or two sets of stocks from mine, and third is an observation wherein I would want both my colleagues to come in as well. The first one is Chennai Petro, MRPL. You look at standalone refiners, and there is an implication for OMCs too here maybe. But what's happened is that the government has increased the export duty on fuel exports very, very sharply. What this effectively does is cap the GRMs for independent refiners, so the likes of MRPL and Chennai Petro. I would reckon that this would lead to refiners' margins getting impacted, and therefore keep an eye out for these as well. SEZ refineries, there has been an exemption of the export tax as per reports, and therefore maybe this doesn't hurt Reliance as much as the others, but keep an eye out for that. There is also and we'll wait for Somit to come in and talk about these in detail, but there's also a belief in some quarters that this very sharp hike in windfall tax might actually be positive for HPCL. But remember, crude prices going up is effectively a negative, and with the longs being there in the system or the momentum being there in the stocks all of last week, one would reckon that OMCs would definitely react negatively. So keep an eye out for these. Adani Energy Q4 business update with the standard disclaimers, of course, that the Adani Group owns Adani Energy as well as NDTV, where you're watching this transmission, if you will. Their Q4 update seemed fairly strong operationally. Transmission network has gone up to 27,949 circuit kilometers. They also commissioned their second HVDC project in Mumbai, which adds about 1,000 megawatt capacity to support peak demand and grid reliability, which is very great news for us Mumbaikars, I must say, per se. And the system availability remained very strong at 99.77 in Q4, 99.70 for the full year, which is actually very, very impressive. The Mumbai distribution losses improved to 4.2%, which is also a positive. And smart metering, they have crossed a major milestone. They crossed 1 crore cumulative installations, which effectively beating the guidance, and which is a positive as well. And of course, there were other positives: 60,000 crore order book, ongoing capex plans of 16 to 18,000 crores at FY26, and all of that. So, well, seems positive. Let's see if the stock were to react on a day like this. So point is 2. Point number 3, guys, and maybe you guys spoke about it, maybe you didn't, but what Delhi has done to two-wheeler and three-wheeler registrations, petrol registrations for two-wheelers and three-wheelers banned from April 1st, 2028, if I'm not wrong. Now, there are two schools of thought here. One is that does this become a template for the rest of the states to try and bring down pollution? But 2, can this experiment even sustain? Because Delhi, we know, is small, and people commuting in Delhi could go to NCR, get the vehicles registered, and then very well continue and not having to bother about it. I don't know which way it shapes up, but it's a very interesting proposal.
Yeah.
I
would say the latter is likely to work out, because various versions of this has been tried in the past with Delhi as well, and this is among the many attempts that the city makes to deal with its really catastrophical pollution that it faces every year. I don't know about how much of impact right now, how serious it will be.
Has it become a template?
I don't think so, because so one, I think Delhi's problems are to do with multiple things. It's not just vehicular pollution. It is to do with stubble burning. It's to do with industrial clusters very close to that region, and the way that Delhi is, right, because of the way that it's constructed. And therefore, that's one. 2, in Pune, for example, and certain other cities, you have significantly more two-wheeler applying, and you don't have the same problem. Yes, there is more pollution than there was 10 years back. So you don't have the same problem, and so I don't think this template can follow.
Keep an eye out for Royal Enfield, Bajaj Auto, and Hero for though. I mean, in case this eventually, in case the market doesn't like it, you might see a bit of a reaction here. The jury is out, really. Just tell us what you think about whether this becomes a template and how big of a reaction could this be. But keep an eye out for those stocks. Okay. More news and updates.
There is a significant update, actually, and it comes through from the banking space. And sources are telling NDTV Profit, this is an exclusive piece of information that has been picked up, that banks have requested the Reserve Bank of India to approve a moratorium on loan repayments for MSMEs. And this is amidst this entire geopolitical crisis that we're currently witnessing, because there's an anticipation that some of these MSMEs could be hit very hard. And this is along the lines of the moratorium that you saw during the COVID-19 period. Piyush Shukla joining in to tell you why this was asked for and where it has reached right now. Piyush, morning.
Good morning. Yeah, that's right. We are hearing from our sources that banks have sought the RBI's relief in terms of MSME loan repayments. They have sought a moratorium like they extended during COVID period, saying that the West Asia conflict can have severe impact on MSMEs' revenues, thereby hitting their profitability and also impacting their repayment capacity. Banks have actually represented this request to the RBI via the Indian Banking Association, which is an industry lobby for banks. Bankers say that during COVID, when we were expecting higher losses, when moratorium ended, we did not actually see that sort of a spike happening in the loans where moratorium was given. So, and to its credit, the RBI has already extended certain export credit relief measures till June 30. We understand that banks have now reached out to the RBI, and RBI is assessing this request and will likely take a call on this in very soon going ahead. Banks' outstanding MSME loans stand at around 67.6 lakh crore rupees, which is a significant amount, up 15% year on year. This is as on December. And the delinquencies are also low. The 90 to 720 days DPD levels are at 1.87%, which is the lowest in last 5 years. So MSMEs are doing well, and bankers feel that they should be given some relief considering the enormity of this current conflict. Back to you.
That's an important one, Piyush, and clearly, even if the war ends today, which it's not, the impact will be seen and continue to be seen. But another important development of the weekend, and Piyush, I want you to stay with us and just tell us about this as well. Important guidelines, or actually proposals put out by the RBI for changes for non-banking financial companies with assets over 1 lakh crore rupees. They may now be placed in the strict upper layer list, which brings tougher rules on capital and governance. Tata Sons is also present in the list and remember has applied for deregistration. Give us some context to the story.
Sure, that's right. The RBI on Friday came out with much anticipated update on how upper layer NBFCs will be categorized. The RBI has clearly mentioned that NBFCs which have assets under management of over 1 lakh crore will be placed under the upper layer list. Earlier, the RBI used to place NBFCs under upper layer based on a certain rating criteria, on qualitative, quantitative. There were certain parameters based on which they used to place NBFCs in the upper layer category. Apart from that, another major change that the RBI has proposed is that bringing government-owned NBFCs under the upper layer category. So with this, we hear that large PSU NBFCs like HUDCO, IREDA, IRFC, PFC, REC, these NBFCs will likely come under the upper layer category. Some of the interesting to know that some of the existing upper layer NBFCs like Poonawalla Housing Finance or Samman Capital, these two NBFCs actually don't really have 1 lakh crore rupees of AUM. So it's interesting to see how this pans out. And like you mentioned, Tamanna, with regard to Tata Sons, people were expecting some clarity because they had applied for deregistration a year back, and the RBI is yet to take a call. The September end deadline has long passed. So people are awaiting clarity, Tamanna, on the listing of Tata Sons and RBI's decision whether it will allow it to deregister as a upper layer NBFC. Back to you.
All right. Thanks so much, Piyush, for both of those updates. Sanjay Agarwal, Senior Director at CareEdge Ratings, joining us this morning. Sanjay, very good morning to you. And I just want to get your view on both. I want to get your view on both those stories. But let me start with the NBFC, upper layer NBFC story, right? So this is, I think, not yet giving you complete closure if you're looking at the Tata Group very closely and trying to understand what is going to pan out. But maybe you have a sense that will give us more clarity. How are you reading this latest update?
Good morning, everybody. Thank you for having us on the channel. First, if we do not speak on individual names, so we do not talk on Tata Sons, etc.
Sure.
But if you look at the overall structure, what RBI has done is they've taken about 15, 17 entities, which consist about 78 to 79% of the NBFC asset class. So they've taken that Pareto principle of having 80% within a very close control. They've also given indication to the market on how they will treat companies as upper layer, because once an NBFC is upper layer, then in terms of regulation, compliance, processes, etc., they have to be changed. So companies have a clarity and a pathway on how they will be treated once the asset class reaches a 1 lakh crore asset mark. So there is a lot of clarity, and that helps everybody in the system. It's not keeping you guessing on how things are. That's from the NBFC perspective. When you look from the RBI perspective, when you have 78, 79% under close watch, it gives the regulator a lot of confidence. If you see similarly, the middle layer along with the upper layer, they consist about say 500 odd entities, which is about 5% of the entire NBFC asset size, which is about more than 10,000 crores. So the 5% of the NBFCs consist about 95 to 97% of the asset class of NBFC. So the asset under AUM about 95-97% is under the watch of RBI, of which 78 to 79% is close watch. And the market also has a very clear sort of guidelines or pathway on how they will be treated.
Got it. Okay. So the implications are for greater regulatory oversight and tighter controls on a larger number of NBFCs. Fair?
It is greater oversight on a larger base of AUM rather than the number of NBFCs.
Sure.
So it's like you reduce the number of NBFCs under your guidance, under your strict control, but the AUM covered should be much larger.
Sure. Okay. So that's positive for everybody involved. Okay. So that's the first story. Sanjay, the second story has to do with exclusive source-based information my colleague Piyush has picked up, which has to do with a request or an application to the Reserve Bank of India that has gone through from the Indian banks. That is to say that for MSMEs where there seems to be a little bit of uncertainty and a little bit of stress, they're looking for moratoriums like you saw during COVID-19. Do you think that and I'm not asking you to speculate, but I'm saying that is this a move that you think will be necessary given that you have stress in a few pockets and the geopolitical stress is not going anywhere?
Yeah, I think Piyush has brought out a very right point, the exclusive story that he has. If you see an MSME NPAs were about 15 to 18%, say about 5 to 7 years back, pre-COVID, etc. Extremely high level of MSME NPAs were there in the system. Over the years, with various measures of the government, including the digital initiatives, the various measures which has happened, the NPA ratios have come down really large, right? Now it's less than 1.8% of the overall MSME book. So the asset class is doing very well. This also gives a lot of confidence to the bankers and the other players in the ecosystem to support this asset class and take it forward, which we also seen that if you see the overall exposure of banking system to industries, MSME exposure has gone by, let's say, 25 to 30% overall, whereas the overall industry exposure has gone up by less than 7 to 8% in the last 5 to 7 years. So there's a lot of confidence in the system. The system is doing good, and it has done a lot of repair, which has also helped everybody. Even if you see from the profitability, a very large part of the banking profitability pool comes from MSME, because the largest asset class, which is housing, is very competitive. So not much of profits can be made there. Whereas MSMEs do give a lot of profits, and hence the system does need a very robust MSME financing ecosystem. Having said that, what we have seen in the last 1 year, post the Trump tariff on MSME exports, there was certain level of weaknesses which were noticed. Now, the peculiar part of MSMEs is that the company under, let's say, the firm which is exporting is not the only one which is affected, right? It also depends on who is supplying to them, what are the logistics players, what are the other vendors. The entire ecosystem gets impacted, and almost the entire ecosystem is an MSME ecosystem.
Right.
To that extent, we do see that some bit of pockets of challenges emerging out of various places.
Yeah.
Earlier due to the Trump tariff and even this one. And the play out will happen in 6 to 12 months. We will not see the results immediately. So Q4 results or Q1 results of next year will not exactly reflect everything. So we need some headway and some bit of basis in which the sector can be supported and continued on its growth path.
Yeah. important. And so therefore there is need for a relief, and hopefully this is something that is not required for a long period of time. Thanks so much for taking the time this morning. Pleasure speaking with you as always.
Thank you very much.
All right, I do want to draw your attention to a Goldman Sachs note, and this has to do with domestic flows, and perhaps Neeraj has a view on this as well, but let me take you through what they are saying in that note first. You know about the AMFI data that came through last week. We told you about it. Inflows into equity mutual funds jumping as much as 49% on a month-on-month basis in March, coming in at as much as $4.3 billion. Now, and that's over 40,000 crore rupees. And now across schemes and categories, you had flexi caps followed by the SMID category. Funds have received their largest net inflows in the year. SIP inflows have also increased to fresh highs at $3.4 billion or over 30,000 crore rupees. And cash holdings in equity mutual funds have also increased as per preliminary estimates to over $15 billion. Based on a sample of 200 funds, which is as much as $200 billion of assets under management, cash allocations have risen to around 4.3% of AUM. You heard Mihir Vora talk about the fact that his schemes will have slightly more cash than usual. And domestic institutions have bought $31 billion of equities in the last over 3 months and in the year-to-date period, and $19 billion since the Gulf conflict has begun. The highest cash, the higher cash levels suggest that domestic funds could continue to support equities near term. Two schools of thought, and this is actually pervading in social media conversations, is that mutual funds should not be buying at every level because they're effectively providing an exit at every level. But on the other hand, you have strong flows that have come through despite all of those conversations, saying mutual fund investors are suckers for keeping on pumping money into this market.
I would, if you were a fund manager in a mutual fund house, I would want to know how differently would you do this, because mutual funds are not paid to take cash calls. Yes, you could take some cash and keep it at some time, and if you've successfully done that as the way PPFAS has done, then sure. But otherwise, why would a mutual fund manager want to take a cash call risk, wherein the past instances have shown that market can bounce back really fast, and then you will be looking like a fool for not quite deploying at the lower levels. So, well, I think to each their own.
I think the worry is the downside, Neeraj, at this point.
I'm agreeing, Alex, but again, that's what the point. See, in some sense, and maybe it's easier for me to make that call as we've done the whole of last month, that there is no need to buy right now because there is uncertainty here. But when you're deploying other people's money, and when the mandate of your fund, wherein you put out that mandate document that we're not going to take cash calls, etc., and stuff like that, how do you move away from that?
Okay, but the bottom line is that there is ammo and there is dry powder for mutual funds to deploy.
What do you think about it?
I think it's par for the course. There is uncertainty, and it's not like you moved from 5% to 19% as Parag Parikh has done, right? You still have 7-8%, and the net or the average number is 4.5%, 5%. But it still means that your dry powder exists. So let's see how that pans out. You will see support every time there is a sharp cut. We have to slip into a very quick break. We'll talk about individual stocks on the other side, so do stay tuned.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
कुछ खास होने वाला है।
Welcome back. You're watching India Market Open. You're set for a tough start to the week, but I think the markets are a little battle hardened by now with what they've been seeing over the last 5 weeks. Or 6 weeks running, really. 357 points down on the Nifty. The reason you're saying this is that the Islamabad peace talks failed, and after that, Trump said, I'm going to add a blockade to what you are doing in the Strait of Hormuz to Iran. So, as one of our experts this morning explained, the Strait of Hormuz is blocked by the Iranians, and the area outside is blocked by now the Americans. And it will start actually in a few hours from now, about late evening India time. What does it mean for the markets? Kush Bora and Parag Thakkar with us in the studios. Very good morning to both of you. Parag bhai, do you see a complete reversal of all of the gains of last week, or a bit of a hiccup when we open?
No, I would say a bit of a hiccup because you know, now people have understood that TECO thing, right? So so now people will not panic so much. Of course, the news is bad. Strait of Hormuz getting blocked is bad, very, very bad news. Not only from oil price, Brent at above $101 from that perspective, but availability of LPG and oil is very, very important, and that so there are some clouds around it. But I would say that now market will realize that these things can change very fast, and so it is not a complete panic.
Is the expectation that before US markets open, I'm just addressing what all of you are seeing on your phones. Okay, all of those WhatsApp forwards on your phones, I think we should address it. None of us are saying it is true, we don't know, but the expectation is that there will be a pump trade before the US markets open.
Pump trade or Trump trade?
A Trump pump trade. There's a taco and there's a Trump pump trade now before US markets open, where there will be a softening of stance, giving enough reasons for the US markets to cheer. That's just basis a pattern that has been seen.
Yeah, so based on pattern, definitely one can say that. Based on pattern, definitely one can say that. But anyway, see, we are sitting on a very good dry powder because as I said, you know, we manage it very dynamically, and so whenever market gets a little bit more positive, we tend to raise cash. So we are sitting on a good dry powder.
So if you define that at this moment, because we were having this conversation, Parag bhai, for the industry, and those funds that manage about $200 billion worth of assets under management, Goldman Sachs measuring that at about 4.45%.
So for a very large mutual fund, like as Neeraj was rightly pointing out, I was listening to your conversation, that for a very large mutual fund, it is very difficult to raise so much of cash.
Yeah.
For a PMS like me, which is a small size PMS, I can raise cash. So so I have that liberty, right? Because but for a very large mutual fund of the size of, say, ICICI Pru MC or Nippon, it becomes very difficult to raise a lot of cash, even if they want to. And see, you cannot suddenly say that I don't like this stock just because crude is at 101 today. Because crude is not going to remain at above 100 or 120 forever. Right? So, I am at about 10% cash level.
Above
10% cash level. That's what I told also, right? When I was at 5, I told you that I will raise it to 9, 10.
And so you've used the last 6-7 trading sessions to...
Yeah, whatever really we got.
Okay. So what is the strategy therefore? If in the nearer term, Kush, at the start of the week, if you had 6 out of 7 sessions that have been positive and you've gained the most that you've gained in a week since Feb of 2021, do you take money off the table?
I don't think you'll get that opportunity, Alex, with that 350, 400 point gap down, right? I would actually suggest perhaps going long is a good idea. From from an aggressive trade, well hedged kind of a position. But I like the word Tamanna used, battle hardened, right? हम तो इस game में है भी नहीं, and we're still battle hardened.
No, but it's you've completely, not to take away at all in any flippant sense from the people who are at the center with bombs flying over their head, but there is a psyops to war. and everyone, because of the way the world is, faces it, right? You get minute by minute updates of what's happening in every part. So from that sense, mentally battle hardened is what I mean.
Absolutely agree. No, in fact, this is what even the retail participants, at least the ones I speak to, have been saying कि अब ठीक है अगर इतना नीचे आया है and the geopolitical situation itself doesn't worsen, I don't think markets are going to go out and test the recent lows that they did, right? So just to talk data, see, runaway rally was anyway unexpected until everything was well in the world, which it clearly turned out it wasn't, right? So some some derivatives data that we spoke of last week was indicating that there will be some resistances at slightly higher levels, right? Call option writing, PCR, and the open interest positions that we've discussed. But the data was starting to shift on Friday. Look at 3 key points. FIIs turned buyers in the cash segment after 27 sessions, first since late Feb. FII index positioning was long at about 22%, a recent high. And more importantly, Nifty from a technical standpoint, Nifty crossed and closed above the 24,000 mark. So things were starting to turn. And if you've seen, even before this breakout came, even before that ceasefire move, we were seeing buying interest at lower levels. There is a good possibility that if we hold the 30 or the first 60 minutes of lows, there's a strong possibility of an intraday rebound. And with this 350 point kind of a gap down, we'll be opening squarely within the 23,500, 23,700 support zone. Positionally, 22 DMA at 23,200 remains a strong support zone. So I will look for long opportunities. This is not preemptive though, but from an intraday perspective, with the opening lows as my stop loss, if Nifty shows any kind of rebound, after the first 30 to 60 minutes of opening.
And which cohort should you look at? Let's talk about one that has been under a little bit of pressure, and we've got the FMCG sector that we're talking about. Of course, in a couple of minutes, we'll go to Amnish Agarwal, Director of Institutional Research at PL Capital, who's joining us to make sense of this. But before we do, let me go across to Mahima to talk about this cohort of stocks that has been under pressure, but also to put in perspective what the trends are heading into the rest of 2026. Mahima?
Right, so Alex, in the last 3 years, what we've seen is, negative returns on the Nifty FMCG as a whole, right? And right now, if we take a look at the valuations of the index and the valuation of all the counters on the Nifty FMCG, all of them are trading below its 5-year average. Let's take a look at what these stocks have done in the last, 3 odd years since 2024. These are the counters, this is of course the Nifty FMCG return in the past 4 years, where only 2023 we saw a positive return of 29%. But since then, we're seeing negative returns, and year to date, we've seen a downtick of around 14% on the Nifty FMCG. In terms of stock specific performance, top 5 losers, ITC has lost the most ground on the back of a lot of updates coming in with regards to taxes, down 32%, plus raw material also impacting the overall performance. Imami is the second one with a loss of around 26% followed by Colgate, Dabur and United Breweries. All in that range of 19 to 32%. But counters that have managed to, give positive returns the 5 years include Radico Khaitan, which is a top gainer on the Nifty 50 in the past 3 odd years, which has gained around 64%, followed by Marico at 36%, United Spirits at 14%, and Britannia just at 3 odd %. With regards to, the valuations, all of these counters on the Nifty FMCG are right now trading below their 5-year averages. If we take a look at the Nifty FMCG, also the current valuations are at 34 times versus the 5-year average of 44 times. But still, if we take a look at valuations as a whole, even at date, they're still not looking very cheap, but still cheaper than what the 5-year average is standing at. For example, Tata Consumer 1 year forward is looking at 52 times, Varun Beverages at 40 times, Britannia at 45, and Marico at 46 times. Overall, in terms of what has hampered the growth in the recent times, considering that everything is happening geopolitically and globally as well, demand has slowed down because of global unrest. There is also raw material price inflation because of the West Asia conflict, and below normal monsoon. This is something that had come last week as well as last week, and this will impact demand and raw material prices going forward as well. But in terms of what can lead to recovery in FMCG, I think 3 major points. First one is urban demand and volume stabilization, and structural stabilization is what we are looking at, ease in inflation, and thirdly, premiumization leading to structural growth. Stocks right now with highest return potential as per Bloomberg for FMCG, Imami tops that chart with a return potential of 45%, Varun Beverages at 27%, both Varun Beverages and Radico Khaitan at 27%, and GCPL and Dabur at 24%. So this is the overall view of what you can expect going forward and what has impacted FMCG in the past.
Okay, let's get in. Manima, thanks for that. Let's get in Amnish Agarwal, Director of Institutional Research at PL Capital. Amnish, thanks so much for joining in. And thanks for waiting by while we were just kind of addressing some of the points as well. Is this a valuation level or a cycle where you would believe that there is comfort in looking at investing into some of the staples or consumption names?
Yeah, I Neeraj. If you look at, say, most of these stocks, then you will realize that not everyone, but many of them are trading at, say, last 5, not even 5, maybe 10 years kind of a low P multiple. And why I'm saying I'm not, you can say, looking at 5 because we had COVID in 2020, and so 21 numbers and all, they were actually skewed, and so were the market valuations. But having said that, if you look at the recent valuations and all, I think the stocks are definitely today trading at where they used to trade at, and because there's a general slowdown in the demand which has happened over the years, and the recent war in the Middle East has added to the uncertainty with regards to both the growth outlook as well as the margin pressure. So yes, the valuations of many of these stocks, they look appealing and lower than what we have seen in the past 5 years, 10 years. But definitely, I think taking a very long-term averages won't make sense. But at the same time, yes, purely from, you can say, they might give you, I would say, reasonable trade at the present juncture. Notwithstanding what happens to monsoons, how the weather patterns move, and what's going to happen on the raw material front, because that is something which is very uncertain at this point of time and will have consequences not only in the near term but also in the medium term, even if the war stops over the next, say, year.
Yeah.
Few days.
Amnish, just hi, good morning. Tamanna here. Just want to come to that point of FMCG stocks giving you a reasonable trade, and that's actually the premise of the entire piece that we've done. In relative terms, if you want to look at a space where demand is not as elastic as some others, what would be your top picks here in terms of performance, and which are the companies that you're looking at very closely ahead of Q4 where you expect the numbers to be good?
You see, actually there is very little relevance of Q4 numbers at this point of time.
Okay.
Because what is going to happen in the coming few quarters is important more from the viewpoint, and the markets always are forward looking. They are not looking, you can say, at what has happened in 4Q. The markets will be looking what happens to monsoons couple of months down the line, what happens to inflation, and what happens to the critical input costs. So I think that is where the lot of uncertainty which rests. And as I said, many of these stocks today, they are trading at valuations which are below the averages. And I think practically, if you look from that standpoint, I think lot of stocks will fall into that. But in the staple side in particular, which is FMCG, we have been positive on, you can say, very select names, and we have been positive on Britannia and Marico. So these are the two names which we have been very constructive about. In addition to it, one might look at, say, Nestle at the current levels. But yes, the valuations there are not that comforting. So very, I would say, limited stock to choose in the pure FMCG pack.
On that note, thanks so much for joining us this morning. Pleasure speaking with you as always. All right, Parag bhai, I want to ask you the same question that effectively we asked Amnish, which is there is margin of safety, right? These valuations are not challenging. The only question is what kind of impact will they see in FY27?
Yeah. So basically, see, both the challenges. One is rising crude and energy prices and availability of them. And second, because packaging costs have gone up significantly for all of them. And so that kind of grammage reduction or that kind of some efforts to protect margins will be done by every company. But the second is monsoon.
Just a small point here. You had actually in several scenarios for FMCG companies, grammage increasing after GST, right?
Yeah, so that grammage
that room is there.
Yeah, that will reduce now. So I would say that I would completely agree with Nish that there are two challenges, monsoon and crude oil price, and so the packaging cost and all that. I would say that based on the business update, based on the future outlook of copra prices falling, my largest overweight in FMCG is Marico, as I've told. And it is structural buy for me, and I'm not going to sell it just because oil is up or something like that. because Marico, you are very confident that the new drivers of growth offers a huge option value in my view, and some value-added hair oil, which is a key segment, which is 15 to 18% of revenues, is growing at about 20% with very high margins. So Marico is, and we have a fantastic quality of management.
Okay. So, but very quickly before we move, we're already very late. Kush, can we very quickly in a minute and a half take your picks this morning?
Sure. 2 longs, 1 short. Aurobindo Pharma's the weekly pick, 1415, 1480 are your targets. 1285 is where you keep that stop loss. KSB multiple times reiterated, doing fabulously well. 920, 945 targets, revised 865 stop loss. On the short side, Hyundai continue as a sell call. 1760, 1740 are your targets. 1800 is a stop loss. Was triggered on Friday because of the short covering rally, but the volumes were very thin. So the structure still remains bearish on Hyundai.
Okay, so those are the picks this morning, but what are we hearing on the street? Join in to find out all the chatter from the dealing room. Sumit Sarkar with those details. Sumit, it's going to be a tough morning, isn't it?
Yes, definitely a tough morning. 300 points downtick is easily what we are seeing, at least by if we go by the GIFT Nifty. And anyways, market was expected to consolidate in a range of around 23,500 to 24,000 till the ceasefire was supposed to end, and that is the kind of volatility that we will continue to see in this range, that is 23,500 to 24,000. So that is what is expected, at least from the benchmark. But few stocks that dealers have highlighted in trade. Firstly is Emphasis. Now there are some buy flows on the large HNI desk at lower levels, and this is largely because they are indicating that the constant currency growth for Emphasis will be much better compared to what the street has been anticipating. When it comes to Titan, there are some buy flows on the institutional desk, and delivery volumes are also seen on the higher side. For Reliance Industries, there were buy flows on the DI desk. Now, dealers were indicating that an FI was an aggressive seller on this counter, and the selling is largely over when it comes to Reliance Industries, and the stock could bounce from the current level. But given the downtick that we will see in shares, it will be important to see whether there is a recovery or not when it comes to Reliance Industries. For Lend India, there were buy flows on the PMS desk. Some positive news flow is expected here. And lastly, when it comes to IIFL Finance, there are buy flows on the large HNI desk. Dealers are expecting a positive news flow regarding the external tax audit, which got completed last week. So keep an eye out for IIFL Finance as well.
Thanks so much, Amit, for getting us those details. Key stocks that you should keep on your radar. Let's round up the list and talk about the watch list as well, because there are quite a few developments that have come through over the weekend. Let's start with Adani Green, and there have been operational capacity updates that have come through, and they've said that FY26 capacity is up as much as 35% on a year-on-year basis. ONGC Oil India, the upstream oil company, is coming to focus again because crude oil prices have spiked over the weekend. We've talked about the reasons why. Arvind Textile PLI scheme clearance, it's actually a positive for them. You also have Garware High Tech that benefits on account of this. Tata Power and EV auto stocks, New Delhi EV policy draft has come through, and you saw what we were talking about earlier today. Weigh in and tell us what you think will happen here. Himadri Specialty Neogen Chemicals, the government is at the final stage of setting up a scheme to boost lithium processing chain in India. These are stocks that stand to gain. IRFC, Hudco, PFC, REC may enter upper layer NBFC list, and we spoke about the implications of that as well. Enviro Infra engineers as well as Advait Energy have gotten key orders. We spoke about this as well. EPC orders have come through, a couple of very big ones at that. Torrent Pharma has gotten 0 observations in the US FDA check or investigation for their Gujarat plant. Sticking to the pharmaceutical space, Lupin, AstraZeneca Pharma, they've gotten new drug approvals or launches, as the case may be. Everest Industries has gotten a certain amount of money that they will come into on account of a land monetization that they have done. I believe it's about 100 crore or thereabouts. Maruti Suzuki, Bosch, Subros, these are stocks that are in focus on account of Haryana government increasing the minimum wage. This is on the negative side. And fertilizer stocks, China is set to ban sulfuric acid exports at a time when you're seeing significant supply chain disruptions. This is another negative piece of information that comes through for fertilizer companies. So a whole host of stocks. Kush, what stands out on the technicals that you might want to trade here?
Yeah, well, it's typically not a trading stock, but I think Torrent Pharma's giving you a good rebound. this is something that you buy and hold. So that support zone close to that 4,000 mark. I mean, it did slip briefly below that, but other than that, it's holding good ground. So from a positional standpoint, risk-reward ratio very interesting. I would consider Torrent Pharma, as a buy, at these levels. And also, actually, on the short side, I've already mentioned Hyundai, but even Maruti didn't really have a great structure, technically speaking. Volumes, although also on the upside, weren't really as great. So barring maybe M&M, in the big boys, and then you go to the two-wheelers, I think these names could remain under pressure for some time.
Take a look at M&M's updates. Do you think M&M is something to look at, Parag Bhai, if in the auto pack?
In the current context of things, I would not look at it. It is a great company by all means. Business update is also good. But, monsoon getting weaker, so tractor sales might affect. Tractor is still very large portion of their EBIT. And plus crude oil going up, so you don't know, after some time we might need to increase petrol, diesel prices. So that is also, the steel prices have gone up, which will put some pressure on margins. So I would not go into auto OEMs as of now.
Plus the paints prices, all crude derivatives.
Everything is going. So I would say that Bharti Airtel is one business which is actually this time can act like FMCG. In FMCG right now there is a pressure because oil prices are also going up. But in Bharti Airtel there is no such pressure. I think ARPUs will go up when they have to go up. Subscribers are going to consume data as they consume. So this 60,000 crore free cash flow at ARPU of only 259 rupees in India and whatever it is in Africa with 65 crore subscribers, I think that is a huge moat to have in this environment.
By the way, just because we are on the topic of M&M and 9 a.m. has started as well, I know Puneet is waiting. Puneet, I'll come to you in a moment from now. But the CAFE 3 norms are lenient versus the previous draft. At least the draft notification does offer, as per a lot of analysts, near-term relief because the FY28 target is slightly less stringent, and two, the 3-year compliance, there's a 3-year compliance block now, and it allows OEMs to, average out performance over FY28 to FY30. Most people say the relaxation is most positive for Mahindra and Mahindra. May not show today, but that is one more piece of news as far as M&M goes. By the way, just before we go to Puneet, since 9 a.m. The pre-open rates have started coming in, just bring up what the Nifty and the Sensex are doing, what the oil sensitives are doing. So BPHP, IOC might have a bit of an impact simply because of the crude price rise. So you will see all of them come off, keep that in mind. But there's also news as far as refiners go, and therefore you'll probably see Chennai Petro, MRPL and the likes also react negatively. Maybe not as much right now, but the exports and the caps that have been put out there might impact some of these stocks as well. So keep this in mind. And overall, the market might actually start off slightly weaker or will start off weaker. The question only is, do we see some companies standing out? There are a couple of companies on which employees at different corners in those companies have also faced some sexual harassment allegations, and there have been some arrests made to that effect. So you might see some reaction onto those as well. But while we'll wait for the...
You're talking about Anand Rathi.
And I think TCS Nashik also had some issues, so it would be interesting to see if indeed there is some reactions thereof there. Okay, we'll mark the markets too. Puneet's been waiting by. Let me take it across to him. Coforge is in focus on the back of regulatory clearance for Encora acquisition and also approval received for the issue of preference shares. Puneet is here with details. Puneet.
Well, thank you for that. It's definitely a key approval coming in for a big acquisition for Coforge at this point of time. Now, they've highlighted at this point of time that the approval received will help the company go through the next step of procedures for Encora and the likely integration. It will become a $2.5 billion entity as well. So that puts the company to a scale as well. But recently, there have been a couple of key news flows. One has been the Morgan Stanley survey, which highlighted financials as well as retail being impacted because of discretionary spending. And Coforge has a higher share in both of those segments, so could be one of the key aspects to watch. The other thing of the preferential issue is also very interesting. It happened on Friday, the approval came in. It was at 1813 rupees per share. Now, this was, of course, pre-decided before we started to see these unraveling. So this was decided in December of 2025. We saw the unraveling of stock prices in the month of February. So while the committed amount has come in at 1813 rupees per share, stocks hit a low of almost 1008. and has now come to around 1200 odd levels. So see, for anyone who's entered at that determined price is already at a loss of almost 600 rupees per share, and it's almost a big number that's coming in terms of share as well. So something to watch for Coforge going forward. Stock could be under pressure going into the Q4 results as well, but a lot to watch out for the commentary as well as the execution of this particular large transaction over the next few years.
So, Coforge, they're about 0.75% down in the pre-open session. I mean, nothing is really going to matter till the markets don't settle. So, we'll keep giving you the updates of what's happening with these companies, but you have to realize that the next few minutes is going to be quite uncertain one way or the other. Halfway through the pre-open session, we can see clearly that there's going to be a weakness in your key indices as expected. And on those lines, look at Jyoti CNC. It was there on our watch list, and the problem with their subsidiary in Europe, that stock is going to open lower, 20% down right now. Kajaria Ceramics, all of those companies which would be hit by a further blockade of the Strait of Hormuz will be acting up today. Interglobe, almost 6% down. This is, remember, pre-open session, and we're halfway through the pre-open session, so some of these things will settle. Just want to give you a directional idea here of what's happening. SEAT, look at SEAT tires at this point as well. They're also seeing some pain. ICICI Pru looking interesting ahead of their results. They will be announcing today, and I know it's just about a 1.5% pop that we're seeing, but that's looking interesting. Oil India, ONGC as expected, looking good as well. Milan Vaishnav joining us this morning for his view. Milan, a very good morning to you. Let's get your Nifty call first.
Very good morning. Nifty call, as we all know, it's slated to open lower. Now, opening lower is not something that we have something to feel good or bad about. The thing is that the fragility of the ceasefire was anyway known to everyone, and we have risen almost over 1,700 points from the immediate low point that we have witnessed so far. So I think that 23,700, 600 zone is something that Nifty should respect, because from there until 800 points on the downside, there is a huge gap that was created. So I feel that 23,700 is something we should keep an eye on. A violation of that point can push the market into some consolidation for some longer time. That's what I believe. And on the upside, we will continue to see 24,000, 24,200 acting as resistance for a few weeks to come.
It's time for a big brokerage call of the day, and it's an interesting one actually, because HSBC has initiated a buy on Acme Solar as well as CleanMax. And Sharad joining in to tell you about what they're saying about these two counters. Sharad, morning.
Good morning, Alex. HSBC has come out with its reports on the Indian renewables, and two names, as you mentioned. Acme Solar initiated a buy rating, and the target price is at 350 rupees per share. For CleanMax, there is an initiate buy rating at a target price of 1,150 rupees per share. HSBC has stated that the renewable energy sector is reaching another inflection point going ahead, and execution is important rather than just the availability of capital. Also, for Acme Solar, they have stated that the contracted capacity gives long-term earnings visibility, and they expect EBITDA CAGR of 72% over the next 3 years. And for CleanMax, they expect a strong growth as the companies are using green energy and a 30 to 45% cheaper than the grid power prices. And for CleanMax, they're expecting an EBITDA CAGR of 60% in the next 3 years. So both of these companies, look at the EBITDA CAGR expectations, more than 60% for both.
Got it. Okay. Thanks so much, Sharad, for that. Milan, coming back to you on individual stocks that you're looking at this morning.
Yeah, two stocks I'm looking at, and as I would always mention this time as well, I'm staying extremely stock specific, and I'll be looking to buy Vedanta above 745, expect 800 on it with a protective stop of 710. And the second stock I would be looking at would be Siemens, buying above 3385. Expecting 3550 on it with a stop loss of 3280.
With cuts of 1.9% for the benchmark, 460 points or thereabouts. And remember, this is a pre-open session. You could see a different start, but the stocks that are taking a little bit of a battering, we named a few of them, but let's round up the list. Interglobe Aviation seems to be taking it on the chin. You have cuts of close to 5%. Eicher Motors, remember, these are some stocks that had gained quite considerably over the course of the last 6-7 sessions, so money being taken off the table as well. The flying flea, remember we were talking about it on Friday for Eicher Motors. It's down about 3.7% at the end of that pre-open session. Adani Enterprises, one of the big losers, but it was one of the big gainers on Friday. Asian Paints, also top gainer on Nifty 50 on Friday. Larsen & Toubro now trading at very close to that 3,800 level. Adani Ports, Tata Motors, PV are some of the losers. ONGC and Coal India just about nudging into the green. And I think this is a picture that we've seen often whenever you see selling, right? You have ONGC and Coal India that tend to move on the other side. But would you trade them?
Difficult, because look at what happened on Friday. The moment you got a reversal kind of a trade, right? I mean, you saw Coal India take a knock, and this is exactly what I think. If I remember correctly, when Parag Bhai was mentioning, even I said that this is not a positional bet that you make. This is a tactical bet. चल रहा है तब तक ठीक है, वरना जो reversal होगा वो भी बहुत sharp होगा.
So Coal India has become a taco trade proxy.
You could definitely call it that, but becomes very difficult ना. जैसे you mentioned 12 घंटे में अगर ये reverse होता है तो फिर Coal India आपको कल gap down मिलेगा. So that's why it becomes difficult to play Coal India, ONGC, OMCs. So some of these names, because you don't have a trend, I would avoid.
Yeah, in effect, if you are trading a Coal India or an HPBP, you're effectively taking a punt right now on whether the decision will be favorable or not favorable today evening. If you are trading it, right, simply because you're playing it for tomorrow and you don't know what's happening tomorrow. So please be mighty careful with that punt. So thank you for giving that right advice, both of you. Okay, now a very important set of stocks, something that we highlighted on open at 8 a.m. But amidst this surge in global oil and fuel prices due to the Iran war, the government has significantly hiked the export duties on diesel and ATF. How will this impact the margins of refiners as well as OMCs? If so, Sumit is here with those details. Sumit, good morning.
Good morning. Well, what has happened here is that the government has increased the export duty on fuel exports sharply. Now, for diesel, it has increased to around $95 per barrel from $37 per barrel, which was imposed earlier. And on ATF, it has been increased to $72 per barrel from $50 per barrel, which was imposed. For petrol, it continues to remain nil. Now, what will be the impact of this? For oil refiners, this will cap the GRMs, or the gross refining margins, for independent refiners like Chennai Petro, MRPL, and also private refiner margins are expected to be impacted. But for Reliance Industries, the impact will be on the lower side, given the fact that its SEZ refinery, that is the Special Economic Zone refinery, is likely to be exempted from this export tax as per reports, and Reliance has nearly 50% of its capacity in this zone. So the impact on Reliance Industries will largely be neutral. For oil marketing companies, there won't be any impact, but there is another news also where the oil marketing companies are asking for a discount on refinery transfer pricing, that is the price at which refiners transfer their refined products to oil marketing companies on the domestic side. Now, if that happens, then that is also quite negative for all the oil refiners, including Reliance Industries in the country. Now, this is a large, and this is positive for the oil marketing companies, given the fact that their petroleum product sourcing cost goes down, and this will largely give some relief on the losses that they're earning rightly on sale of every liter of petrol and diesel. So to sum it up, for oil marketing companies, it is largely positive. For private refiners for private refiners and other standalone refiners like MRPL and Chennai Petro, it's largely negative. For Reliance Industries, it's neutral to negative.
Okay, just want to get a quick take over here on the entire oil pack. So many things happening. It's a mix of things, and of course this was an important announcement over the weekend about export duties hikes that the government has put in, which it will continue to do so, because why will we not save our own resources at this point? Is there anything in this pack that you would touch right now?
I'm not going to touch anything.
Nothing.
Anything, and not OMCs, not upstream, not Chennai Petros and MRPLs of the world, and not Indigos of the world.
What about Reliance Industries, RIL?
Whatever benefits due to oil going up, whatever does not benefit due to oil going up, I am not going to touch. I have enough other things to do.
But Tamanna asked you about RIL, which is a conglomerate, right, and multiple businesses, and therefore retail also comes into play. No?
So basically, I would say that Bharti, as I told you, would be my proxy to play this.
Okay, stay away from. Anything you're spotting after the pre-open session which looks buyable?
No, but if I can just quickly come in on Reliance, the idea is that, when you see positive divergences and a market reversal signal, the bellwether is supposed to give you that. Surprisingly, it's not. So I think the structure on Reliance continues to remain weak. Amidst all this, even if I've given a buy call on HDFC and LIC and L&T, ICICI and L&T, it just doesn't transpire into buy call on Reliance. So the structure remains weak and hence caution. I would very honestly suggest not to buy anything for the first 30, maybe even 60 minutes, see where the dust settles. If we are holding the opening lows, then Aurobindo Pharma, the weekly pick, that still remains as a buy. Deepish targets and stop losses. So just to reiterate, 1415, 1480 targets and 1285 stop loss. But don't do an opening trade. Let the market settle first.
Okay. Well, Milan, your top call for the morning. And if people had, we'll actually talk about the stop losses after the open is done. Your top call for this morning, Milan.
I would go for PFC.
You have a long call there or a short call there?
No. I'm sorry. It's a long call on PFC. It's a delivery pick.
It's a delivery trade. You're buying it at about 420, 422 levels, Milan?
Yes.
Okay. And what are the targets?
450 to 460 over the couple of weeks.
Okay. Noted. Buy at the current price. Power Finance Corporation targets of 450 to 460. Well, certainly the right space, but I don't know if it'll show the results. For now, starting off lower, as is the market. Let's see how deep is the cash. 420 or 400 odd points, 1.5% in the red. Banks are leading the charge lower, 2% lower there. Mid caps are down, small caps are down. I'm sure of it. About 2% for the mid caps, 2% for the small caps. And Nifty IT, I wonder if there is any damage out there, or is the rupee depreciation being factored in as a positive? Well, at least outperforming for now. Let's get the heat map up on the screen and see whether there is any green at all. A little. Coal India, Sun Pharma, ONGC, defensives if you will, and two of them effectively beneficiaries of an uptick in the prices of coal and oil. But be careful if you want to buy them or not. NTPC, HCL, Tech Mahindra are amongst the others which are lesser impacted. I reckon the rupee depreciation impact helping, plus TCS commentary not too bad. What's not doing well? Bajaj Finance, I'm surprised Shriram Finance is not there. Yes, it is there in the top 4, 3% lower. Indigo, 3%, not that 6% gash, but still 3% lower. Asian Paints, again another crude user, 3.5% lower. Adani Enterprises, Adani Ports, SBI, Geofin, Maruti. I think Nilesha put it well, that you would probably now call into question all the crude sensitives, because higher crude prices as an average for Q1 is a real earnings risk for everybody using crude. But Tamanna, the list is long. HDFC Bank, Axis, Reliance, heavyweights out there really putting the pressure. No place to hide really. A small uptick on ONGC is hardly worth that much.
Frankly, the Nifty looking worse than the implied had indicated this morning. You have a nearly 450 point cut right now, a 487 point cut, so nearly 500 point cut on the Nifty this Monday morning. It's quite a bloodbath, and think about it, it's a blockade on top of a blockade. So this double blockade from anyone's perspective, especially on that side of the globe like India is bad news, and that's what you're seeing pairing out. Look at the India VIX, about 14% up. The fear gauge and above 21 on that gauge is giving you a sense that it's time for the bulls to retreat, and that's exactly what you're seeing. The broader markets, let's review the broader markets once again and see what's happening there. Mid cap, small cap, both with cuts of 2.5% down. this fear factor is going to spare no one, and later this evening India time you will see that actual blockade take place. But US ships are already in the area, so it's not going to take them much time to really put this into place. How it works out is the question, because the Iranians have said, okay, come and then see what happens. So are you going to have some kind of an altercation on the seas? I don't know how this is panning out. 2.5%, over 2.5% down on the Nifty small cap 250. Let's pull up the sectoral heat map. The advanced decline ratio, the breadth of the market is completely down in the dumps. This is a complete red screen. Nifty Realty seems to be like this punching bag. Realty stocks seem to be like this punching bag whenever you have this crisis flaring up again, because it impacts this space, this sector from every corner possible, right? From input costs, what happens to labor, demand, steel, everything that you can import and you need, every commodity goes into building houses and offices. So that's really hit badly, about 3.5% down. The PSU Bank index also down. Banks are actually taking it on the chin, and there could be a couple of reasons for that. The RBI trying to come in and make sure that the rupee is not weakened further. How banks are dealing with currency arbitrage is one part of it. We have reported exclusively today that the Bank Association has asked the RBI, let's please give us a moratorium for MSMEs. They're going to need it. So that all of that bearing out. On the relatively badly beaten side, I mean the CPSE, possibly ONGC holding it up, Nifty Pharma there as well. I mean, no point looking at this beyond a point. We're going to have to look at individual stocks and see if there's any kind of a piece there. And you know, stocks like a Sun Pharma might be seeing some kind of a piece over there, because you've had the company come out and actually give some clarification on their acquisition, saying it's not that bad. Let's look at the blockade list and the list of companies hit completely by the blockade. We've pulled up a Kajaria Ceramics, for example, a CEAT, a JK Tires, all of those with cuts of about 3% plus today, and you're going to continue to see that. An Interglobe, for example, an Indigo Paints. So all of those categories, all of those boxes checked, and they will be in trouble, no doubt. Jyoti CNC is the other one I want to pull up. Now this has its own pain going on. Its subsidiary has seen action in Europe. Their bank accounts with 4 million euros in it have been frozen. So Jyoti CNC, of course, with that kind of pain at this point. And Acme Solar, we put out this big brokerage call. HSBC has a positive call on it. This is one of the positive stocks today, about 5% up in trade today. So you have a smattering of those stories, Alex, but overall, it's a tough morning.
You said it. It is a tough morning. Ola Electric losing about 6.3%. You have Union Bank and quite a few banking packs. In fact, let's pull up the PSU banking pack, because I want to see whether Union Bank of India is the only one. It is not. You have a bunch of these public sector banks that are really taking a little bit of a knock today. You have Bank of India, you have Canara Bank, Punjab National Bank, Indian Bank, UCO Bank, all of these taking cuts of over 3% at this moment, and there's no place really to hide. Lemon Tree also losing about 4%, which is interesting. On the flip side, you have JBM Auto that's working today. Electra Green is up. Ather Energy continues its move higher. And I want to ask, therefore, about two questions, right? One, on the technicals, and perhaps Milan can weigh in on the PSU banking pack. But I want to ask Kush about Ather Energy, because it's moved up quite considerably. The question is there some fatigue creeping in, or would you play for higher levels?
I don't recall whether it was on the morning show or Ask Profit. I think it was the discussion where we had between Ola and Ather, and this just clearly stood out. Good to see that this is still showing strength. Volumes also on open very healthy, barring today. Even the last two sessions that you see have seen very high volumes, very high delivery markup. So all in all healthy. And to answer that question very specifically, is there any fatigue creeping in? Not really. On the daily setup, it is approaching oversold, overbought levels, but still some distance. So I think if you have a position, you should continue to hold trailing stop losses at about 855, 860 mark. Wouldn't suggest opening a fresh trade on this one, because as I said, it's approaching overheated territory, so there could be an unfavorable risk reward ratio. But yes, if you have, you should continue to hold, keep trailing stop losses. Still got good momentum going for it.
Okay, all right. We'll have to couch the question on PSU banks for a short while. But gentlemen, on that note, thank you so much for taking the time, and pleasure speaking to all three of you. We're joined this morning by Anirudh Sarkar, who's a co-founder and CIO of Equinova Investment Managers. It's a good time to be talking to you. Anirudh, thanks so much for taking the time, and good morning to you. How are you? Good morning. So what are you making of the situation as things stand right now? Because clearly there seems to be money being taken off the table after a solid week of gains, because that uncertainty once again is swirling. So what is your approach at this moment?
No, I think basically what you're seeing today is basically kind of an overreaction to whatever the news flow was there over the weekend. And to be honest, I think it was a bit too optimistic to expect that, when both sides they met at Islamabad, a peace deal will be an outcome of that. I think that was a bit too optimistic, and I think with whatever is being announced overnight with regard to the blockade in the Strait of Hormuz, I think market is kind of reacting to that. Having said that, I think as you just displayed on the screen, practically every sectoral index is deep in the red, and whether it's large, mid, small, banks, the real estate, everything is down. So I think there's nothing much to do. We continue to do what we have been doing, picking pockets of where earnings are, and just avoiding the noise which comes around every day.
Anirudh, good morning. So,
good morning.
Let's assume you went into this weekend not being as optimistic as the street was. Your positioning may have been that way. Do you believe that the ambiguity prohibits you from putting capital to work in a small corrective move that we've seen? Or do you believe that there is merit in recognizing that crude prices as an average in quarter one being high could wreak havoc in earnings, and therefore try and look at raising some cash levels?
I think one thing which we have been factoring in our all our estimates, in fact, before the war started, whatever was the estimates for our portfolio companies, we have taken around 10 to 15% kind of a, I would say, decline on those estimates. And I think this will get reflected in the first quarter of FY27, because I think the fourth quarter won't see much of an impact from the crude or the war, because most companies had good inventories. And also, I would say that the blockage also happened somewhere in the middle of March. So I would say impact will be visible in the first quarter, and broadly, good amount of, I would say, the market has already factored in those impacts in different pockets. Unorganized to organized is one shift which can be visible, because if you see many of the companies which got impacted was due to the shortage of the gas. And most of the larger players, they had better supply chains, and they were better organized to ensure that their businesses don't get disrupted significantly compared to the smaller players in the unorganized space. So I think it will be a very, very interesting first quarter to see how the impact of the entire event plays out for Indian companies.
Very good morning. Will you go out and buy anything today? Would there be a buy list ready in case things turn? Because I agree with you, it would have been optimistic to expect that everything would go smoothly on the talks and both sides would come out, shaking hands and hugging each other. But having said that, it's not all ended in terms of negotiation. If I had to look for a very thin silver lining, the thin silver lining is at least the ceasefire is held. So would there be a buy list you have right now?
Absolutely. I would say that obviously we are deploying for our clients. Any new money which is coming in, we are deploying. Okay. But I would say whatever is the market reaction today, and if you see the last 45 days of the way the market has reacted, I think it's evident that these are all the bargaining tools from both sides. And investors should use these dips, these announcements, these noise in the market to deploy, because we have seen whenever the things get okay, there's a very, very sharp upside in the market. In fact, if you see from the lows which we had made, we are almost up 1600, 1700 points on the Nifty, and it was over a very short span of time. So I would say use these events and the noise, because it's very evident that de-escalation has happened. Talks are underway. In fact, there are other countries now who are also wanting to propose to host the talks. So I would say this is more kind of a reaction of the event and not a time to sell. Rather, if someone is being on cash, it's a good time to deploy.
Okay. So if you're saying, but this is a little contrary, Anirudh, to and we were discussing this morning, contrary to the fact that AMCs are seemingly sitting on a slightly bigger war chest, because the flows have been pretty decent in the month of March. And so they seem to, and we spoke to one CIO this morning, and he said that if he ordinarily had between 3 to 5% cash, he would keep a little bit more. He would keep 8%. And it must be said that this is a relatively smaller AMC, so the room to maneuver is more. So if you have that room to maneuver, seemingly in the mutual fund space, people are saying, I'm going to keep a little more cash. So what you're saying is contrary to that.
See, Alex, I'll be very practical, because I've seen these discussions on the cash calls for a very long time. Yeah. A few percentage points cash calls here and there, it doesn't really impact the returns, to be honest, because if you are 92% invested or 94% invested, that extra 2% cash will not help you on a day when the markets are down by 180 bips. So I would say that broadly, if you look at the cash for the ANC industry in the month of March, I think there was a report day before yesterday, at an ANC level, the cash from 4.83 went down to 4.7%, which means most asset management companies deployed cash.
So point is made, Anirudh. Let me ask you a different question then, which is that from your perspective, where is the margin of safety? Which means that if you are deploying and you are meant to be fully deployed, then where is your comfort level and where is your margin of safety to say that even if you fall, the fall is going to be limited?
Absolutely. So I think basically the sectors where I see that growth continues, and in fact we continue to be overweight on those areas. One is power capex. Second is auto ancillaries. The third is aerospace. Fourth is domestic consumption, because these are broadly areas where a lot of the resilience is there with whatever the external things are happening. In fact, if you see many of these companies in the power capex, they are all at all-time highs in spite of whatever news has happened, because I think domestic capex on the power side, domestic capex on the industrials, auto ancillary, aerospace, these are companies where order books execution is continuing without any hindrance of whatever is happening around the world.
Okay, Anirudh, thank you so much for joining us this morning, and pleasure to speak with you as always. Let's hope there are enough opportunities to deploy cash as the situation looks quite scary. Actually, the screen's looking fairly scary this morning, if for lack of a better word. But let's move the attention to companies. Park MediWorld in focus today. They're setting up their expansion strategy with the launch of a new multi-super specialty hospital and expansion of its Mohali facility. The move strengthens its presence in the Tri-City region and adds to its growing healthcare network, is what they have been saying. We're going to be speaking to the management and they're joining us on the show, but we also have Varsha with us who's joining in for more details. Varsha, take it away.
Yeah, thank you so much for that. So yes, two news I would say when it comes to Park Medi. One is they've launched new super specialty hospital in Haryana, and of course they're expanding their Mohali facility to strengthen the Tri-City presence. Now, key specialties offered in Panchkula Hospital is oncology, neurosciences, orthopedics, and which includes robotic assisted surgical procedures, and the combined bed capacity across Panchkula and Mohali will be almost 850 beds. Onto the business highlights, average occupancy for the company stands at around 65% versus 62% last year, and the ARPOB, that is average revenue per occupied bed, increased to rupees 27,406 from 25,500, and total patient footfalls also is up 24% year on year. Talking about the medium term expansion plan for the company, by March 2028, almost 2,000 beds will be added across 6 to 7 hospitals, and the exit capacity will be almost 5,260 beds, and the long-term aspiration is to scale up to 10,000 beds over the next 5 years. Talking about the margin framework, the steady state EBITDA margin are guided at 26 to 27%, and the sustainable PAT margin is guided at almost 15 to 17%. So overall, a lot of expansion on the way when it comes to Park Medi.
Okay, Sanjay Sharma, whole-time director and group CEO of Park MediWorld, joining us now on the conversation. Mr. Sharma, thank you so much for speaking with us. First, if you can set the context of your expansion plans in this Tri-City area, and let me add to that, how do you hope to compete with other large chains in this area? Because these are also well-covered area by hospital chains.
Good morning, Tamanji. Good morning to you and good morning to your viewers. Thank you so much for inviting me to in Tri-City, we feel that it is not only the patient base coming from Chandigarh, Haryana or Punjab, but large patient load is coming from where healthcare is deficient in North India. That is Jammu and Kashmir, Himachal Pradesh, Uttarakhand, Upper UP area. They all travel to Delhi, and the first stopover is in Chandigarh, Tri-City. That is why we have expanded the bed capacity, and we are looking at 850 bed capacity, which will be the largest in the Tri-City, providing healthcare. so that it is a one-stop place for all the patients which are coming from North India, Haryana, Punjab, and they do not have to go to Delhi, where the treatment cost will be much higher, and stay and boarding and lodging will also be very high for them.
What are the timelines that you're seeing for these expansions, both in Panchkula and the Mohali facility?
Panchkula we have already commissioned on 10th of April this month.
Okay.
And 350 bed capacity has been launched, and it was very well received. In fact, we had more than about 1,000 footfalls on the first day of 10th of April. And Mohali, we are looking at November 27 to add 150 high-end tertiary and quaternary bed in already existing 350 bedded capacity, which is doing nearly 85% occupancy.
Okay. Mr. Sharma, very good morning. And I want to ask, and these are new facilities and services that you're offering in new areas as well, particularly oncology, for example, in Panchkula. I'm just trying to understand in the various services that you offer, if you were to splice it in that fashion, the revenue that you're currently generating and expected to generate in FY27, then what is the kind of mix going to be?
See, here we would be providing the highest quaternary and tertiary services.
Okay.
Besides high-end onco services, we'll also be going for organ transplant like kidney transplant program, and soon enough we'll be also starting a liver transplant program. So they will contribute, high-end tertiary care would contribute nearly up to 65 to 70% in the revenue margins. Plus, we are also including robotic assisted surgical procedures, which will be used for high-end cardiac procedures, joint replacements, organ transplants, multiple neurosurgeries, and other areas where it can be utilized.
For context, sir, where did it stand at in FY26? Approximately, you can give us a range, and where do you anticipate that it will go? And I understand that Q4 is still there, is still pending. So whatever you're comfortable with sharing, and where is it likely to head in FY27?
We will be reaching our target very easily, what we have mentioned for FY26, because the numbers are to be audited. So I'm not at the liberty to come up with it. 9 months numbers are that we have clocked about 1243 CR at a PAT of about 27% and a PAT of about 17% and EBITDA of about 27%.
So just okay, yeah. Just to follow up to that, if you're saying that these relatively high value procedures are going to take a larger share, the natural assumption therefore is that your average revenue per operating bed is going to head higher, and so therefore how much do you anticipate there is room to further increase that metric?
See, we pride ourselves to be in the affordable section. That is why our ARPOB is about 27,500. But we feel that with these high-end procedures, the ARPOB should increase by about 10 to 12%.
Mr. Sharma, do you believe that the average revenue per bed, independent of what happens in the near term or the next 12 months, have a chance of really going up as your expansion plans fully come on stream, let's say over the next 3 years? Or will we see a period of that metric coming off simply because of the capacities that you add, which then naturally leads to lower ARPOBs?
See, with the high-end tertiary and quaternary product mix, the ARPOB is bound to increase, and we are looking at roughly about 10, 12, 15% of ARPOB increase annually. But we still would like to be in the affordable section. We are not looking at 75, 80,000 or 1 lakh ARPOB at all, because then we move out of the affordable segment.
I have one more broad question. There is a lot of chatter around how medical personnel trained in India are in a large demand overseas at much higher salaries or wages, if you will, and therefore that export of that personnel might overall eventually lead to maybe some constriction of available people, resources, as well as higher salary levels as well. Is that something that the healthcare sector will have to contend with, simply because the sector itself is expanding at a great rate? You are doing that. A lot of your peers are really also ramping up their capacities. Could that become a problem in 2-3 years?
Neeraj, this was a problem, say about 20, 25 years back or much before that, when the facilities, international standards in healthcare were not available within India. And that is a time when a lot of brain drain in the medical environment was happening to the countries like US, UK, Europe, etc. But now with the international facilities and the high-end product mix being available within India, a lot of doctors and clinicians prefer staying within India and close to their hometown or places where they're comfortable with regard to their children's education. And that is why the brain drain in the medical facility is now on a decline in India. And with the private setups also coming out with the medical colleges, I feel that the surge of clinicians should increase substantially within India.
Just trying to understand, Mr. Sharma, how much of your exposure is to government schemes like Ayushman Bharat, because you are in the affordable segment as well. Is there, any kind of color that you can provide on the timeline of payments, etc., that you're receiving and the extent of exposure that you have to payments from the government for subsidized healthcare?
Yeah, since we are in the affordable section, our tariff is in sync with a lot of government insurance schemes. And when we started with the IPO, that time it was about 80% coming from the central government insurance schemes and 20% coming from private insurance and cash. Currently, it is about 75-25%. And we feel that going forward by the next year, it should be 65% coming from the government insurance and 35 coming from the private and the out-of-pocket expense. With regard to the government insurance, 93-94% is from the central government. So it is like a sovereign bond, and there has been no default to date in past 21-22 years ever since we have been functioning. With regard to the Ayushman and other schemes which are state government and central government, there our exposure is very minimal, about 2 to 3%.
Okay. And what about the timelines of the payment you receive from these government schemes?
Yeah, in the central government scheme, most of these systems are now being digitalized, and fast-paced systems are being coming over. Currently, it takes about 120 days for the payment to come over, but we feel that in the coming times, it should get down to about less than 90 days.
There is a 120-day wait for payments to come in for about 75% of your revenues right now. Am I understanding that correctly?
That's right, ma'am.
Okay. Thank you so much for speaking with us, Sanjay Sharma there of Park Medi World. We're keeping the corporate focus on this morning. Galant Ispat is the next company that we're turning the spotlight on. It's set to benefit from the latest round of steel price hikes announced by major producers. Hot rolled coil prices have moved higher this month with a parallel increase in cold rolled products as well. Before we get on, Mayank Agarwal, CEO of Galant Ispat, to speak more on this, our colleague Parth joins in with key details. Good morning, Parth.
Good morning, Tamanna. Thanks a lot. So the reason why Galant is in focus today is because steelmakers are rising their HR coil prices by around 3,500, and this hike of around 5.7% will push the HR coil prices to 64,500 rupees per ton. Apart from this, the cold rolled coils will also see a hike of around 3,000 rupees, pushing their prices to 68,000 rupees per ton. Now, these rising industry prices will directly boost the realizations and margins of Galant, and the price tailwinds will benefit its production run rate of around 8.8 lakh metric tons in FY26. Apart from this, as we already saw in their latest business update, that they have already hit a capacity utilization of around 91% in the Q4 of last year. Moving on to their guidance and outlook, the company is currently executing a phased capacity expansion to 12.3 lakh metric tons, and the 3,000 crore capex which the company is doing is fully funded via their internal accruals. The company will also be securing captive mines, which will structurally improve its EBITDA by around 2,000 rupees per ton, and the management expects continued volume growth and strong pricing tailwinds.
Okay. Parth, thank you. A very interesting summation, and from the looks of it, fairly bullish when the stock is in the green today, incidentally, on a day like this. Mayank Agarwal, CEO of Gallant Ispat, Johnson right now to talk about the current picture as well as the outlook ahead. Mayank, great having you. Thanks so much for joining in. If I were to believe everything that Parth is telling me, it seems that you're on a road to growth, and from FY26 to FY28, 29 or whatever the timelines are, there seems to be a very strong growth prospect ahead of you. Would that be a fair summation?
Very good morning to all of you, and thank you for having me here. Your colleague Parth has pretty much summed up our current financial year, which has just closed. And yes, we are very excited with the results, the capacity utilizations, and the EBITDA margins of approximately 9,000 rupees a ton, which the company is able to generate, especially looking at the markets that we saw in 3 quarters of FY26. So we are very excited with that, and with the capex that Parth was talking about of 3,000 crores, almost 1,500 crores will be worth of capex is being done in capacity additions and solar power generation of 78 megawatt. And all these 1,500 capex will be completed in the current FY27 itself, and we will have the production kick in the H2 of the current financial year. So because of this, we would see a reasonable volume growth expectedly in the current FY also, and in the next FY it will finally accumulate to the entire year operations of 1.29 million tons of total capacity. So volume growth will definitely be there in the next 2 years.
Mayank, sorry, and we'll get to maybe some questions around the issues from the conflict as well. Are there issues in operations, etc.? But because you mentioned this volume growth number, is there a number that you're putting to it? What is the presumable or hypothesized volume growth for FY27 and FY28 when the entire capacity comes in for the year? Would love to know the volume number assumption.
So currently in the FY26, we have operated an overall capacity utilization of 86%. And while we are adding 0.25 million, which would be commissioned in H2, sometime in the beginning of H2, so we can expect 50% of the 25% capacity that is being added kicking in H2. So yeah, we are expecting a volume growth of 10 to 15% in FY27 and the entire 25% in the next FY.
Interesting. Okay. So then, and basis what you're saying, Mayank, you're seeing 50% of the 25% capacity addition take place in H2, right? And so from that perspective, the second half is going to look dramatically different from the first half. And I would assume that Q4 will look better than Q3 as well, as incrementally you keep adding production. So from that perspective, what is the kind of trajectory that you anticipate? It's going to be the same for revenues as well, right? And also, therefore, the follow-up to that is going to be on realizations. At this juncture, it seems like it's heading northward. Is that the right assumption?
That is absolutely right. The realizations have definitely improved in Q4 also because of the prices going up, as already explained by Parth. And going forward, because of the volume growth, definitely the realizations would be there. And of course, Q3 beginning, we would be commissioning the facilities one by one. So effectively, Q4 should be dramatically different in FY27, because this entire capex is not just going into the capacity additions, but it is also some bit of it is being spent for operational efficiencies. So while we should see the volume growth also, we expect better realizations on the EBITDA per ton basis also in Q3 onwards. And with the solar also kicking in, it will further reduce the power cost. So yes, Q3 onwards and specifically in Q4 FY27, the results should be dramatically different. And you are absolutely right about that.
So therefore, given what you're talking about in terms of costs coming down, Mayank, as well, and more capacity coming on stream, Can you give us a sense of the margin trajectory in that what are the peak margins that are possible? And I don't want to necessarily hold you at gunpoint to give you, tell you to give me this answer, but just in terms of mapping that potential as things stand right now, as you've just described it.
So currently, if we compare 9 months period of FY26 with 25, we were able to generate a margin of 8,750 per ton. That is 8,750 rupees per metric ton, which was 8,000 last year, FY26, sorry. So there is a 10% growth, which is actually about 17.5% is approximately the total EBITDA generated in 9 months. And of course, with the volumes coming in and the economies of scale would apply, along with the operational efficiency. So even see the first 3 quarters, we have to understand that the realizations were pretty weak. So of course, the margins would totally depend on the realizations. But what is in our hand is to ensure a better operational efficiency so that we can survive in any kind of markets, and which we have shown in the first 3 quarters of FY26. And with the further costs going down, definitely we can expect much better EBITDA realizations, provided EBITDA margins, provided the realizations support us a little bit on that front.
Mayank, hi, good morning. Tamanna here. Just trying to get a sense of what Q1 is looking like and the impact of the blockade of the Strait of Hormuz for you. Of course, this will be industry-wise, but for you specifically, are you seeing any input costs go up dramatically right now, cost of energy, etc.? Can you just give us a bit of a picture there?
Yes, very good morning, ma'am. And definitely with the war, which seems to be not called off and not in the near future anytime soon, it will put pressure on the raw material energy side specifically as well. But we have a very robust module for our raw material sourcing, where a very good chunk of energy is being sourced domestically, that is Indian coal, and which is backed by long-term linkages. So yes, there could be an impact, especially in the sea freight and the prices on the coal side. But the margins and the realizations would also improve if the scenario continues. So we do not see a very big problem in terms of reduction in EBITDA margins in Q1.
Okay, what is the extent of impact on freight rates and coal prices? And are you able to increase prices in the same tandem? I know HRC prices have already been increased, but are you able to increase it to match up?
Yes, till Q4 we were able to match up the prices and transfer the cost impact directly. And while the current quarter has just started, I mean, it's just been 10 days. So we have to wait and watch. Currently, we do not see a problem, at least in Q1, in terms of price absorption, because this is a good season, and we being in long products, up to till the time the monsoon sets in, which is almost the end of Q1, I feel that we are very well placed.
Okay, so Q1, you think you're not going to have such a huge impact so far, despite everything we've seen in the last few weeks?
Correct.
Okay. Thank you so much, Mayank, for coming in. Mayank Agarwal, there, CEO of Gallant Ispat, taking all of our questions this morning. And one of the companies that is really looking optimistic despite everything that we've seen, the stock also doing okay this morning. All right, the other big story we're tracking, the government has cleared 52 firms under the Textile PLI scheme Round 3. Proposed investment stand at over 6,700 crores. Before we speak to R.K. Vij of the Textile Association, Parth is joining in with more details on what this means for the industry. Yes, Parth?
Thanks a lot, Tamanna. So that's right, 52 new companies have been approved under the round 3 of the textile PLI scheme. These approved firms are proposing an investment of over 6,700 crores and the projects are expected to generate a turnover of over 21,000 crores. The focus in this round of the PLI scheme will be on MMF, apparel, fabrics and technical textiles, and it will not only boost the domestic manufacturing but also create more jobs in the country. The firms that were already approved under the PLI scheme have already started production. They have already invested over 900 crores and generated a turnover of over 4,400 crores in the first 3 quarters of FY26, and they have also recorded exports worth 3,363 crores. So let's see how the newly approved firms will affect the sector's output in the coming quarters.
Okay, thank you for that, Parth. Mr. Vij joining us. He's, of course, from the Textile Association. Mr. Vij, thank you so much for your time this morning. What does the PLI scheme mean for the industry? Specifically, what are the details of the scheme?
Ram ma'am, good morning. This is the very right time that Government of India has come up this PLI 1 scheme in 2021-22 with an budget of 6,000 crore, 10,000 crore of rupees. So this, because why this is the right time? Because in this textile, this FTA is there, so most of the good brands are looking for the India. Recent agreement with UK and the further with the EU will, this is the right time PLI scheme has come. Bangladesh LDC by next year, so this is also a good chance for us. Another national textile technical textile mission is also there to promote textile. This PLI scheme, I'll just brief you. The production link incentive scheme was the first kind of scheme introduced by the Honorable Prime Minister and the textile ministers to promote man-made fiber and technical textile and the garment and apparel industry, because apparel and garment industry always give more employment, and textile being the second largest after agriculture gives the employment and contribute in export also. I'll just brief you.
The PLI scheme, of course, very important, and it will take some years to come through. But you know, since we have you here, we want to understand what is the situation the textile industry is facing right now because of the Middle East crisis, because of this war, in terms of exports. And is there any help coming from the government?
Yeah, I'm coming to you. On 28th February, this war started, and the last this quarter, March, if we see up to in the March end, of course, we were having the inventories at the lower risk, our raw material was lower. So this March month was very good, but due to shortage of raw material, PTA and MEG. MEG comes from Saudi Arabia and Kuwait side. Due to Hormuz Strait, we are not able to get, and the prices of PTA and MEG increased tremendously. So it is difficult that it could not be passed on to the downstream industry. But the government has taken a historical step by making this custom duty on PTA and MEG from 5.5% to 0%, so that it should be available at a reasonable price. So we are thankful to the government. This they have done for the first time, and the government also given the facilities for the credit also, banks also, and that you can delay your installment also. So government is helping whatever to promote the textile industry in India.
Mr. Vij, good morning.
Good morning.
I heard you say in your opening answer that with this PLI scheme notwithstanding, there are other moves that are happening which will also benefit the Indian Textile Association, notably in the European side as well. Can you can you lay out for us that if the PLI scheme were to take a little bit of time in eventually seeing its final approval, will India's exports to Europe, presuming that this blockage ends and all of that happens, show a significant bump up because of all the FTAs and the agreements that have been signed?
I'm just telling you this PLI scheme came 2021-22 at initially with a investment, 100 crore investment and the 300 crore investment. Out on against that, already about 64 companies enrolled in the first part of this PLI 1, and second part of the PLI 1, which was extended up to 31st March 2026, that they have reduced the investment from 100 crore to 50 crore and 300 crore to 150 crore. Now coming to the point, with this PLI scheme, which some of the companies have already started and taking the benefit also, we have become the globally competitive, because in this 5 years, almost 30 to 40% of our investment in 4 to 5 years, central government gives back to us in terms of incentives. So we are globally competitive. And with this, fresh investment has come in this scheme, and right from raw material to the end product, because the PM Mitra parks are also there. So we have become globally in spite of this war and other problems, our export in textile has not come down. And with this new FTA and this PLI scheme, more investment, more employment, more we will be able to feed to the yarns, to the good brand. So we hope that with this PM Mitra Park, PLI scheme, NTTM scheme, our export will increase to the other countries, Europe and other countries, if at all we are not able to feed USA, but now the USA is also 18%. So our all material has started going to USA. And I just wanted to tell what, of course, the PLI 1 scheme is very good.
Sure.
And but I just wanted to tell
we have
the government.
Sir, we have to go into a break in 30 seconds. If you can wrap up this answer in 30 seconds, please.
Okay. Thank you.
Oh, okay. You wanted to finish your point, Mr. Vij?
Yeah, I just
30
wanted to
seconds.
finish up time. In the PLI 1, because 100 crore first investment and 300 crore, the turnover was 200 crore and 600 crore. When it reduced to 50 crore and 150 crore, the government, I don't know how is it missed that the turnover remained the same. If suppose 100 crore is 200 crore, and in 50 crore it is not possible to 200 crore, and 150 crore is not possible to 600 crore.
Got it, sir. So that change should come. Fair call. I'm sure somebody would be listening. You would have made your representations as well. All the best for that, Mr. Vij. Thank you so much for taking the time out and joining us.
Thank you very much. Thank you.
All right. We need to slip into a break on the note that the markets have stayed low. I mean, we haven't quite recovered from that 400-point downtick, but there are select names which are actually showing some serious traction. So, for example, Adani Enterprises, despite the market being down 1.7%, is in the green, 1.27% at the high point of the day after gaining significantly last Friday. Adani Energy Solutions, I wonder if it's in the green, but it had a very strong business update. The other one which is doing really well is Vari Energy. Vari Energy is up 2% at 3346. I'm talking about companies with a sizable market cap, all of which seem to be buzzing, or some of which seem to be buzzing. We take a break, come back, do more market spotting and get you some more experts.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ खास होने वाला है।
कुछ खास होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most All right, back with India market open 1.5% lower for the markets. The IT index too, incidentally, is now as much lower as the Nifty is. Remember, it started off reasonably okay, but I think it has succumbed to some bit of selling as well. So the rupee depreciation, if you will, really hasn't helped. HDFC Life, that upgrade today, 1.5% higher. NTPC marginally higher. Everything else is in the red, with Eicher Motors and Maruti leading the list and Interglobe not too far behind. Our self-coined mobility index is not doing too well right now. Okay, let's move on to news and updates. Sources tell us that the companies have asked SEBI to change the QIP pricing methodology as formula floors outpace the market prices. Nimit is here with the details. Nimit, just simplify it for our viewers. What is it that companies have asked SEBI to do?
Yeah, so how QIPs are generally priced is based on a weighted average of either their 26-week historical average, their price over the last 26 weeks, or their last 2 weeks, whatever is higher. And in the current market where prices are really low, the 26-week average, which reflects a very far behind price, is far higher than the current market values. And QIPs being offered at those prices today are not being bought by investors simply because they do not reflect the current market prices. Because of this, industry bodies, investment banks and companies have asked SEBI to change or relax this pricing valuation so that they can go ahead with QIPs, which have been over the last 2 years one of the strongest fundraising routes for the public markets. This has completely dried up this year so far. Prime database numbers tell us that 4 QIPs have taken place this year so far. This is against 16 in the last 6 months and 20 in the same period last year. Now what they have asked for specifically is if you can relax that 26-week window and make it 8 to 10 weeks, which is more reflective of current prices, or remove that higher off criteria so that only the last 2 weeks average can be seen. Now these are the two demands which will reflect the price of the QIP more close to the current value which investors are looking to buy, and that is the demand that that these industry bodies and companies are putting to SEBI to make QIPs an attractive route again.
So important update. We'll see whether that finds traction with the regulator. Thanks so much, Nimit, for getting us those details. Now, moving to news from Swiggy, because, and this is important, Nandan Reddy, the co-founder of Swiggy, has stepped down from his role and moved on from the online food and grocery delivery major, or rather he will move on in the coming days. Alongside his departure, the Swiggy's board has also announced a series of leadership changes. Mahima joining in to tell you what they are. Mahima, first of all, that exit and then everything that's changing at the company.
Right, Alex. So, this came in, of course, on 10th of April, the announcement that Nandan Reddy will step down as the co-founder of Swiggy, effectively immediately, and he's also vacated his board seat as well. The reason given for this is that he said that he wants to explore new passions and independent projects. Now, the other management rejigs that have happened is that Renan D. Castro Alves Pinto has now replaced Roger Clark as the nominee director, and this is from Process. Finny Krishnan and CFO, that is Rahul Bothra, both were elevated to executive director. So these are the other two rejigs that were announced along with this. In terms of how Nandan Reddy has, overall scaled Swiggy, he spent the last 12 years, of course, building this from the ground up and has navigated, the tech side of things as well. He's kind of set up the foundation operations and also led the AI concierge service as well. Apart from this, since he said that he wants to pursue new passions and new businesses, some of the businesses that he's already invested into include Unicorn, the Rise, also the backed EV startup that is Vidyut Tech, and tech upscaling platform called Pesto Tech. Seed funding he's done in startups like Chai Basket, Stance, Mava Health, and he's invested in diverse platforms like Felicity Games, Supernova, and Neend as well. So these are some of the businesses that he might explore for going forward. So this is the overall view of what's happened with regards to development and what he's done so far in Swiggy and what lies ahead for him.
Okay, interesting. Thanks for that, Mahima. Let's move on to another very important story. China is making a move to halt sulfuric acid exports from the month of May. Yes, the same one that you used in your chemistry labs. Now, the thing with this one is that the tightening global supply at a point of time when the markets are already strained by geopolitical disruptions could have an impact on many sectors, including the fertilizer space. How and what kind of an impact? Varsha has the details. Varsha.
Well, thank you so much for that. Yes, fertilizers will be impacted, along with you have defense, metals, and copper industry, or segments which will be impacted. But before analyzing which all companies will be negatively impacted, onto the this news, if you see, producers and large buyers have been informed, notified, and the sulfuric acid prices, if you see, have risen since Iran conflict began. So it has up almost 25 to 30%. A closure of Strait of Hormuz have disrupted the shipments from the Middle East. And why this is important? What's the importance of sulfuric supplies? Middle East produces around 1/3 of global sulfur supply, and this is a key raw material for sulfuric acid, which is used in your copper extraction and phosphate fertilizers. And China is actually conserving sulfuric acid supplies ahead of peak crop planting season. And onto the impact on the different segments, starting with the fertilizer companies, higher sulfuric acid prices will raise raw material cost and the margin pressure likely if companies are not able to pass on those increase to the farmers. In India, sulfuric acid imports, if you see, total around $118 million in 2024. All the fertilizers companies will be impacted from this move. You have Coromandel, Paradeep, Chambal Fertilizers, Rashtriya Chemicals and all. Onto the copper, if you see, sulfuric acid is vital for copper extraction process, and about 16% of the global refined copper relies on acid-based extraction. Onto the which companies will be impacted? Of course, we have Hindustan Copper, Vedanta and Hindalco Industries. Onto the defense equipment impact, large amounts of coppers are needed to replace damaged radars and systems, and each requires thousands of kilos of copper. So Bharat Electronics, Bharat Dynamics will be negatively impacted. Lastly, on the semiconductor vulnerability, ultra pure sulfuric acid is required to make advanced chips, which will disrupt missiles, radars and guidance system. You have Tata Electronics, Keynes, Dixon and L&T Defense. All these companies will be impacted because of the huge surge in the sulfuric acid prices.
You've capped it off very well. Thanks so much for giving us that update. So keep a watch on all of these stocks that are impacted by sulfuric acid supplies not possibly reaching on time or getting impacted. Remember, it's not a story only about crude oil. A whole host of supply chains get disrupted. But let's go across now to talk to Abhay Agarwal, Managing Director of Piper Serica Advisors, joining us on Talking Point this morning. Abhay, thanks so much for taking the time as always, and good morning to you. I'm wondering what your frame of mind is this morning, because you had a few sessions of a bounce back, and today there seems to be worry because of this swirling uncertainty that started again this weekend. So what's your frame of mind at the start this Monday morning?
Yeah, good morning, Alex. I think what I can assess and see is that there is some degree of tiredness that investors have with this whole geopolitical issues. And I think the markets are not reacting as widely or with as much volatility as we have seen earlier. So there is a bit of tiredness to reacting to news. I think markets are trying to form a bottom. The conversations are around new deployment. Early stages, I won't say anybody is going to go all in. So I think people are kind of coming to the view that, look, sooner than later, difficult to predict the timing, but this issue will resolve, or the big difficult part of this geopolitical issue will resolve. Lingering issues will remain. They will never get resolved fully. But any resolution that allows for free flow of materials, goods, supply chains easing, I think will be taken very positively by the markets. So I think the market is already kind of built in all the negatives that it had to build. The expectations that we also have is that there is no point being too negative all the time. We need to also look for opportunities, and I think that's what we are doing, Alex.
It's a fair point, Abhay, and I think you've described all of our sentiments as well when you say that there is tiredness, even from our perspective. Speaking about this conflict, it's gone on long enough. But having said that, where are you finding comfort? Is it? And you're saying it's in the price. I'm just wondering, because you're talking about BFSI as a package, you're talking about certain other pockets where they've been beaten down to such an extent that people are saying, okay, I don't mind deploying at these levels, but what is the kind of impact you should be willing to take on earnings in FY27? Because let's face it, this is our new normal.
Yeah. No, absolutely. This is a new normal. This will stay, in some form or fashion since Trump has been a president. There have been hotspots all over the world, in US, around the world, from tariff war to, the geopolitical war. It will be something else. So this is absolutely agree with you. This is a new normal. I think the markets will have to build this into it's their expectations as we go forward. So what we are doing, Alex, is what we do all the time, which is focus on growth opportunities. So we are not looking for opportunities where something has got beaten down, so it becomes attractive purely on valuation basis. I think investors will be rewarded for buying high quality growth stocks at reasonable valuation. So my advice would be to look for companies that are in the mid cap, maybe small cap, large small cap space, that are on a high growth trajectory, and focus on them rather than looking at beaten down large caps. Because I think a lot of beaten down large caps, even with the market recovery, will just become value traps. I don't think they are growth stocks anymore, especially if you look at the large private banks. IT services, another huge disappointment. But the good news is that, Alex, there is always opportunity. There is always a bull market going on, even in a bear market. So opportunities in pharma, fast growing pharma innovation stocks, electronic manufacturing, advanced electronics, in automobile components, we are seeing very strong recovery. In some of the niche chemical companies are still guiding for very high growth. So I think that is where we are going to focus on. We are already focusing on. We are not worrying too much about beaten down names. They may just turn out to be value traps.
Okay, that's an important point, Abhay. Very good morning, Tamanna here, and good to speak to you after a while. Value traps, how to avoid the value traps? Would it be just safer to look at, large caps, the index, stay safe with the understanding that these will have to improve, and now valuations are looking decent?
Yeah, good morning, Tamanna, and as always, great to talk to you. My worry is that a lot of times investors, and we, including our investors, institutional investors, they look at large caps as being defensive. But I tend to disagree. If you look at the performance of some of the large caps, in 5 years, there's been a negative return. And I don't think anything is going to change there. So chasing defensiveness, chasing an improvement in price just because market recovers, I think that is not the strategy that one should play. Market rewards investors who back growth, and I think even in large caps, investors will have to look for companies that have got beaten down but still on a growth track. So if the growth track is missing, then and you're just looking to invest purely because earlier the valuation multiple was 35 and now it's 15, it may drop to 10 also. So, I don't think there is any safety in large caps generally. I think the real safety and return are still in growth stocks.
And in these growth stocks, what are the spaces that you're looking at, Abhay?
So some of the spaces, Tamanna, that look like secular growth spaces, which will override geopolitical issues just because of high demand. One is pharmaceuticals. We are seeing a lot of good work being done by large small caps and mid caps. I think the large companies are still focused on generic manufacturing, which I think will have its growth limitations. But then there are a bunch of innovative companies that some of them we have added to our portfolio also recently, which are going to guide for a 25 to 30% annualized growth for next 4 or 5 years. Now, they will look expensive if you look only at the PE multiple, but once you start building in the growth, they're frankly not as expensive. So pharmaceutical CDMO innovation is where we are focused on. Second part is the whole auto component and auto electronics space, where we are seeing Indian companies that are becoming global suppliers. And this includes forgings also, specialized forgings. So I think this is another space that we are quite bullish about. Third, we continue to be fairly bullish about the whole EMS and advanced electronics space, purely from sovereignty stack. Also, because the government is also now focused on making sure that we are not dependent on international supply chains for our basic components. So I think there are opportunities, and as I can see another name on the screen right now, I think electrification of mobility is going to be another big theme, renewables. So I think there are enough pockets for investors to look at, and we are also looking at the same, Tamanna.
Abhay, good morning, Neeraj here. What within the themes for the future, whether listed or unlisted, are you most bullish on? Because one can quickly enumerate that from the looks of things, defense is going to be right up there selectively. Energy transition, you mentioned, data centers is a theme, semiconductors is a theme, and a lot of these pockets, the country doesn't have a choice but to put money to work in order to build capacities. Where are you most constructive on, whether it's listed or unlisted is separate?
I think the biggest one I would say, Neeraj, is the whole semiconductor space, because this is a space, semiconductors very simply, if I were to say, are the brains of any machine. From the laptop that I'm talking, from the screens the viewers are watching this, to their phones, to cars. Every EV has now 80 sensors, which means 80 semiconductors. So our growth, the country's growth, is heavily dependent on semiconductor availability, and unfortunately we are 100% dependent right now on imports of semiconductors. Even the cheap semiconductors, which are 100 rupees or 80 rupees priced, we import them also. So that's the level of our foreign dependence. Now, over next 5 years, a whole ecosystem will develop with government support, with domestic buyers support, that will streamline the supply chain and move a large part of it to India. We will not be able to do it 100%, but my guess is that 50 to 60% will move to India, and this will be a growing demand for our economy. So I am very bullish on the semiconductor. I think there are listed companies that are focusing on the packaging part, the OSAT plants, and in private space there are companies that are focusing on design. So I think this is a huge space that will develop. The second one that will already developing, as you mentioned, is complex electronics for defense procurement. Now I'm not talking about the big guns and tanks and that kind of stuff, but more from national security perspective, the electronics that drive the modern warfare, including drones, autonomous drones, the batteries that charge these drones, the surveillance cameras, the chips that replace Chinese chips. So, once you start looking at, Neeraj, it's a humongous opportunity space that investors should look at and benefit from, rather than getting lost in, large caps.
Okay, fair call. Now, but that is a very bottom-up space. So I asked you for it, and thank you for that answer. Now I'm gonna kind of spread this out a little for the benefit of people who can benefit out of any of these new age themes via the listed space in the mid cap, small cap space as well. Is the second leg of defense, which is not the one that you mentioned, but effectively manufacturing drones, artillery, ammunition, etc., looking very strong too? Because I just read this morning that an unknown Czech company has now gotten a $60 billion deal to supply ammunition to the EU. Similarly, every country, every continent is going to up that ante, right? India is doing that too. Is there merit in trying to own the listed defense space?
Well, I frankly think that if you don't have these names in your portfolio, you're not going to be able to beat the market, because there is already a huge demand. Neeraj, the problem is that our Indian companies, since they are young, they're not able to match up with the demand. But the demand environment is very solid. I think it's a 6 to 12 month of innovation that they need to do, and they will become, they will grow their revenue by 2 to 3 times within next 2-3 years. So I think we are in that zone where the orders are pending because the products that are currently available are not able to match up with the defense services requirements. But I think it's a matter of time. I'm very bullish on the ability of our companies and scientists to innovate. So I think in 6 to 12 months, you will see very strong order books, very strong profitability of these young defense companies.
Right, that's an optimistic note to end this conversation on, Abhay, and let's hope that this period of fatigue and tiredness goes away very quickly. Thanks so much, as always, for taking the time. All right, now on to an important update, and sources are telling NDTV Profit that the Ministry of Power, in consultation with the Bureau of Energy Efficiency, has rolled out a draft corporate average fuel efficiency 2027 norm. And Shrimi is joining in to tell you about all of the details here. Shrimi, what does this entail?
Yeah, so, CAFE Norm 3 has been in works for some time. In fact, they put out the draft norm in September, but a lot of companies, auto companies have been given their suggestion and feedback on the tightening of that norm. And what we are picking up that, the government has now proposed a softer glide path for fuel efficiency norm. And this is under the draft 2027 till 2032 framework. Ministry of Power, in consultation with BIS, has released the draft and seeking a stakeholder comment. So the key change is a more calibrated approach. The government has revised essentially the emission curve, and that will allow slightly higher fuel consumption over a longer period compared to the steeper one which they proposed in the September draft. Now, while automakers had pushed for a flat target, the government has retained phased tightening, but with a softer slope. Now, I will not get into the detail of the slope because it's very technical, but what essentially it does is that the flatter curve reduces the earlier advantage for heavier vehicles and is seen as a more balanced approach across the segment. While at the same time, policy also sharpened its push towards cleaner mobility. Sources says that the EVs and hybrids will benefit from a credit mechanism and will allow car maker to offset penalties or trade credits. In fact, higher emission vehicles may be facing, higher penalties under this new proposal. There is also a relief for smaller cars, with manufacturers selling fewer than 1,000 units exempt from this strict compliance. Do note that norms will be tightened from April 2027 till FY32, and the revised draft signal, of course, a more pragmatic transition, but we need to wait what stakeholders is now going to say on the new norms.
Got it. All right. Shrimi, thanks so much for that. An important story to keep track of. Now, the latest updates we're also getting is that supply chain disruptions are causing white goods manufacturers to have a significant impact on the way that they're doing business and the pricing that they're doing. Mahima is joining in to talk about what's driving the costs higher and how companies are responding, because there have been price increases. Mahima?
Right, Alex. So overall, if you take a look at how it's impacting the entire space, right, because of the conflict, there's crude price and metal prices which is going up, and plus there's supply chain disruption that is altogether putting pressure on all of these companies when it comes to the raw materials and components that they import. There's also weakening of rupee, which is also overall impacting the cost of components for AC that are being imported from outside. And on top of that, there's new energy efficiency norms that are adding to further costs of production. So overall, all of these factors combined together are pushing costs for all of these white good manufacturing companies up. In terms of how key raw material prices have fared in the last 1 month or year, Copper prices have gone up by 35% year-on-year basis, and aluminium price around 29% year-on-year basis. The HEPE prices have spiked almost 46% month-on-month basis in March 26 itself. What companies are doing because of this is that all of these companies are taking price hikes anywhere between 3 to 15%. LG and Hitachi have already gone ahead and raised their AC prices by 5 to 7%. Average price hikes is around that 15% mark, so at the higher end of the range that I mentioned of that 3 to 15% mark. In terms of how category-wise hikes have been taken, fans have been around 5%. RAC has the maximum price hike coming in between 5 to 15% because a lot of that is being imported. So it has both effect of the raw material prices going up plus the import cost as well. Washing machines and refrigerators in that range of 3 to 5%, and water purifiers, air purifiers as well as vacuum cleaners anywhere between 5 to 10%. In terms of companies that get impacted because of this includes Blue Star, Voltas, LG Electronics, Hitachi, Crompton Greaves, Consumer Electricals as well as Whirlpool. In terms of what management has already told so far, Blue Star did speak to NDTV Profit and said that the company sees a possibility of hike anywhere between that 10 to 15% mark and will be majorly transferred to consumer. The impact of this will be overall on the volumes as well as margin. If it's completely passed on to the consumers, volumes will get impacted, and if it's not completely passed on, margins will get impacted. More likely there are price hikes coming in going forward in the coming quarters as well. Largely Q4 will not see a lot of impact because they are just sitting on 6 to 8 weeks of inventory, but largely the impact will be seen when Q1 FY27 numbers come out. So this is the overall view of how this entire West Asia conflict is impacting the entire white goods space.
Thank you for that, Mahima. And, it's just a bad time. Last year, AC makers were having a bad time because the monsoons came in early, so there was less demand. This time, it's input costs going up, so some of the GST sheen completely wiping off. And this is, we don't know the entire extent, right? Yeah. Steel companies, copper makers, it's going to be across the board as this carries on. Well, for now, I don't know, we're trying to look at the light at the end of the tunnel. Yeah. You can maybe look at it this way, that at least markets are off its lows as we close off India market open. But the pressure still remains one way or the other. Another reiteration by the US President that the blockade will take place 7:30 p.m. India time for anyone coming in and out of Iranian ports. So we'll have to wait and see.
Just before him going to sleep should be interesting. Let's see what happens in 8 hours. But yeah, I think that's aptly put. For now though, we call it a day on this leg of a very interesting India market open. From all of us who put this show together, thanks so much for watching. Stay tuned though. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani. With me as always is Puneet Zaveri. Before we start taking your stock related questions, which by the way you can go ahead and ask on the numbers that are flashing on your screen up there. You can either WhatsApp us or call us with all your stock related queries and we'll be more than happy to answer them. But let's take a quick check as to how the markets are doing right now. And Alex just went by and he just said this one thing which we all can relate to right now, which is it's Monday the 13th instead of Friday the 13th. Friday we did see good moves coming in for the markets, but unfortunately it's Monday the 13th today. Right now we're trading with cuts of about 1.4 odd percent, Puneet, as we speak.
He did say that ideas don't have monopoly, so it's a good
No, but he deserves that credit. And slightly off of course from its day's low point for the Nifty 50, but still trading with cuts of about 1.4 odd percent. A downtick for around 330 odd points is what we're seeing on the Nifty. Let's try to pull up the heat map to see as to what are the counters that are putting that kind of pressure. You have Eicher Motors, one of the top losers. So I think Puneet, autos today is finally seeing some profit booking. There's Eicher Motors, Maruti Suzuki, which is down both almost 3.8 and 3.7% each. There's Interglobe Aviation, Shriram Finance, which is again taking a knock today. I think Shriram Finance is just that one stock that moves in the direction of the market, but a lot more than what the benchmark is doing, right? SBI, Geo Finance, HDFC Bank are some of the counters that are also losing grounds in that range of 2 odd percent. But the two counters that are holding up really well is Adani Enterprises, which is up 2.5%, HDFC Life, which is also doing fairly well, up 2%. The bank Nifty also, let's try to pull that up, is trading with a cuts of about 1.8 odd percent. Now in that 54,800 levels is what we're seeing. 1,000 points for downtick is what we're seeing on the bank Nifty. Still slightly off from its day's low point, but still trading in the red. Let's quickly pull up the advanced decline ratio and see as to how the broader end of spectrum is looking like, because overall I think even the broader end of spectrum is under pressure, but doing slightly better as compared to where the benchmarks go, and there is narrowing of that chart, Puneet, as we speak.
Right, and that largely will be the hope from today's session, that we can hopefully come back, recover a lot of those losses that were at the start of the trading session. The expectation that at the start of a 300-point downtick on the implied open because of what has happened over the weekend, and largely continuing to see that at the moment. And as you rightly highlighted, we're seeing correction on the auto pack, and realty has also reversed all those gains. So within the sectoral impact, you can see that the Nifty Realty, which was a gainer over the last 3 days, so the honeymoon period lasted only just a couple of days actually, and then we've yet again come back to being impacted from the global factors. So unfortunately, the market heat map showing you every sector in the red right now. From the morning, you've seen some buying actually on the Nifty Realty, which was the top loser. So, but the PSU Bank and Auto, Nifty Bank all down in trade today because of that. For Shriram Finance specifically, you had JP Morgan initiate coverage also with a target price of 1180, but that hasn't done too much for the stock as well today. In terms of the mid cap and the small caps, they were doing well at the start of the trading session. Nifty Bank continues to be under pressure today yet again. Impacted by the PSU stocks and the selling there. The mid cap 150 is now below the 1% correction mark, so that's a good start to Ask Profit at least. And the small cap also recovering much better at this point of time, down just 0.8% now. So hopefully over the next 3 to 4 hours we'll be able to recover a lot of those losses yet again. But let me welcome in Saurabh Jain now, as well as Gaurav Sharma on the technical side. Saurabh, of course, of SMC Global Securities, Gaurav Sharma, Associate VP and Head of Research at Globe Capital. Gentlemen, both of you, thanks so much for joining in. Before we start, there's this one question which we are taking on from Friday, where we because our fundamental guest on Friday didn't have a view on Fino Payments Bank. But Mahima, why don't you take us through that query? It's a very interesting one, and especially at a point of time of a stock that's been in the news flow for a lot of variety of negative reasons. But what was that query from Sarath?
Right. So basically, his query is on Fino Payments Bank. What he's saying is that he's holding 10,000 odd shares at the levels of 300, and he says that he's purchased this from a slightly long-term perspective, hoping that there will be some recovery. But I think he's gone ahead and purchased this at the highest level because he's sitting on a loss of around 16 lakh rupees right now. Saurabh, a lot of news flow has come in, right, with regards to the management getting arrested, etc. And because of that, we've seen the stock near more than half since then, right? Considering all of this news flow and fundamentals of the company, what would you advise our viewer to do right now? Sarath wants to know, because 16 lakhs is not a small amount of loss, right?
Hi, good morning. See, it is not prudent to put such a huge amount of money in a small cap stock like Fino Payment Bank. Now its market cap stands around 1,000 crore. Apart from the corporate governance issues, the financials are also not good. If you see, there is a kind of a degrowth in their bottom line, and the top line is not growing at a pace which market likes to see. So that is why the stock is tanking down. On the valuation front, yes, it looks comforting, but when the things are not moving the way it should, the valuation should get suppressed, can get suppressed more from here also. So I think as of now, since he is holding for the long term, I think the last 2-3 quarters were not good. Corporate governance issues are there. So I think he should wait for the March quarter earnings and then take a call. Maybe if the results come in the way they were coming, and the issues with the respect to the management remains the same, then I think he must opt to get out of the stock.
So, would that be the strategy, Saurabh, even though Q4 earnings come in, whatever the commentary comes in, because of the quantum of the loss, would that be the strategy? Yet again, there will be a difficult turnaround, so averaging wouldn't be the right strategy. Is that the correct assessment?
See, averaging can become the right strategy when you see a turnaround. See, market gives, once one sees the PE, it is you can call it price to enthusiasm. Enthusiasm usually comes from the earnings growth, and that is not the case here. So here the price earnings are getting compressed. So there is no point in averaging out. And when the things are not moving the way, see, it is a game of a demand supply. When demand is not there, supply is evidently there. So in my opinion, I think it is always prudent to get out and park your money maybe in the banking space, for example, in the names like Indian Bank, or for that matter Canara Bank.
All right, so that's the holistic view coming in on Fino Payments Bank. Let's move on to the next one, which is coming in from Nitish, who's writing us from Andhra Pradesh, asking about NHPC. He wants to know the right time to enter this counter from a short-term perspective. Gaurav, a very good morning to you. I'll come to you on this one. Your view on the charts for NHPC?
Hi, Mahima. Morning. So, NHPC has been an underperformer in a way. But the good thing is that the stock is trading sideways from quite some time. All throughout the Iran conflict, this stock has remained in a very narrow range, which in a way should be taken positive. Now, as far as the entry is concerned, momentum is most warranted here. So wait for a rise above 80, then enter the position, take a stop at 75 at that point, and look for targets close to 85 and thereafter 90.
You, Gaurav, and welcome to the show. Very good morning to you as well. But let's go across to our next query. And viewers, you can call us on the number that's flashing on the top of the screen. Speak to us as well as the experts directly on your stock-related query as well. You can also WhatsApp us if you haven't already. Both the numbers flashing on the top of the screen. Next question is an interesting one. It's on Acme Solar by Komal from Jaipur. She's holding 1,500 shares bought at 300 rupees per share and asking what she should do now with this counter. Should she exit or and buy later, or continue to hold at this point of time? Stock's trading at 283 and up 5% today, possibly up today because of HSBC. They've initiated coverage on the stock with the buy rating as well. But Saurabh, on Acme Solar, any view for Komal?
See, our view is positive on the power generation utility companies and Acme Solar we are not covering, but yes, the space is looking good. And some of the stocks which are looking good from the space are NHPC and NTPC.
Okay, all right. The next one is coming in on GE Vernova TND. Our viewer Jeet from Kolkata is asking about this. Wants to know if this is the right time to enter or shall I wait for some more time? Gaurav, your view on the charts for this one?
See, if it is for a short-term position, then he may actually consider entering at these levels gradually, buy some point here and add up on the rise, because as I've been mentioning here, momentum is most needed. If the stock is into a buying momentum, it will run up towards high level. Otherwise, it will either trade sideways or will fizzle down in these market conditions. So buy some quantity here and add on a rising momentum.
Got that view, Gaurav. The next question that's coming in is from Sunny from Karnataka, and his question is on Glottis. It's a stock that every investor would just want to forget from their portfolio at this point of time, a rank underperformer in that sense. And Sunny is holding 1,000 shares bought at a 75. Now, I think the IPO price was roughly around 120, so he's bought it even after the correction, and even post that, Glottis has slipped into the red and continued to do so. Now, any view here, Gaurav, because on the charts, I know it's a very limited time period, but what should Sunny do? Because a lot of investors do send us this query from time to time. Any evidence now of a sideways momentum on Glottis?
Puneet, hi, morning. It is a very small cap company, just about 550 crore of MCAP. Very limited data, and since whatever data I have, it is clearly in a downtrend. We don't track the stock, so I don't have a holistic view on it. But as far as charts are concerned, sell on rise is a strategy that should be adopted. Going ahead, I see the stock facing safe resistance around 61, 62 odd levels, so he should consider offloading his position around that mark.
Okay, all right. We've got our first caller for the day. I think Datta is calling us from Bengaluru. Very good morning to you. What's your query about, Datta?
Hi, good morning. I'm thinking to take a fresh entry in the stock RR Finance. I just wanted to know, is this the right time to enter to this stock? I am looking for a long time, at least for 1 year.
Okay, got your question. I'll take this up with Saurabh then. Saurabh, your view on Aadhar Housing Finance?
See, I think what we are looking in the real estate space is that the growth is tapering off, in fact, in the luxury segment also. So some kind of a slowdown is being witnessed in the real estate. And for that matter, I think housing finance companies' stock price are also suggesting the same. I think there is, I think from the long-term perspective, from a year or so, I think it should be avoided. Rather, I would suggest him to go for the pure banking play, the names I suggested like Indian or Canara.
Got the view, Saurabh. But the next question coming, it's an interesting one from Aditya from Tamil Nadu. His question is on LIC. Now, he's bought it at roughly 740 rupees per share, holding over 500 shares. And Saurabh, actually, it's been in a downtrend in this space, and largely because of the 96% holding by the government, everyone just anticipating that selling to come and then probably looking at the stock. Today, there's an important board meet considering bonus issues, so could be the right step in that direction. Would you suggest him to exit, hopefully, in that up move that you might see because of the bonus if announced today? What would be your view?
I think you're absolutely right. I think one should consider to get exit out of it. And moreover, what has happened because of the new tax regime, the incentive to save has also got diminished. Earlier people used to park their money in the traditional plans, traditional life insurance policies, which these companies used to enjoy, in which these companies used to enjoy good margins. But that is not the case of now, as of now. Now people are opting for the pure, risk-based plans. So I think going forward, the business will also go down, and that is what the stock prices are reflecting.
Okay, all right. So that's the view coming in on LIC, but it's time to take a look at the F&O space and, of course, what the setup is indicating right now. And we have Sharad joining by, as always, to give us perspective on that. Sharad?
Thanks a lot, Mahima, for that. And as we are celebrating last week, and now you're seeing a big reversal. at play, and of course some positions will be also in focus. Remember, there is a volatility also at play. Tomorrow trading holiday also. Only one green is there in the Sensex, that's NTPC there, but sell-off happening across the board, be it the FI heavy, IT and the banking space as well. And of course the Reliance and Interglobe Aviation also negative news flows for both of these counters. BankX also the story remains the same, but nevertheless you could say that the Sensex setup is looking slightly better than BankX, but nevertheless both of them are seeing concerns. The VIX also jumped up. The power related stocks are doing really well. Adani Enterprise, that's up 2%. Tata Power also seeing a good buying in this kind of a market, and of course there's a standard disclosure for Adani Enterprises. But apart from that, short covering includes the life insurance space, HDFC Life and JSW Energy making it to the list, but it's not very convincing trade, to be honest. Long unwinding for SBI and Samvardhana, while shorts, you could say around 60 to 70% of the F&O space is filled with that. And let's just see where the fresh shots are coming, and that's where we see Eicher Motors. That stock is down 4%, good sell-off in the auto space, and also Bank of India, PSU banking space also is taking a hit. So yes, today we are seeing much more red in the day's trade.
Got that view, and thanks so much for that, Sharad. But let's go across to our next caller now from Hyderabad. Ayn Reddy actually has this stock query for us. Mr. Reddy, I hope I'm pronouncing your name correctly. What's your query? Welcome to the show.
Hello, sir. No, thank you, and good morning to everyone. And hope this day will turn green at any point in the next few minutes.
That's the hope.
Well, that'll be the hope. You're all cross fingers at this point of time, Mr. Reddy. But go ahead with your query.
Yeah. So my query is regarding Aether Energy. It's one of the electric mobility players of India.
Right.
Unlike Ola Electric, it has been doing very great, and I've been constantly trying to take a position in Aether Energy since a while.
Right.
But the valuation comes to it doesn't seem to come up at any point, despite the market fall and despite the purchasing part dip within the Indian domestic consumer space due to the war and other tensions. I haven't been seeing any fall in the stock price. So I'm feeling this FOMO, that fear of missing, of taking a position in this stock. But today, after this update by the Indian government, the push for electric vehicles,
right,
and pollution guidelines and all, I've been trying to take up a position, a sizable position of my portfolio in this. And what do you guys think?
So would this be a long-term bet, Reddy, or a short-term one?
I'm guessing I'm putting a long-term bet, nothing.
Long-term bet, got it. Well, firstly, Reddy, of course, the big difference between both Ola and Aether, the pure play EV manufacturers, has been the sales, because it's been a completely divergent picture, and that's leading to what you're seeing on the screen as well. Stocks hit a 52-week high today at 903. But Saurabh, from an IPO price of 315, just I think almost a year back, it's been a rank outperformer, right? And I think the Delhi EV policy coming in, we'll see, of course, the viability of that, but probably having a trigger on a few names today in the auto space. But do you think the valuations are now a little stretched for Aether, and maybe some more clarification, or how do you see it? Because on the fundamental side, the scooter sales are rocking through, right?
You're absolutely right. The valuations are on the higher side and company is still not profitable. The point is why the stock has become so expensive, because it is the only play available in this space, because other players like Ola are doing nothing, and this is the only company which is marching ahead with their sales and the expected growth rate. The valuations are really high, and in fact, in my opinion, they are reflecting the profitability which is yet to come in the next 3, 4, 5 years. So probably there may be a case where you will see the stock price keep rising or keep staying firm as of now, and when the earnings will come, then we might see the compression in the multiples. I would not suggest to park more than 2-3% of your portfolio in a stock where the valuations are at such high.
Okay, all right. So that's the view coming in on Aether Energy. The next one is from Zakir, who's writing us from Dubai, asking about Rights Limited. He's purchased 220 at the levels of 220, and 1,000 shares is what he's been holding. Wants to know as to what should he do, whether to hold, average, or sell this counter. Gaurav, I'll come to you on this one. With regards to the charts, go for rights. What's your view?
Well, still the stock is trading very weak. From a short-term standpoint, a sell on rise is the strategy that I would advocate at the moment. There are multiple resistance plays around 220, thereafter 225, 230 zones. So our viewers should gradually utilize these bounce back opportunities to offload their positions.
Okay. All right. We've got our next caller, Shiva. I think is calling us from Hyderabad. Shiva, very good morning to you. What's your query about?
Hey, good morning. My query is about HDFC Bank. And I bought around at the range of 837, 300 shares. So I want to get the medium-term opinion from the experts.
Okay. Just want to understand, Shiva, did you see the charts while buying it, or did you see the fundamentals? And can you define medium-term for me?
Around 6 months, I looked at the fundamentals.
Okay, 6 months. Okay, all right. I try to get the chartistic view first, because 6 months to give a fundamental view will be slightly difficult. So Gaurav, I'll come to you on HDFC Bank. What are the charts indicating right now? We've seen some buy flows coming in when it comes to mutual funds this quarter.
No doubt, when HDFC Bank tumbles like this from 1,000 to close to 700, the fund flow will certainly be there. I see a further rise coming in towards 850 levels in the immediate near term. Thereafter, if that sustains, even levels close to 900 are possible. So from a short to medium term standpoint, he can hold on to his position.
Got the view, Gaurav. The next, a couple of questions coming in on the EMS space. Firstly, from Ramu from Hyderabad. He's holding shares of Keynes Tech, bought at 4712, Saurabh. And he's holding roughly 39 shares. So he wants a 3-year view on the stock. What would you recommend? I also just want to club in another question from Prashant, who wants to enter this space. And he's tracking Dixon as well as Amber, apart from Keynes Tech. So what's your view on both of these questions, largely in a similar space? Because for Prashant, he wants to enter a stock, and what would be an ideal pick now, according to you?
I think because of the high valuation, all these stocks are now in the last few months, they have not performed well. Actually, they are underperforming and cooling off. And these companies are doing business on a very thin margins. And now with the commodity cost is on the rise, the market participants are seriously wary about the future prospects with respect to the growth and, of course, the sales numbers too. So the valuation comfort is not there, and in fact the earning pessimism is also coming up. So my sense is it is better to avoid, at least look for this quarter earnings and then take a call.
Okay, so that's the view coming in on all of these names. I think we've got Ayush calling us from Hyderabad. Ayush, a very good morning to you. What's your query about?
Hey, hi. My query is regarding Vikram Solar.
Okay.
So basically, the fundamentals for this company looks good. But the only concern is that they have very high pledge promoter holdings. So, and I'm planning for a long-term bet. So I wanted to know, would it be a good idea to invest in this or not?
Okay, all right. Saurav, I'll come to you on this one. Vikram Solar, any view?
See, it is a relatively new listing, but the growth prospects is quite good for the company. On the valuation matrices, if you look, the profitability is growing at a good pace, and the valuations, if you look at the multiples, trading around 17 times to trailing earnings and about twice to book value, looks quite comforting. If you really have a long-term view, then you can buy in a staggered manner.
Buy in a staggered manner on Vikram Solar is what Saurav recommends, but viewers as well as Saurav and Gaurav, it's now time for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in now on Colgate Palmolive, bought at 2180, Gaurav, by Lalita. She wants to know what should she hold, sell, or average down now?
Hold with a stop at 1850. Consider booking around 2050, 2100.
Okay, the next one is on Bellrise. Happy Mohanty from Bhubaneswar is asking this question, Gaurav. He wants to know if this is the right time to invest into this counter. Your view?
The stock is still at the top. Wait for a dip close to 185, then enter.
Rajiv from Delhi has bought into Gale at roughly around 149 since June 2025. Saurabh, what should he do with the counter now?
I think it would be prudent to exit.
Asian Paints is the other one. Sai from Hyderabad wants to know the ideal price range to kind of invest into this counter from a long-term perspective. Saurabh, your view on this one?
I'll tell you price range, but yes, you can invest.
Sai Karthik from Dallas, Texas, who was a regular viewer, has been away from the show for a while now in terms of questions, but he wants to buy into Reliance Power now. Gaurav, would you recommend that trade for the next 6 months?
Prefer to pass it at the moment.
Okay, Nancy wants to know if she can go ahead and add any of the auto anch names in her portfolio from a 2-year perspective. Uno Minda, Sono, BLW, Madhusumi are some of the names that she's mentioned. Saurabh, any of these that you like, or any particular counter that you like in specific?
I think you can go with the Uno Minda and Sona BLW.
KSH International bought at 450 by Akshay. Saurabh, by any chance do you cover this counter, now trading at 533?
Good to avoid.
Okay, the next one is on CCL products, bought at the levels of 1074. Can I add more at the current levels? V. Murli from Bengaluru wants to know. Already holding 200 shares. Gaurav, review on the charts?
One of the finest performers in the FMCG space. Yes, can consider adding the position.
Soumya from Bangalore wants a view on Info Edge. Gaurav, he holding at 1354. Now at 985 odd levels, would you recommend to average down?
Let's say utilize bounce to exit your position towards 1150.
Coforge, is it a good time to continue to hold or sell? 540 shares bought at the levels of 1235. Gaurav, your view on the charts?
See, from a short-term perspective, counter rally towards 1400 is quite possible. Hold the position, take stop at 1150.
Okay.
Tata Chemicals bought at 666 by Mr. Bhalla, who is a regular viewer. He wants to know, Gaurav, if she should exit the counter now.
Wait for some more time. If the stock surpasses 335, then hold. Otherwise, take a stop at 315.
Okay, HAL bought at the levels of 5050. 1000 shares is bought. Siva from Amravati is holding. Wants to know 6 months view on this one. Gaurav, your view on the charts?
Yes, a bounce, further extension to this up move towards 4500 is possible. Hold.
All right. Okay, so that brings us to the end of course, the first rapid fire round. But viewers, it's time to limit to a very, very short break, but we'll be taking more questions on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do start sending in your queries. You can also call us on the landline number that is flashing on the top of your screen. We still have Saurabh with us and now Ajit Mishra, SVP Research at Religare Broking, now joining in. Ajit, good morning. Welcome to the show. It's a Monday. You come in at 11 and the market is down yet again. I think it's just a pattern that we've seen over the last 5 to 6 weeks. But do you think that the current levels on the benchmark now below 23,800, but is that the long-term support still, even though we continue to break it occasionally? Is that the level to watch out for?
Yeah, good morning, Puneet. So, Puneet, last week was phenomenal, means 6% kind of a gain for benchmark indices across sector participation. Today, again, we are slightly in the back foot. The gap that we had in crude is got filled, means from 103 to $92, something that crude had witnessed a dip, and again we are back to that area. So that's basically capping the sentiments. But the good part is that today, at least on the weekly expiry day, Nifty is trying to defend the 20 EMA mark, which is around 23,500 levels. So as long as we are maintaining this level, possibility of Nifty continuing with sideways to positive stance seems high. Because apart from the global factor, the earning season has started and market is taking clue from that also. So rate sensitives are still holding strong after the initial downtick. So overall bias looks sideways to positive, but yes, the upside seems capped also, means close to around 23,800 to 24,000. That would be the area where Nifty might face resistance in intraday trade today.
Resistance at that level, most certainly to watch out for today, according to Ajit. But let's go across to our caller for today now, again from Kerala. Jijo has a stock query for us. Jijo, good morning. Welcome to the show. What's your query?
Good morning, team. My query is I am holding Sona BLW 1,000 shares at average of 462.
Okay.
Okay. So I know there was some issue with their management and all.
Right.
But I don't know it was still persist. But I need to know next level and for the long-term view.
Okay, a long-term view. So, got it, Jijo. Well, you bought it at a correct level, Jijo. You almost had gains of almost 1 lakh rupees. Have you been averaging down, or did you buy it for the first time at that level?
Actually, I was holding from 500 something.
For 500, okay. So you averaged down. Okay.
I average, yeah.
Got it. Well, prudent in this case, Jijo. Let me go across to Saurabh now. Saurabh, on Sona BLW, we've seen today, of course, the EV move, ramping up the shares today, but largely has been a disappointing last few quarters. What would you recommend Jijo to do now?
I think he should hold for a long term because the stock has corrected and the valuations have also subsided, and now the EV play is looking good for the company. The company is doing quite a great job in this space, and they have many products in this space. So I think going in the future, they will surely enjoy the growth going forward. So my take is a hold.
Okay, all right. The next one is coming in from Nivedita, who's writing us from Chennai. Wants to know if this is the right time to start buying Balu Forge at the current price and valuations, and this is from a long-term perspective. So I'll stick with you for this one. Your view on Balu Forge?
Not in coverage, won't be able to comment.
Okay, Ajit, any view on the charts for Balu Forge? Do you think these are the right levels to kind of, start making entry in staggered manner?
So Mahima, it's been almost like 2 years of sideways to negative trend, I would say. Means from 850 to 400, and now we are seeing gradual recovery. So yes, we are still very close to the lower band. So possibility of the stock inching towards 550, 560 seems high. So she can consider accumulating in staggered manner in this range of 400 to 450, and positionally for any fresh momentum, the stock should surpass this level of 550. Then only we'll say that the corrective phase has ended and the stock is set for the next leg of the up move. So during this corrective phase, she can consider accumulating this stock in the mentioned levels.
Okay, all right. So that's the view coming in on Balu Forge. We've got our next caller, Hari Krishnan, I think, is calling us from Bengaluru. A very good morning to you. How can we help you today?
Madam, I am Hari Krishna. I am from Hyderabad, madam.
Okay.
Okay,
you're from Hyderabad.
Yes, madam. I have Chamal Fertilizers share from at 880 at the price of 471, madam.
Okay.
Is it hold or exit, madam?
Okay. What is the time horizon that you're looking at?
Madam?
What is the time horizon that you're looking at to continue to hold this counter?
Oh, 1 month, madam.
1 month. Okay. All right. Ajit, I'll stick with you for this one. Chambal Fertilizers, what are the charts indicating for the next 1 month? His buying price is 471. The stock is currently trading at 450.
Yeah, so Mahima, what we are seeing that after this sharp correction from the record highs, it's been almost like 4-5 months of consolidation in this span, 475 to 400. So which is closer to its the upper band is around its buying price also. At present, indications are mixed, means because after retesting its long-term averages, we are seeing again the stock is witnessing a bit of a profit taking. The good part is that the volume is missing during this corrective phase. So as of now, it's a hold, means 425 is the area basically where we have the immediate support placed. But for fresh momentum or any kind of up move, we need a decisive close above 475. That's the long-term moving average. So the moment we do that, probably 510, 520 is something the stock might attempt. So as of now, it's a hold with 525 as a stop loss.
Got that view, Ajit. And that's coming in on Chambal Fertilizers. Let's pull up another counter, Reliance Industries. And Pramod from Bengaluru has 37 shares of the company, bought at 1371. Now, Saurabh, he wants a 3 to 5 year view. The expectations for Q4 are bleak in terms of at least revenue growth. But what would be your long-term view on the stock now?
Long-term view remains positive. I think it is a kind of a portfolio stock. Going forward, I think the carving out of subsidiary will be beneficial for the shareholders too. I think there will be value unlocking also. So from the long term, I think you must hold the stock.
Okay, all right. Attractive buying price, to say the least, I think. Definitely sitting on good profits. But moving on to the next one, Pramod is writing us from Bengaluru. Sorry, this question is already done. The next one, I think we have a caller. Avi is calling us all the way from Australia. Avi, how can we help you? What's your query about?
Hi, good morning to all of you.
Good morning.
So I have got 1,000 shares of Senco Gold bought at 284 rupees. So I want to hold it for 1 year. So what could be the target?
Okay, got your question, Avi. I'll stick with Saurabh for this one. Saurabh, he is sitting on profits of around 38,000 odd rupees. Would you recommend him to continue to hold Senco Gold for the next 1 year, and a rough estimate of target price if you can give?
I think it will be difficult to give a target price, but yes, the stocks, many jewelry stocks have corrected a lot when the prices were going up, gold prices were going up, and now with the cooling of prices and the business updates which are coming from the jewelers, which are looking good. I think this quarter also the Akshaya Tritiya is coming up. The expectation is that the companies like Senco Gold will do good business. So in my opinion, with the valuation subsided, the expectation of a good growth coming in because of the now the price are oscillating, because the gold prices are oscillating in a range. I think the scene look optimistic from the investment point of view. I think he should hold for 1 year.
Hold for 1 year on Senco Gold is what Saurabh recommends. But the next question coming in on Pace Digitech, it's a recent listing in the EPC space, but Kiran wants to enter the stock now. Would you recommend that, Ajit? I know it's a recent listing, but any view on the stock now?
So Puneet, the trend looks negative, means the stock has made multiple attempts to reclaim at least the short-term moving average, but on every attempt we saw that the selling pressure re-emerges. So again, we are seeing a similar attempt. So let the stock stabilize above 160-65 levels decisively, then only you can consider for a short-term rebound. But in case if somebody is having any existing position, 150 on the closing basis should be the stop.
Okay, Inox India is the next one. Srikar from Hyderabad wants to know the right level to enter into this counter. Ajit, I'll stick with you for this one. Inox India, what are you seeing on the charts?
So my very swift move in the last 2 trading sessions, means from 1220 to 1400. The volumes are very strong. We are inching towards the record highs. So tone looks positive, but after the sharp surge, I feel that any dip toward, let's say, 1360, 1340 zone, that's a good area to look for fresh buying. And basis the previous consolidation range, probably around 1520 to 1580, position should be your target zone. For the interim, stop should be at 1220.
The next question coming in is on Hyundai Motor India. Now, a viewer, Animesh from Kuala Lumpur, is writing to us, and he's bought it or was allotted shares at 1960. Stock's trading at 1765, but look at the 1-year chart and the 2-year chart of where it was listed back in October of 24. Now, Saurabh, we've seen 2 consecutive years of decline for the company in the domestic market in terms of growth, now slipped to number 4 in terms of market share as well. So not a lot that's going on for the counter now, and hence probably we've seen that correction all the way up from 2,800 rupees per share. What would be your recommendation now? Is it largely being priced in all the negatives? Should he continue to hold? What would be your view?
I think it was a bit quite negative for the investors that the company has now come to the 4th position, and now with the commodity cost climbing up, there is an apprehension that there can be a case of margin erosion, because the buying power lies with the consumer, not with the OEMs. They'll not be able to pass on the entire hike because of the competition and the languishing sales. So there will be added margin pressure and the profitability will be further lower. So that is why I think there has been a correction which has been witnessed. I think it is better to get out.
Okay, so that's the view coming in on Hyundai, and better to get out is the view coming in from Saurabh. The next one is coming in on CleanMax. Our viewer Shrikant from Bengaluru is asking, I hope we have not taken this question.
No, we haven't.
Is asking this question, wants to know if this is the right time to make an investment into this counter. Saurabh, any view on this one?
Won't be able to comment.
Ajit, enough data on the charts to give a perspective?
So very limited data,
Yeah.
but basis what we are seeing on the price action front means 920, 930, the hurdle zone, and downside this stock made a base means attempt was there, means around 800, 810. So it's basically a recovery in case if you are, if the view is short term, you can continue to stay put. 870 should be your strict stop, in the interim. 940, 960, the record high zone should be the area where one can consider booking profits.
Probably buzzing on the back of that note also from HSBC initiating coverage along with Acme Solar, which we took at the start of the show. But another caller from Hyderabad, Vidya, has a stock query for us. Vidya, good morning. Welcome to the show. What's your query?
Good morning, all of you. I'm holding 150 shares of RK Forge, bought at a price of 530 rupees. I want to know the perspective for 2 to 3 months, like what could be it up to maximum level.
Got it. Well, Ajit, on RK Forging, any view for the next 3 months?
So Vidya has done one thing good, that after almost like 50% of the retracement, she bought it, and now at least the downside seems capped. Means the stock is still been oscillating in this band of around 450 to 600, but the damage seems capped. And in case if the stock manages to cross the previous hurdle around the 580, 600 zone, then probably we may see a next leg of the recovery, which can help the stock to inch towards 650, 680 in the near future. So she can continue to hold her long position with the 480 as a closing stop loss.
Okay, all right. The next query is coming in on Cupid. Khurshid from Delhi is asking this. He's got 758 shares bought at the levels of 90 rupees. Wants to know whether he can continue to hold, add more, or maybe sell at the current levels. Saurabh, he wants to know the fundamental view on this one. I think the last that it touched 104, if I'm not wrong, on 1st Jan or something, which was the highest point. Since then, it's come down a tad bit. Your overall view on this one?
I think in my opinion, on the valuation side, it is quite expensive, trading 30 times to book value and 150 times to its trailing earning. Moreover, if you look at the latest earnings, there has been a degrowth. My opinion is better to get rid of.
Get rid of Cupid, what Saurabh recommends. The next question coming in is on Olectra Green Tech. Now, a viewer, from Kerala actually has bought into this counter at 1651. Stock's trading at 1219 now. But Saurabh, what would you recommend? He's holding 21 shares. We've seen a management change happen over the last 2 to 3 quarters, and some salience come in that sense in terms of production being increased. But is it too expensive at this point of time? What would you recommend?
I think after the correction, it is not that expensive, but yes, there has been a markets. Investors want to see the performance on the operational side, the operations. I mean, on the sales and the profitability side, which is still missing. I think it is better to wait for a quarter or two.
Okay, the next one is on BSE. Likhit has bought, I I think 40 is the quantity that he has, and he's sitting on profits of around 37%. He's bought at the levels of 2410. Wants to know if he can continue to hold or sell at the current levels and book profit. Ajit, your view on the charts for BSE, further upside is something that you can expect?
So, Mahima, we have only a handful of stocks which are trading at the record highs, despite the overall negativity that we are seeing in the market. So, definitely he should, in case if the view is even for short term. The momentum is on positive side. Yes, we may see a breather after making a new record high, but basis the current structure, possibility of stock testing 3500 seems quite high. So around that area, he may consider booking at least partial profit. In the interim, 3120, that should be his stop loss.
2120 to watch out for on BSE, at least for stop loss. But let's go across to another caller from Hyderabad. Supriya has a stock query for us. Supriya, good morning. Welcome to the show. What's your question?
Good morning, sir. Sir, I have IRB infra and 10,000 in quantity, and 23 we have bought it.
Okay.
And whether to hold or dispose, sir?
And will this be a long-term or a short-term bet, Supriya?
If it is long term, what will be the situation? Or it is a short term, what will be the situation?
So can you hold it for more than a year, Supriya?
Yeah, sir.
Okay, got it. Saurabh, we've seen a decent portfolio being built by IRB Infra, but the return ratios are missing from there. But any view on what you can offer, Supriya, and in terms of positioning, sizing as well?
I think view remains negative on the IRB Infra. From my take, is better to get out.
Okay. All right. So that's the view coming in on IRB Infra. The next one is coming in from K. Parthasarthi, who's writing us from Chennai, asking about Gujarat Pipavav. He's holding 100 shares, bought at the levels of 200. Wants to know whether to hold, add, or sell this counter. Ajit, your view on the charts for this one?
Again, Mahima, very strong structure, stock at record highs, consolidation range breakout. So everything looks conducive for this prevailing trend to continue. Basis the past consolidation, probably around 320, 330 is something that the stock might attempt in the next leg of the up move. So with stop at 270, can continue to stay long.
Gujarat Pipavav is the next stock query that we're taking from K. Okay, you got this query covered. Got it. The next one, it's from Jyoti CNC. Stocks down 11 to 12% in trade today. On the back of a corporate restructuring, and French authorities actually taking some action against one of its international subsidiaries, down 13% now as we speak. And our viewer wants to know, Deepak wants to know if it's a good time for fresh entry. And we always get such questions on days when the stock's been tanking because of any particular update. But Saurabh, do you cover this counter by any chance? If not today's update, just what would you suggest Deepak to do?
I think from the last 1 year, the stock has been underperforming. It is cooling. It is coming down only. And when the corporate governance issue comes up, I think it is better to wait till you get clarity. My sense is better to avoid.
Okay, the next one is coming in on Ipca Labs. This is from Angad, who's writing us from Indore, asking whether this is the right time to make an entry into this one from a medium-term perspective. Ajit, do you have a view on this one on the charts?
So, Mahima, very tight range consolidation around the record highs. But since his view is medium term, definitely he can consider. On the short term basis, the stock is hovering around long term averages. So the downside seems capped. And anyways, basis the prevailing consolidation also, 1380, 1350 is a very strong base area. So considering that, it's a good area to accumulate. But for fresh momentum, 1620 is the barrier. So once we cross that, then probably we may see a next leg of the up move. So he can start accumulating even at current levels.
Got that view, Ajit. So that's coming in now on Ipca Labs. Let's go across, take our next caller from Hyderabad, and Shweta has a stock query for us. Shweta, good morning. Welcome to the show. What's your query?
Hi, very good morning, Sunit. I'm holding 361 shares at 1091 price. I would like to know, can I add more at these levels, or should I, because I'm holding Nuvama Wealth and as well. So should I add 361 at these levels, or should I exit and add Nuvama Wealth or this one?
Sorry,
Yeah,
did you
Nippon
say,
AMC, yeah.
Shweta, that you're also holding some other company apart from 361 in that same space?
Yeah.
Which one is that?
I'm holding Nuvama Wealth and Nippon AMC also.
Okay. Nuvama Wealth and Nippon AMC. Got it. And will this be a long-term bet, Shweta, more than a year?
Yeah, it will be a long-term bet, yeah.
Got it. Well, Saurabh, on 361, company has performed well, but any view that you can offer Shweta at this point of time? She's holding shares at 1091, also has Nuvama Wealth and Nippon AMC.
I think if you have a long-term horizon more than 3 years, then I think it would be prudent to hold.
Okay, all right. So that's the view coming in on 361. Vam, it's time for our second rapid fire now. Around Saurabh as well as Ajit, you both know the drill. Try to keep your answers as short as possible. Chandra is asking the next question, which is on Newgen Software. Wants to know from a long-term view, can he consider this counter right now? Saurabh, your view?
Avoid.
PK is holding JM Financial at 133, Ajit. What should he do with his 350 shares now?
Hold will stop at 125, 145, 150 target area.
Ola Electric bought at the levels of 57, 2695 is the quantity. Maddie wants to know whether he can continue to hold. It did slightly play catch up in the last couple of trading sessions, but Ajit, your view on the charts?
Looks overbought, consolidation likely, maintain stop at 32 and around 46, 48 reevaluate.
Okay.
The next one coming in, okay, we've taken IRB for today's session, but on Sterlite Tech, bought at 190, Ajit, what would be your view for Raghuram?
Stertech looks sideways to me. If you have existing position, maintain stop at 4% away from the current area and avoid fresh buying.
Sirca Paints bought at the levels of 319. From a short-term perspective, hold or sell? Prashant, I think, wants to know he's holding 100 shares. Ajit, your view on the charts?
Exit.
Shivani is bought and holding JK Paper. Ajit bought at 430. Should she continue to hold for an upside back to a buying price, or should she exit now?
Strong hurdle at 360, maintain stop at 335 to hold.
Exide Industries, is this a good time to maybe make an entry from a long-term perspective, Saurabh?
Avoid.
The next one coming in, it's on KPI Green, bought at 380 by Manul. Ajit, is the sideways momentum largely behind it now?
No, consolidation is still going. 430 is the hurdle. So for fresh buying, wait for a close above this level.
Okay, Capacite Infra is the next one. Saurabh, any view on the fundamental side? It's a 1900 crore market cap company.
Avoid.
Tata Motors PV bought at 450. Is it prudent to average down now, Saurabh?
Don't average.
Okay, the next one is coming on Sterlite Tech. Kishore from Mumbai wants to know whether to hold, sell, add more from a 6 months perspective. Ajit, your view?
Like what I've shared earlier, avoid or maintain 4% as a stop loss for existing position.
Okay.
Krupesh is holding 300 shares of NTPC Green, bought at 108 near the IPO price. Saurabh, stock's up today, but should he continue to hold?
Hold for long term.
IRCTC, view from a long-term perspective. Our viewer Harish is holding 32 stocks at the levels of 825. Saurabh?
Looks still expensive. Better to get out.
Is this a good entry point for Sabita to enter Shakti Pumps at this level here, Ajit?
Fresh buying can be done, but with strict stop at 450.
Okay, Procter & Gamble is the next one that Suresh has a query on from a 1 to 3 year perspective. Is this the right time to make an entry from an FMCG point of view? Saurabh, your view?
Yes, you can do.
Tarun Agarwal from Ranchi holds 1,500 shares of Vedanta at 470. He wants to add more now. Saurabh, would it be your recommendation?
You can add.
BPCL from a long-term perspective, Manoj wants to know if he can continue to hold. He's got 808 shares at the levels of 328. Saurabh, your view?
As of now, concerns are real. Better to avoid.
Within the water space, water sector, EMS, Enviro, Viatech, Vabag, what's a better pick, Saurabh, for Suman?
Viatech, Vabag.
Got it. Well, that's the end of the rapid fire as well as this edition of Fast Profit. Ajit as well as Saurabh, thanks so much for helping us solve the 57 queries that we have in the last 1 hour. Appreciate your inputs. But viewers, that's all the time we have on this edition of Ask Profit. Stay tuned. A lot more action on the other side with KYC and hopefully a market recovery in the second half, but a lot more stock related queries at 2 p.m. for afternoon edition of Ask Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies, where we discuss their key growth outlooks and where does the alpha lie. And I get you all of this and much more in this show. But before that, I would like to give you some hints about the company which we are going to talk about today. It's a very interesting company. You have heard about textile companies, but have you heard about the platform textile company? What this is all about? It'll be pretty much interesting to know about it. The second hint I would like to give you, and there's a lot of interest in this, the company recently won a 450 crore order coming in from a US retailer. We'll give you more details on that. The third hint I would like to give you, try to get it by now. It's backed by Enam Group. Of course, Vallabh Bhansali, the market ace investor, is there. He's heading this group that is promoted entity and also backed by Mukul Agarwal. So ACE investors are betting on this stock. What this company is all about, we'll give you that entire information. And it's received its highest ever volumes last week. That means something is brewing here. What it is, I would like to make you understand slowly. And the company in focus is PDS. This is the company I'm going to talk about, which we'll be discussing all throughout. And of course, what are the growth levers, and is the textile story of India changing or not? And if it is right at the center of it. Let's look at the company, why we are calling the company. Of course, this main large order win has come in, and what are the key updates about it? What are the key timelines we should be watching out for? And if you're a textile enthusiast, this is a very interesting company. So do pay attention to what I speak. The second reason why we are calling PDS is the global trends in outsourcing. Is the company benefiting from it? Is there a vendor consolidation happening? They are a big vendor, so they might be getting benefited as well. That's to put it in a very simplified manner. And this is the question to talk about the outsourcing. Is it changing? And remember, this is just not India focused. They have global solutions for it. So they have factories across the world. Now, Bangladesh impact, that is a big question, especially regarding the Indian textile story. How much of that has changed? And are we navigating this uncertainty? And if yes, what is the company doing on that? That's the question we'll be answering. And the growth outlook for the numbers for FY27. This type of business models generally have a very lower margin side, so we should be looking at the revenue and of course the order book as well. Apart from that, any acquisition plans? Remember, they had done a QIP. Most of the funds, you could say, have been deployed, but there is a certain amount of funds which are not yet deployed, and we might see some acquisitions happening. They recently did a domestic company's acquisition as well. But to give the entire perspective, we'll be joined by Sanjay Jain. He's the Group CEO at PDS, where Sanjay will explain us about the company, the growth outlooks, and what are the new developments which are happening. But टेक्सटाइल की बात कर ली, टेक्सटाइल की प्लेटफॉर्म की कंपनी की बात कर ली, लेकिन PDS है क्या? What is PDS all about? For the first time viewers and prospective investors, this is a textile platform company sourcing and manufacturing solutions. So there's a lot of things at the back end, which the clothes which we wear, a lot of back end work is there, and that back end work in a platform is done by a company called PDS. Now this is a 450 crore order from the US retailer. Despite so much happening global trade, company has got a very big order. Now let's see how much of that order fructifies and the timing. And remember, ACE investors are there in the stock, backed by Enam Group and Mukul Agrawal as well. So definitely the Dalal Street superstars have given a thumbs up to the company, and recently the company acquired 55% stake in Knit Gallery. This is an Indian company, so they are looking at the Indian manufacturing setup as well. But let's get into more details. What the order book currently stands. These are the Q3 operational numbers which we have taken. Remember, Q4, the numbers are not out yet, so we'll definitely be talking a conversation till Q3 only in terms of numbers. Order book stands at roughly 5,200 odd crore rupees. We can see some minor improvement coming in. GMV, which is nothing but your gross merchandise value, that has clocked in a 7% growth of roughly 15,000 crore rupees. So the operational parameters as of now, they look decent as you compare that with the volatility in the global textile space. But let's look at the numbers as well. The net working capital is down from 17 days to just 7 days in 9 months. And of course, seeing the current situation, this is commendable effort by the company. Apart from that, gross margins that have expanded by 45 basis points at around 21%, and these numbers I have taken is for the first 9 months of the fiscal year. Apart from the Q3 operational numbers, the net debt that has done well, that's reduced from 374 crore rupees to 70 crore rupees for the month of December. Remember, there was a QIP proceeds were also there, and a large subsidiary debt was reduced as well. So these are the important operational numbers which we will be talking about. But let's see the geography-wise breakup, how things are panning out. Largely, they are having exposure in UK, around 43% of revenue is there, but it's evenly balanced. If you compare them with the Europe market and the Americas market, a very small exposure is there in the Middle East and the Asian markets. But let's see which products the overall revenue breakup is looking like. For men's, it's around 35%. It's almost, you could say, the same number for women, also 35% each. And for the children's segment, that's around 24%, and around technical textiles, if we talk about it, that's roughly 6%. So you could say that the distribution is equal when it comes to the geography and even the product as well. So these are the important category-wise revenue breakup which we have seen. But why is the stock in focus? What are the key positive triggers for it? That is what we will be talking about it. And of course, there are some important views when we talk about it. If you could just show what's there next for us, and then we'll get that clarity and the rating parameters. This is what I'm talking about. Income statement, balance sheet, cash flow. This is what we'll be judging the company on in terms of valuation. So we'll compare that with the company itself, because there is no apple to apple comparison for this company. So we will be looking at the historical data, and apart from that, shareholding in street cred over a period of time, how much it has changed, be it FIs, DIs, we'll get you all that information. Peer analysis is a very interesting analysis. I've taken some help from PPFS Investment, where I'll explain you the entire textile value chain and where does PDS stand in that, and the outlook as well will be very much important. Let's talk about income statement first, how things are panning out. And largely remember, these margins which you see, this will always be around that 4 to 5% portion because of the inherent business nature which the company has. Largely we see the 3-year CAGR numbers for EBITDA and revenue ranging between 13 to 15 odd %. Nothing much to look at. It's a kind of a stable model the way the numbers are looking at. Let's see the Q3 numbers, and we see largely flattish growth has been there. The margin trajectory is ranging between that 3.8 to 4% mark, and that has been done since its IPO over the last 5 to 6 years. So that is stable. That's the inherent nature of the business model. Yes, there is no volatility, and that's a good portion about that. And looking at the numbers also, slight bump up coming in the revenue numbers and a slight dip in the net profit numbers, but net nothing much there in terms of volatility. So I'll be giving this a neutral rating. It's not that great and neither that bad. So that's the performance levels for the income statement. Let's also talk about the balance sheet, and you must be looking at the higher levels of debt, but these numbers are only till FY25. But if you see the debt reduction which has taken place after the QIP which the company had done, now that net debt level actually comes down. It goes below the 80 crore mark. Remember, around 90 crores was used for an acquisition for a domestic manufacturing company in India as well, and despite that, the debt levels are on the lower side. Cash bank balance is still healthy at around 737 crore rupees, and remember, it's a high working capital business as well. So overall balance sheet is strong. So I'll give a thumbs up when it comes to the overall balance sheet. But let's look at the cash flow, how things work out, and largely they have private players. So we can see these are some stable characteristics when it comes to their billings, and we had seen the net working capital days also coming down. One of the reasons for that is an improvement in this net cash flows as well. It's roughly around 100 crores in the positives. I've just taken the FY25 number, and overall the conversion also looks decent when you compare that cash flow, especially the operating cash flows with the PAT. So net it's still positive, but I would like to give it a neutral rating because cash flow from operations might be changing a little bit here there, because investing and financing activities are also something which the company is looking at. And remember, around 100 odd crore rupees is still not deployed for further inorganic acquisitions. So it's a neutral rating when it comes to the cash flow segment. But one interesting point I would like to point out is the valuations front. The last 12 months PE ratio, we see the 5-year peak had gone to 58 times. I took an average of it, it's 28 times. So definitely from its peak, it has corrected. But from the 5-year average, it's still on the premium. It's around 38 times it's currently trading at. And when you talk about a textile company or a textile related company, they don't get these valuations. They get something between 12 to 20. But of course, we have seen a good up move in certain textile pockets over the last 3 to 4 months. FTAs are also there. But this is a platform company. It enjoys a higher ROCE because it is, you could say, asset light, and other ancillary activities are there. So net I would still give a neutral rating when it comes to valuations front. So we spoke about valuations. Now we'll talk about the shareholding, how things have moved. And of course, when there was a QIP, the promoter stake will go down, and from 66% it will come down to 61 odd %. FIs have slightly sold off from 4% to 3%, but one thing which is nice, the QIP is a good lapping up coming in from the DIs. Their stake went up from 1% to 6% in this company, and we saw good positions coming up from the star investors, and definitely we saw the highest volumes last week as well. Those numbers definitely are not there in the March quarter numbers, but we are going to see some big positions happening, and already investors are there. So shareholding is a strong thumbs up when it comes for PDS. But apart from shareholding, let's talk about the stock price movement. Kitna paisa bana, kitna paisa nahi bana. In the short term, from 2026 lows, just 4 or 5 trading sessions, stock is up 16%. But the stock has taken a lot of patience for the long-term investors. Last 1 year, the stock is down 28%. But concern is still there. For the last 2 years, the stock hasn't done much. It's down 36%. So if you're a long-term investor, this stock is testing your patience. Short term, congratulations to you, but net, it is still neutral. So the company needs to show whether it's at inflection point or not, and if it's there, is there any alpha there or not. So that's the street cred for you. We've given a neutral rating, but ROC profile, this is one of my favorite research which I have done. I've taken a little bit of help from the analysts at PPFS. PDS is in a sourcing category, and their numbers, the ROC numbers which I talk about, that is at the highest in the industry. That's around 30 to 40% in the listed space. This is the opportunity which you get. So this is the first one, but let's explain you a little bit about the peers also. Garware Technicals is a technical textile company. Their portfolio around 25% plus ROC model comes in, and if you get into the lower side, the Infant, the Kitex and the SP Apparel, they give you the ROCs between 20 to 25%. And talk about integrated player, that's around KPR and Arvind, that moves around 18 to 20%. But anything after that in the textile comes below that 15% mark. And that's where the question arises for the investors. We have, of course, Gokul Das, they are into garmenting, that also ranges between 15 to 20%. So this is a very important ROC profile. If you can take a screenshot, share with your friends, or note it down for your further future reference. So net, it's a strong thumbs up when it comes to the ROC profile. Last one is the Outlook. Outlook, they have a very strong established UK customer relations, and that is why the FTA has come up. So they'll be in a very strong position to get further orders. They are pursuing strategic acquisitions. Still the funds are left from the QIB fundraise, and that's what we'll be watching out for. And also, there's a revised labor codes for India and Bangladesh. Will that impact their costing? That is something to watch out for. And yes, slightly there would be an impact. The Bangladesh uncertainty, that needs to be addressed. Now, how will that happen? Will it be via diversification of clients, diversification of the geographical footprint, or is there something else in store? That's the main question to be asked regarding the stock. But net, the outlook is strong, and I'll give a strong thumbs up for it. But let's revise all the ratings which we have discussed. What's the total numbers looking like? And largely, let's just pull out the KYC final ratings, please, to give us audience the entire view. If you could just show the KYC ratings. Yeah. Right, yes. So we have income statement and cash flow, which is decent. I've given a neutral rating. Balance sheet is strong. Debt reduction has been there. And the valuations, that's also largely, you could say, neutral. It's not very cheap as of now. There has been a little bit of run up, so we need to see. Apart from that, let's see the shareholding and street cred, where the action is there. Shareholding and peer analysis, company stands out, and so in the outlook. So net, overall, I have given this company a KYC rating of almost 6 out of 8. That's slightly on the higher side of the average numbers which we generally give. And this is the company which we'll talk about more. But to give it more perspective, we'll be joined in by Sanjay Jain. He's the group CEO at PDS, and he has, of course, more than 3 decades of experience and across a lot of conglomerates. Good afternoon, Sanjay. It's always a pleasure to talk with you. But this 450 crore order, that's a big order coming in for PDS after a long time. Just give us a little bit of details about it, and what's the contract size, or you could say the contract time for it.
Hi, Sharad. Morning. Thank you for having me over. This is a contract under our business offering sourcing as a service. It's a US-based retailer which is having an annual turnover of $10 billion plus. So for their sourcing from China, they have given us this order wherein their current purchasing that they are doing approximately 450 crore is what we are expected to handle in year one, wherein they would the suppliers would keep directly billing to the customer, but normally retailers have their administrative offices in the sourcing location, so all that would be taken over by us. So in a way, the client saves the costs that they were incurring for managing these suppliers, which we would be doing. And gradually, this business, given the large size of the retailer, as I said, $10 billion plus. So this is a beginning. Our focus in the first year and second year should be on performance. So as we deliver the client expectation, then we believe this can meaningfully scale up. But also importantly, North America last 18 months has been a growth market that we have picked up. So far, our wins there with clients have been design-led sourcing, which typically is a 3 months, 6 months, 9 months order cycle, whereas sourcing as a service is a long-term 4 to 5 year contract. So this we believe is another foot forward in terms of our relationship building with North American customers.
Right. Sanjay, apart from this, the way things are changing in the industry, and over the last 6 to 12 months, there has been a big consolidation as well. Company has also been, quite vocal about it. Currently, is there this consolidation continuing in the industry? And if yes, where does the PDS stand in this?
See, the last 12, 18 months have been quite turbulent times. I think we all have witnessed the war situation, Ukraine and Russia, leading to high inflation, customer sentiment getting impacted. Then there have been geopolitical developments. And let's not forget, prior to this was China plus one strategy. And the last was a tariff situation. The tariff, changes, rampant changes that happened. And now recently the war situation. So our industry have gone through a lot, trying to grapple with one change or the other. And the other thing is now is that on a positive side, there have been FTAs signed for Indian manufacturers with respect to UK market, with respect to European market. The government is also pursuing a very structured agenda. So it's been a balanced, development set of things. But while the positive developments on FTA and the structural initiative span out over 2 year, 3 year horizon, the negative factors, in terms of the inflation, in terms of the tariffs, they all have immediate impact. So I would say we've been all as an industry grappling with it, and we are just hoping that things should remain stable. As soon as things are stable, one is able to plan for medium to long term. But I would say 1 or 2 more quarters, we got to continue to be patient about spanning out of all these negative factors, and then hopefully it should start looking up. So I guess we're hopefully, no more bad news coming from any part of the world, hopefully nearing the end of this, in terms of whatever has been happening.
So that means, Sanjay, we need 1 or 2 more quarters to actually give the outlook for FY27. You want to say that? Because of course 1 or 2 quarters there might be an issue, and it's of course normal for that. It's happening for the entire industry. But for PDS in focus, your business, the way things you are firefighting, there is some diversification at play also from Bangladesh. So where does the company stand for the first half of FY27? Will it be a bit different than the second half of FY27?
See, I spoke with respect to what happened to the industry. At PDS, there is some uniqueness the way we have built our model. On the front end, we are well diversified with UK, Europe being about 70% of our markets, and then now North America gradually gaining traction in our overall portfolio at about 17%. So we are well diversified. We are well placed to benefit from the FTAs which are unfolding. At the same time, well diversified across the geographies. Even on the sourcing side, our concentration is not with respect to 1 or 2 factories in one part of the world. We are sourcing from Bangladesh, Sri Lanka, India, China, Turkey, Vietnam. So that allows us an inbuilt flexibility to navigate these challenges, much better as compared to any other company. Having said that, I think we are walking into the year 26-27 on a caution note. And as I said, things are a bit turbulent. But for us to have a modest growth, is something that we feel very positive. A low single digit growth at this stage looks doable for the entire year. Maybe 1 or 2 quarters down the line, if things start looking bright, we may like to revisit. But I think our diversified model should enable us have a low single digit growth even in these turbulent times.
Okay, so turbulent times, but definitely a growth would be there, at least in the low single digits. But clarity might come in the first or the second quarter. We need to wait and watch. Nicely said, Sanjay. 3 important areas we asked about, but I just want to get into Bangladesh a little bit more. How much things have changed since the last third quarter update, which you had spoken about? There was the diversification at play, and we are still kind of, there's a fog around this space regarding Bangladesh, China, and India. How much of that has changed, or this diversification is still at play?
I think it catches far more attention, as compared to how stable the on-ground realities are. PDS has 2 factories in Bangladesh, and there have been 1 or 2 episodes, of geopolitical disturbance on the ground in Bangladesh. But our factories have been pretty much running stable. The order outlook has been positive, barring a day or 2 getting impacted in terms of production. The factories which are owned by PDS and the factories with whom we partner with have been pretty much running stable. And so therefore, we haven't really got impacted in terms of, what happened in Bangladesh. But having said that, I think while on one hand, we are running stable set of operation in Bangladesh, we are focused more and more, or for example, in knit gallery acquisition that we did in Tirupur, the FTAs that India signed. So we believe as we scale up, we could source more and more from India. That is number 1. Number 2, Vietnam, we have a lot of focus for catering to our clients in US. And lastly, besides the tariff situation in between the 2 countries, beside the geopolitical situation, the proximity to the consumption market to reduce the lead times. So therefore, in our overall global sourcing footprint, Egypt and Latin America have become equally important now, because from Egypt to Europe and Egypt to US, and likewise from Latin America to US, there is much lesser lead time. So I think as a result, Bangladesh for us has been stable, but we are increasingly focusing on sourcing from other markets. Therefore, on the whole, if I draw a picture 2 years, 3 years down the line, our absolute procurement from Bangladesh should not go down. It would keep gradually growing up. But from the other geographies, what we are sourcing would actually go at a much faster pace.
Okay, so that's important. Egypt, LATAM, that's something which the focus is. Bangladesh remains stable. But let's talk about the acquisition plans. There was an Indian acquisition also, and I presume your QIP proceeds are not used fully yet. You are looking at further acquisitions. Am I right?
See, at this stage, Knit Gallery acquisition is almost about a year or so. And I think as we look back, it's turning out to be a step in the right direction. Especially the FTAs are enabling us to showcase the factory ownership to our UK and Europe-based customers, and therefore win more business. I think for now, for the next 2-3 quarters, we are going to focus on what we have in hand. For North America, we acquired a stake in a company, held by Michael Lee, so that we can use his expertise to fast forward North American market. For the next 6 to 9 months, allow us to stay focused on what we spend money on and derive more, benefit out of it. And our QIP money that we have, we are ensuring that in compliance with laws of land and the objects, we will be doing the needful. But we're not wanting to haste up spending money given the uncertainty. And most importantly, given wherever we have spent capital, committed capital, we want to make sure that we get the desired benefits out of it.
Sure. So definitely uncertainty is there. So you can keep the QIP proceedings within already the investments which have been done, be it globally or India, their fruits of, would be also coming in. But apart from this acquisition front and how the company is positioned itself, we spoke a little bit about financials also, and of course, how things are panning out. Any new trends in the industry, in the outsourcing, which we are talking about? Any new industry trends which have come up apart from what we have discussed on the vendor consolidation front and maybe in the new geographies? If you could just share with us, because I know you have a good exposure in the UK and the global markets for the sources as well. So Sanjay, give us a feel of how the new trends are coming in your industry.
So a couple of things. I think there has been a consolidation underway of the retail sector. The smaller companies are giving way or getting merged into larger companies. That's number one. So therefore, as we enjoy strong relationships with our customers in UK, the customers are growing in size because of the consolidation. That is number one. Secondly, PDS has been able to get larger share of wallet from these customers because they have, on one hand, successfully seeing the relationship with PDS over the last few years in design-led sourcing in apparel. Now our relationship is going beyond apparel into home and general merchandise. So therefore, from a retail industry perspective, there is more focused on now outsourcing categories beyond apparel as well. Thirdly, we talked about in the beginning, the contract that we got from our US-based customer is the offering of sourcing as a service. The retailers, especially wherein they are owned by private equities, they believe that the retailer should focus on more core business. Core here means customer interface, visual merchandise, loyalty programs, in-store experience. Anything in the backyard can be handled by credible counterparties like PDS or similar such companies. So the retailers are willing to let go more and more an internal part of the P&L to third parties. That's an emerging trend as well, which means we get an opportunity to participate more. And lastly, and very importantly, I think the AI, is being embraced increasingly by retailer, especially on the design front. And as one is able to use AI for an effective designing, therefore effective sampling, as a result, the effectiveness of what is getting bought.
Right, Sanjay, we are having a little bit of shortage of time, but you have given us the entire picture of the company and the industry going ahead. It's always a pleasure to talk with you and giving us new industry trends as well. Best of luck for the Q4 numbers as well. So that's the management of PDS we are talking about. They spoke about their 450 crore order, changing trends in the outsourcing and maybe the benefits which can come in, but they won't come immediate. There is a 1 or 2 quarter of lag as still there is some uncertainty in the market. So for stories like this, for companies like this, do tune into KYC and stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Nifty and Sensex retreat from their day's low but remain under pressure as geopolitical tension heightened in the Middle East. Broader markets mirror the benchmarks as most sectors trade under pressure today. Middle East slips back into danger mode. US military threatens to block maritime traffic in and out of Iranian ports, while Iran warns of dire consequences. Supply jitters send oil soaring above $104 a barrel. It's an NDTV Profit exclusive. India Inc. flags a fundraising roadblock. Companies are asking SEBI to revisit QIP pricing rules, arguing that floor prices based on historical averages are misaligned with the current market levels. Sources say the government has rolled out Draft Cafe 2027 norms, offering a softer, phased glide path for fuel efficiency. The proposal gives automakers breathing space while keeping a strong policy push for EVs and hybrid intact. Hello and welcome. You're tuned into Markets at 12. I'm Nisha Podar. Let's take a quick look at the markets at this particular hour. Yes, there has been some bit of recovery in the market from the gap down opening that we saw because of the escalation of Middle East tension. No progress in the negotiation between US and Iran in Islamabad. Crude prices rise and weakness in the Asian markets. All four factors really spell trouble for the Indian markets, but we have seen a fair bit of recovery coming in, but a very, very consistent recovery in the market today. Let's also take a look at what is really contributing to Nifty 50. Well, it's the private public sector enterprise NTPC, which is the top gainer with hardly any, it's a minuscule contribution. HDFC Life, Adani Enterprises, Tata Motors, PV are some of the ones which are really showing a green tinge, but the rest of the market is really showing deep cuts in terms of the performance and the pressure that is really coming in the overall market. HDFC Bank is the top loser along with SBI as well as Reliance Industries. Well, also taking a look at the banking space, well, Nifty Bank is underperforming Nifty 50 by a slight margin, and that's really notable. On the other hand, when we look at the sectoral performances, PSU banks and banking space are the biggest draggers in the market today. In the last couple of hours of trade, from being all sectors across the board sell-off, there has been buying that is seen in certain pockets, that is media as well as defense and energy space. And take a look at those particular three sectors which have really performed well. But I would also like to focus on one aspect, that renewable energy, EV as well as EV battery. That particular entire pocket is the one which is seeing some buying coming in, and that is also elevating the momentum in the market. Let me welcome on the show Nishal Maheshwari, market expert, joining in with his take. Nishal, of course, the jitteriness in the market is back. A large part of the recovery we had seen in the market in the last week, whether it's equity or money market or rupee, a little bit of that has been reversed because of de-escalation efforts being thwarted. How do you see the market? In fact, the volatility is really continuing, it seems.
Afternoon, Nisha, to you and your viewers. So I think this was expected to believe that this war is just going to get over basically with one discussion. I think that was, I think, a bit unexpected also. So I think this volatility will continue. But what we have to see now is basically, does any of the warring parties really gain anything out of it if they want to get back onto the attack front. So I do not see much reason for both the parties to actually continue this thing. I think they have made their positions clear in the first round of discussion. Obviously, everybody would come with the highest expectation, and then slowly, I think things are going to work out. But I think that will take a bit of time, but the volatility will continue in the market.
So, Nishal, that's exactly the point that we have to harp on, that this volatility will continue for some time, as the market was really expecting that the negotiations will probably put an end to the war. That's really not going to happen, and the negotiations, as it were, between very large players, global countries, that really takes a very sensitive turn. Now, in this market, Nishal, there are a few pockets which are really doing well today, have seen buying coming in, especially from the renewable energy space, whether it be EV space also, EV batteries also along with it. The PSU sector, apart from the banks, the private sector, public sector enterprises, they've all been seeing some bit of buying along with defense. In your view, which are the sectors which are looking at better valuations and safe and a little more protected from the vagaries of the war, which can be seen for investment?
So I think you listed the sectors very well. There has been, so if I divide it between saying that what is looking cheap and what is the sectors to focus on, though it may not be cheap, I think you defined it pretty well. So the cheaper sectors are the banking side. I think banking and consumption, both of them are come off quite a bit, and I think it's sort of an investing zone. So private sector banks is what I like, and I think they are coming in very, very interesting valuations at this point in time. The sectors which are interesting from a thematic point of view, where the industry seems to be doing well, I think renewable energy. So energy as something, whether it is through renewable or whether it is through EVs, I think the whole energy space has become very interesting. And the other one which I think one should focus on is defense. So these are the 2 or 3 industries basically one should be focused on, because defense, largely because there is going to be consumption of defense products if this war continues. Otherwise, also, I think most countries would now want to actually up their investment into the defense side. So I think these 2 or 3 sectors looks interesting at the moment.
So, Nishal, what is your view coming in on the IT sector after the big boy Tata Consultancy Services had announced their results? And those results have caused a little bit of bearishness about the AI thrust as well as the dollar revenue thrust for the Indian top giants from the IT space. So along with TCS, Infosys has also been dragging since then. And today, Coforge is the only one amongst the big IT companies now, which is standing tall, which is really differentiated as an AI play, more of an AI jump that Coforge made with the last acquisition. How do you see the IT sector, not from the point of view of the war situation because it's unaffected, but more from the rupee trajectory perspective and the AI thrust and the first results that came out?
So my view has been quite clear on IT. Basically, I always thought that in the short term, I think there is not much to worry, but I think the medium and the long term is what the market is worried about. And that's why we have seen long-term destruction of PEs for this sector, because they are not clear how AI is going to impact them. Everybody is very clear that AI is going to impact them. How much and in what way, I think market is still figuring out. Now, some of these companies are going to pivot, like what we have seen in case of Coforge. Basically, now it is being termed as an AI company. So that is what we have to see, how many of these companies and what way they are able to pivot to the AI. And that is going to determine going ahead which companies make it and which companies maybe, I wouldn't say fall by the wayside because they are too large, but they will suffer.
That's right. The valuation is getting adjusted on the downward side. Nishchal, very quickly, how much cash should one hold as astute investor with long-term approach at this point, and how much should be, really put into work at the current moment, since the volatility period looks like is going to be extended over a longer period of time?
So I'm saying basically a 15 to 20% cash is a good level basically you should be at this moment. And every fall of 500,000 points in Nifty, one should be deploying its cash. So that is important basically, that we shouldn't be waiting saying that the worst is yet to happen. I believe the worst is already past us. The only thing now, the market, every 500,000 point of some announcement or some tweets are going to give you an opportunity, and that's that's what the investor should actually grab that opportunity.
All right, Nishchal, thank you so much for joining in with your expert take on the markets and investment strategy in a very, very volatile environment. All right, also rupee, remember, is making headlines today because there was a sharp depreciation also on account of, crude prices going up because of the war fears again resurfacing. So let's get chatting with an expert on Forex market, Naveen Mathur, who's the Director of Commodities, Currencies and Gift City IFSC at Anand Rathi Shares and Stock. Joins in now. Naveen, always a pleasure to welcome you on NDTV Profit. What do you make of the rupee's movement today?
Good afternoon, and I think the pleasure is mutual. Thank you for having me on this show. Now, whatever has happened over the last, I would say, 3 to 4 days, one, the ceasefire announcement the last week, Wednesday or Tuesday night, and then the talks in Islamabad, the peace talks or the kind of agreement to be arrived between the parties, the US in this case, Israel and Iran. So I think that was positive, which brought rupee the last week to the low, I should say, of around 32.50, 32.60, 92.50, 92.60 levels. The rupee has depreciated because of the continuing trouble in the Middle East. The peace talks have not happened. The ceasefire, although it's continuing, but neither of the countries have accepted to the I would say to an agreement which is win-win for all the three countries, including US, I would say Lebanon, Iran, and Israel. So that's not happened. But the positive thing around this particular conflict is that people have come on the table. The administration from the US, the Iran delegation, which was there in Islamabad. So everybody is now talking about something to happen on the ceasefire and the agreement in the next 15, 20 days. So I think that's a positive stuff. But up till and unless we don't see the Strait of Hormuz, the inflation, the expectations kind of anchored, the things would be pretty much volatile for rupee against the dollar. Having said that, carry on.
Yes. So, Naveen, I wanted to ask you that, the RBI also made a lot of efforts to arrest the fall of rupee, because 95 to a dollar was a very worrying level for India as a country. But given this particular situation, it has reversed some of the gains that was made in the last week or so for rupee as well as for the markets, Indian markets. How do you see the rupee movement going forward? Because FII outflows really continue on a rigorous basis given the concerns around crude oil prices.
Yeah, that's a very good question, I would say. Number of fundamental factors which would continue to I would say, define the trajectory for rupee against the dollar. The one would be the dollar index. The dollar index appreciated. It did cross 100 levels in last 1 month. It was back to around 98. Currently, it is 99. So the dollar index would be one thing to watch out for. In spite that the India the macroeconomic seems in a good shape. We are in a good space in terms of our GDP numbers for the last year. Definitely, this particular Middle East crisis would have an impact in Q1 and the Q2 with the lag on the Q2. So I would say the CAD, the current account deficit, the inflationary expectations, the hawkish stance, therefore, by the central banks would be something which would continue to put the rupee not on the appreciative side. The fundamental would definitely help rupee to appreciate as what has happened. And the RBI intervention when the rupee did cross even 95 against the dollar was something to be reckoned with. So I think the RBI intervention, the current account deficit, the dollar index, and the inflationary expectations. And if RBI continues to have a little bit neutral to moderate hawkish stance, we don't see that the rupee should therefore appreciate to a large extent. But I think that the rupee should stabilize at around 92 to 93 against the dollar in due course of time.
All right, so you are penciling in 92, 93 levels of stability for rupee. But Naveen, you also mentioned another important aspect. We look at our own factors impacting rupee, but dollar movement also has a lot to do with that. Do you think that Iran's, toll ask in cryptocurrency is challenging the dollar dominance, you think? How do you see dollar trajectory going forward?
See, it's very, very difficult. If the viewers remember the Euro crisis in 2010, 2009, and 11, after the great financial crisis in 2007-8, I would say the US dollar continues to be the reserve currency, continues to be the currency seen as a safe haven. So whatever we did saw over the last couple of weeks post this particular Middle East crisis, I would say that the dollar would be critical to a large extent for defining the trajectory of the rupee. In spite, as I said earlier, the Indian fundamentals are pretty strong. Now, the Federal Reserve was looking to prioritize growth against inflation because the inflationary expectations or inflation numbers particularly got anchored in the US at around 2% or so. But then in the last week, the data came in terms of the inflation numbers, and they have gone month on month by around 0.9% and around 1% or so over the last year. So I would say around 3% plus of inflation is something that the Fed would be worried about. We are not on 7-8% post the pandemic, the COVID pandemic, which we saw the pent-up demand coming in. But then at the same time, the Fed would be cautious. And I would say the dovish stance of the Fed, which was, say, 2 or 3 months earlier, now would be changed to an hawkish stance. And if that happens, it is so what is expected today. I would say that the dollar definitely would therefore continue to appreciate, again, a negative for the rupee against the dollar.
Oh, you made a very important point about the central banks. Naveen, a very quick question. How do you see the central banks, and most of the times the central banks across the world have really moved in tandem with each other, whether it's interest rate, trend reversal, or whether it's the other way around. So how do you see the current inflationary pressures because of the rising crude prices, which impact several of our sectors, impacting inflation and our RBI stance in future, because currently they are on wait and watch. But on the other hand, how is the central bank from US Fed going to impact the overall trajectory of central banks across the globe?
So you made a right point. The central banks work in tandem, but at the same time, they also look for the dynamics within the country. So I would say, although The Fed is now hawkish. They want to anchor. They would like to anchor. I won't say that they will. They would like to anchor the inflationary expectations. And as what I read from the sources, it's not to come down. The inflation would continue to take a toll in the US because of the crude and therefore the ancillary costs, which would impact every single person on the main street, their pockets. And that's what is happening. We are just in a month or two, or 1.5 months of the war. And that's what has started pinching in the US. So I would say the road for central banks to become dovish is far-fetched as of now. All the central banks somehow would maintain a kind of neutral to hawkish stance because of the inflation. They don't want the inflation, as they say, the gin out of the bottle. So they don't want the inflation to be, I would say, a troublesome area, in spite that the growth and the economic growth across the world would be impacted by this particular war in the Middle East.
All right. Thank you so much, Naveen Mathur. Always a pleasure chatting with you. And thanks for giving your insights on the rupee movement. So in the range of 92, 93 in the near term is what is being penciled in. But of course, the volatility really continues as the war situation and the crude prices elevate. All right, moving on then, let's focus on Ather as a stock, Ather Energy. And that particular EV maker is really gaining in trade today. Remember that there is a lot of push towards the electric vehicles, and in the war situation where crude and allied products are of shortage and at higher price, the renewable energy EV battery is the space which is gaining momentum. Delhi is also plugging into an electric future. The capital has unveiled a draft EV policy 2026, laying out a clear roadmap to cut the vehicular pollution and also to accelerate clean mobility adoption. Now, the plan really pushes EVs across all segments, expands charging infrastructure, and also strengthens the ecosystem from batteries to recycling with 100% road tax and registration waivers for the electric vehicles priced up to 30 lakh rupees. Now, fully digital rollout and a strong institutional framework. The message is clear. Delhi wants cleaner air, faster adoption, and an EV shift that really lasts till 2030. And that's one of the reasons why that's also prepping up the electrical vehicle space. All right, can't lose sight of crude movement, which really opened higher at $103 per barrel level, but has now seen a slight bit of softening. Narendra Taneja, who's an energy expert, joins in now. Narendra Taneja, always a pleasure speaking to you. With the turn of the events, which is very, very well expected in war situations, how do you see the crude movement? It did open at elevated levels, has softened a slight bit. Are you penciling in a longer term $100 above kind of levels for crude?
Well, that spike was in response to the, tweet by President Trump, who created a confusion by saying that, we're going to go for a blockade. The question is, A, are they really serious? B, there was a kind of conflicting message in that, because he said those who are paying toll to Iran, they are the ones who are going to be stopped by the American Navy. A, are they really capable of doing that? And B, who is going to set, that kind of mechanism? But of course, when it comes to toll, the demand by Iran is absolutely illegal and is against the international law. And that should not be accepted. The world must reject that, including India. I think it's important, because if you agree to Iran's demand to pay toll one way or another, then it's going to change the economics of all oil importing countries like India, China, Korea, and Japan forever. Because they may start with, $1 per barrel, but who knows, they increase it to 2 or 3 and all that. Moreover, that's against the law. So that must be opposed. If President Trump is basically aiming at that to stop Iran from imposing any kind of toll or this thing, I think the world must be with him. But that said, at the same time, it's an international channel. and it must remain an international channel with no control by any country whatsoever, because it's a natural, it's a nature-given channel. And if you start doing that, what about the state of Malacca or the state of Singapore is also known. So I think that's the market reacted, but I'm not worried about the prices going at $100 per barrel at this stage. My sense is crude prices are going to be in the region of $80 to $90 on an average. They may touch 100, but they may touch even 75. But if you go for the average, I think it's about 80 to 90. The simple reason for that is that I don't think America is going to restart the war, or Israel might kind of do a few attempts here and there. But I think it's important that America has learned the lesson. Iran also looks at that as an opportunity in order to focus on the future. The negotiations are going to be tough. They may be prolonged. But I think oil markets are concerned. The Strait of Hormuz traffic will start sooner or later, more, probably sooner. So I think I'm not too worried about it. $80 to $90 per barrel, because there's been disruption and damage, and that's going to take some time to repair and bring it to the normal condition as it used to before the war. That's why I'm saying 80 to 90. $80 to $90 per barrel Brent on an average. As I said, it may touch 100, 105, but then it will drop back. Average $80 to $90.
Average $80 to $90, you're saying, Narendra Taneja, but what will it take? What kind of cues and factors will it take for the oil to subside, crude oil to subside below the $100 level?
Well, you see, first of all, there has been some demand destruction if you look at globally, because some airlines, they have shut their operation, not fully, but they shut certain routes. And some people have also switched to other fuels, other sources of energy, and so on and so forth. There has been a bit of demand destruction. At the same time, there are issues, no doubt about it. But at the same time, I don't really think there's something beyond that markets can't manage or the consumers can't manage. A lot of anxiety. As long as America doesn't go back to the old thing to start attacking Iran again, which is highly unlikely, then I think, markets will begin to fall in place as soon as possible. This is going to take some time for Saudis and Iraqis and Kuwaitis to restart the production, because it takes time, especially when it comes to LNG. LNG can take longer, but I think oil production would probably go back to normal in about 6 to 10 weeks, which means if we really look at the 4 months horizon, things are going to go back to more or less normal as far as oil is concerned. LNG, however, is going to take longer.
All right, Narendra Taneja, thanks so much. Always a pleasure chatting with you. 80 to 90 is the level for crude is what is being penciled in. But of course, it needs some positive momentum for that to really happen. Consistent recovery seen in Nifty 50, but still no let up in sight. So keep an eye out on the market. With that, it's a wrap on Markets at 12. Keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
कुछ खास होने वाला है।
are warming up and raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's at stake? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand?
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, as always, standing at the NDTV Profit market pit with all the action. Sharad, good afternoon. An interesting day of trade, with that gap down open that we saw. We've seen a good amount of recovery that has come in terms of the markets. It seems that the geopolitical issues is something where the markets are now probably trying to discount with the way things and actions are panning out.
Well, that's right. Good afternoon, Hiral. And yes, we had a gap down opening in the markets, but then after that, there has been a minor recovery, but it's still continuing. And all throughout the trading session, we saw that hopefully we end the day in green. That's what everybody is wanting or praying for. Let's look at Nifty Bank, what has happened there. There also the story remains same, but there's a good correction. I'm sorry, a good up move coming in from these levels. So the growth or the gradual movement is definitely happening. But let's look at the triggers for the markets, how things are standing right now. The first one is definitely going to be a very slow recovery is at play for the markets, and there's a technical bounce happening for both Nifty and Nifty Bank, important levels if you are a technical trader. But how much will it sustain? That's something to be looked out for. But remember, in the closing session, we'll have Nifty's weekly expiry as well. Tomorrow is a trading holiday. That's why we'll get into that. But the entire problem remains, Hiral, is the war fatigue which is happening. We have been covering it for the last 5 to 6 weeks and there's no clarity yet. Broader indices are still better placed. Some value buying is happening in the SMIDs. We saw that in the month of April, the first week of trading, 30 to 50%. A lot of stocks have gone up. India VIX jumps up, and then rupee weakens and yields rise. These are the macro updates which you should be tracking. This is the number on the screen. Power is doing well. Auto and IT are seeing a sell-off right now. But nevertheless, market holiday tomorrow on account of Ambedkar Jayanti, so you might keep your positions light because you never know what's going to happen over the next 36 hours, and because of that there is still confusion and uncertainty in the market. So that's the entire picture, Hiral, to give you. But yes, the war fatigue is here now.
War fatigue is absolutely here, but let's quickly look at what the watch list is indicating right now as we speak in terms of the stocks that we are watching out for. We have fertilizer companies that are in focus, and this is on the back of China banning exports into if you talk about sulfuric acid, that's what is on the cards, and the impact on the war as well. OMCs, the windfall tax hike on fuel exports is something that could be impacting OMCs in trade. You have the city gas distribution companies and Petronet LNG that are in focus on the back of the Hormuz blockade supply issues. Tata Group companies also buzzing in trade, and this is on the back of the Tata Sons IPO buzz that's happening. You have Shapoorji Pallonji also, who put out a release on Friday indicating that they are absolutely open when it comes to the IPO. Jyoti CNC under pressure, one of the top losers today, and this is on the back of the French arm, which is facing a probe. You have Enviro Infra on the back of an order win, seeing some smart moves along with the Advait Energy. Swiggy, after Zomato, you have the co-founder, which has stepped down here as well. It's going to be interesting to see how the strategy shifts that do happen from here on. Zydus Wellness has been buzzing in trade as well. Strong volumes, and the stock is seeing some smart moves in the last 1 month. NTPC Grain as well, the volumes are pretty strong. Acme Solar, you have HSBC, which has initiated a buy. And your domestic air traffic growth is down 5% on month basis because of all the geopolitical concerns, and that's the reason why you have Indigo, which has been trading under pressure. Steel makers are increasing prices. Galantis Part is in focus. NDTV Profit did speak to the management. We'll get you an expert of that conversation in today's session. Coforge also has got all the clearances when it comes to Ancora acquisition, and that stock is in focus. Your EV players are up in trade today, and that's on the back of the Delhi EV policy. Cohance, again, strong volumes picking up on that front. So that's what we're watching out for in today's session. But Sharad, over to you to take the rapid fire with Vishnu Kant in today's session from Master Capital Services.
Thanks a lot, Hiral, for that. Vishnu, it's good afternoon. It's always a pleasure to have you in our show. We'll start our rapid fire segment. The first stock in focus will be the city gas distribution companies. Of course, some volumes movement is happening. Anything over here where the risk-reward ratio is looking favorable? IGL, MGL, or even Gujarat Gas, and even Petronet LNG?
Hi Sharad, a very good afternoon. So let's first look at the IGL, which is currently trading with a gain of around 1% almost, and just surpassing the Friday's high. The stock is currently trading well above its 21-day exponential moving average, and it is likely to head towards 173, 175 sort of level. So yes, IGL could be a good pick from this space.
Right, and Vishnu, Tata Group of stocks, anything looking having some value here, at least for a medium-term setup? There is a buzz of the IPO from Tata Sons, but anything which is looking good from the Tata Group?
If you're talking about the Tata Sons IPO, so Tata Chemical is the only company that could be a beneficiary from that. But in this Tata Group space, I would prefer to bet on the Tata Power, which is showing a very good relative strength. And alone in today's session, the stock is up almost 4%, and it is trying to surpass. It's a crucial horizontal hurdle which aligns somewhere around 410, 415. So yes, buy the dip approach will be a prudent in the Tata Power. I'm expecting on the higher side the stock could approach towards 440, 450 sort of levels.
Right, Vishnu, and apart from that, Advait Energy and even Environ Engineers, these two stocks are in focus because of the order wins. Anything looking good on these cash counters?
Well, so looking at Enviro, although the stock is consolidating with a narrow range of 15 rupees or 10 rupees, but yes, the way prices are behaving above the 21-day exponential moving average, it is giving a sense that the stock is accumulating. The big buyers are accumulating the stock at a current level. So yes, one can go long in the counter with a potential upsides towards 110, 115 on the lower side. The stop loss should be maintained below 98.
Right, and your views on Zydus Wellness and even NTPC Green Energy, both of them are in the green, good volume pickup.
Well, so in today's trading session, we have seen a very huge, volume and huge gain in the Zydus Wellness. The stock is up around 10% in around today's trading session. Although in pharma space, the stock is looking quite good, and I'm expecting this gain is likely to remain intact. But one thing we have to keep in mind is that the stock has given an extraordinary move in today's trading session. Although on card, the stock is likely to extend this rally towards 650, 690. But 650, 690. But simultaneously, we cannot rule out the possibilities of some corrective fall. So in a staggered way, we can go long in Zydus Wellness.
Right. Apart from this, Ola Electric and Cohance Life Science, there have been a good medium-term setup coming in, at least for Ola Electric. We have seen that up move coming in. Is there any heat left in this rally, or is it good time to book profits in Ola Electric?
So, so I would prefer to avoid Ola Electric because their stock is still trading below at 100-day exponential moving average. But on the same side, Cohance has given a very good opportunity to accumulate the counter. But on a Friday we have seen a huge gain in the counter that has been around 20%. So keeping that gain in the mind, I believe there could be some corrective fall. But yes, texture has been turned bullish in the Cohance Life Science, and this could be a very good step to go long in Cohance Life Science for a potential upside towards 430, 440.
Right. Thanks a lot, Vishnu, for this rapid fire segment. But moving on, we spoke with the management of Gallant Ispat today, and the company shared about its growth outlook and the hike in prices of some key products as well. Listen into what the management had to say.
Currently, in the FY26, we have operated an overall capacity utilization of 86%. And while we are adding 0.25 million, which would be commissioned in H2, sometime in the beginning of H2. So we can expect 50% of the 25% capacity that is being added kicking in H2. So yeah, we are expecting a volume growth of 10 to 15% in FY27 and the entire 25% in the next FY.
Interesting. Bullish commentary coming in from the management. But Vishnu, your views for Gallant Ispat? The stock has already run up. It's what we have seen in the charts. Is there any other risk-reward ratio left?
Yeah, true, Sharad. The stock has given a very good breakout from the falling, batch pattern. That's a bullish pattern, in fact. And apart from that, the stock is also trading off the cluster of all key moving averages. So I believe on the higher side, the stock is all set to extend this gain towards 720, 730. While on the lower side, if prices comes close to 640, 630, one can go long in the counter, maintain the stop loss below 590.
Okay, so that's with regards to Gallant Ispat. But moving on, let's quickly look at what's actually trending on Google in trade today, because Ola was one of the counters we were watching out for in terms of Friday's session. Today, let's see if that hits the list yet again. There you go. It's still there today as well. You have Adani Power, ICICI Bank and Eicher Motors. Very quickly, Vishnu, any quick view when it comes to names like, say, Adani Power, ICICI Bank and Eicher Motors, because ICICI will be reporting numbers the coming weekend. So the entire banking pack will be in focus as well.
Well, so first let's talk about the Adani Power, and the stock is doing very good, and currently it is trading around 182. I'm expecting the gain should remain intact. On the higher side, 195 is immediate resistance where stock can approach, while on the lower side, I believe 170 will be immediate support, so one can go long in Adani Power. Well, so second stock is ICICI Bank, I think you asked, right? And looking at this, private lender, the stock has a room to approach towards 1350, 1360, which is the vicinity of 200-day exponential moving average. So I'm expecting some little, gain in this counter. So one can go long with, keeping that view in the mind and that target in the mind. While on the lower side, the stop loss should be maintained below 1310. And third stock is, I think, Eicher Motor, right?
No, we just wanted your views with regards to ICICI Bank and Adani Power. But thank you so much, Vishnu, for joining in. Always a pleasure to speak to you as well. So that's with regards to where the rapid fire goes, as well as the stocks which have been trending on Google. But Sharad, over to you.
Thanks a lot for that, Hiral. And the important developments have been coming in the oil and gas segment today. Export duties, something announcement is coming in the oil sector. But to give in more details, we're joined in by Somit. Somit, what's the important news and the impact?
Well, the important news is that government has increased the export tax on fuels that get exported. Like for diesel, the tax has been increased to $95 per barrel as against $37 per barrel. And for ATF, it has been increased to $72 per barrel from $50 per barrel. For petrol, it continues to remain nil. Now, what will be the impact on this? For standalone refiners and private refiners, the impact is negative given the fact that the margins are getting capped. Despite higher GRMs, they won't be able to earn the higher gross refining margin because they'll have to pay more tax on it and the margins will be capped. But for Reliance Industries, the impact is expected to be on the lower side given the fact that 50% of their capacity sits in the SEZ, that is a special economic zone, and export tax won't be applicable on the unit which is sitting in the SEZ. So the impact on Reliance Industries is expected to be lower compared to what the street has been fearing. Now for the oil marketing companies, there won't be any impact on this given the fact that whatever products they're making at this moment, they're not exporting, they're using it for the domestic purpose. But this, on the other side, because of this tax, there's also news of OMCs asking for lower refinery transfer pricing. Now, because of lower refinery transfer pricing, what happens is that companies with excess refining capacity sell the final product or final petroleum product to domestic refiners at a lower price. Now, this also impacts Reliance Industries in this case. But again, this is positive for the oil marketing companies like IOCL, BPCL and HPCL, given the fact that for them, the sourcing cost of finalized petroleum products comes down, and that will aid their margins going forward. So that is positive for the oil marketing companies. For Reliance Industries, largely neutral to negative, but for standalone refiners like MRPL, Chennai Petro and private refiners, it is largely negative.
Thanks a lot for that, Somit, and he's explained us from the technical perspective to a very simplified perspective. But Mahesh, I just wanted to get you on this as well. Good afternoon. Always a pleasure to have you. Initial views coming in for the OMCs and even Reliance as a whole. Fundamentally, where are these companies placed?
Good afternoon. So I think this implication is totally negative for Reliance as well as MRPL, Chennai Petroleum. In this circumstance, already I think we have expected these type of any event in the petroleum company. So this is the negative, but yes, from oil marketing company prospect is slightly positive. So hope some in near term we can see some consolidation in the same. But if you are looking from a fundamentally perspective, Reliance has a ability to touch at least 1,700 plus level in 1 year horizon. So for near term, it's a negative, but in a longer term, if you are looking from a Reliance perspective, that is the many positive trigger in Reliance.
That's to where OMCs go. But moving on, Puravankara is in focus. Let's pull up that counter on the screens. The company has just reported their business update, on the back of which you've seen a strong spike that has come in on this one, a 9% up move. Their sales value has seen an uptick of almost 190%. Collections have seen a growth of 36%. Sales area around a growth of around 112%. And realizations have come in at 11,787 rupees year on year, which is a growth of 37%. This is the highest ever quarterly sales value that Puravankara has achieved, and that actually is reflecting in the stock price as well. The highest ever annual sales value is also what they've said, and higher ever annual customer collections from the real estate business, because their FY26 collections have seen a growth of around 15%, and the realizations, if you have to compare FY26 to 25, they have seen a growth of nearly 21%. What they've indicated is that they're continuing to see strength when it comes to their growth pipeline, and they've added nearly 15,200 crores in terms of estimated GDV during the financial year. They're looking at Bangalore, Bombay, Pune and Kochi when it comes to new projects. So Puravankara is one. Mahesh, your quick view when it comes to Puravankara, that stock at the day's highest levels.
See, the numbers are very good. I think stock has a potential up to 300 level, but in near term we can see 250, 260 levels. Numbers which is given by company is very interesting. I think Puravankara is doing very good in Mumbai also. So I hope in near term we can get 250, 260 level, and in the longer term 300 plus level can be achievable.
In for Puravankara, but there's an interesting chemical element. It's H2SO4. And if you are in your childhood, you must have heard about this chemical gas smelling of rotten eggs. But what's the impact analysis here? Is there some news on that? Anything there on the sulfuric acid and what's happening there?
Yes, absolutely, Sharath. So China is supposed to halt sulfuric acid starting May, and this move will impact your fertilizers, your metals and defense sector. Even semiconductor will be impacted. Now, now if you see, the sulfuric acid prices have risen since the Iran conflict began, and the Strait of Hormuz have been disrupted. Sulfur shipments from Middle East. Now, what is the importance of sulfur supply? If you see, Middle East produces around 1/3 of total sulfuric acid, and which is a key raw material for use in your copper extraction and various other segments. Now, China is conserving sulfuric acid for ahead of peak cropping season, and hence they have halted the export. Now, how this is going to impact fertilizer companies, if I were to ask? So basically, if you see, the high sulfuric acid will raise the raw material prices and will impact the margins for these fertilizers companies. All your fertilizers companies will be impacted, starting from Coromandel International, you have Paradeep Phosphate, Chambal Fertilizers. Now, talking about the other segments which will be at risk, you have copper production will be at risk, as sulfuric acid is a vital product for copper extraction process. Hence, Hindustan Copper, Vedanta and Hindalco Industries will be impacted. Talking about the defense equipment, if you see, large amount of copper are needed to replace damaged radars and systems, and hence your Bharat Electronics, Bharat Dynamics are some of the key defense names which will be impacted. And lastly, on the semiconductor vulnerability, ultra pure sulfuric acid is required to make advanced chips. So your Dixon, Keynes and all these companies will be impacted. So all in all, because of the halt by China will raise the sulfuric prices and will impact most of the sectors as far as India is concerned.
Thanks a lot for that. We had a revision of our chemical class as well. Thanks a lot for that, Varsha. But Mahesh, just want to get your views on this. Fertilizer space was the darling last week when we started talking about the budget or the fertilizer subsidies increasing. And now we're seeing another adverse news coming in and literally negating the stock prices. Any value are you finding in fertilizer, or would you like to stay away from it?
So, Sharad, I have already told you last week that we can play, momentum play can be done here. We are not doing a longer term or picking fertilizer space this year, because we are expecting some move from China onwards, because in political view, if you are looking from India and China perspective, there is some news coming from last week. So I think for time being, we are sideways from these type of fertilizer and these type of stock where China can impact the something. So we are sideways for time being.
Okay, so that's with regards to where fertilizer companies go, negative impact that could be coming in as well. But Jyoti CNC, that's another one that you should be watching out for. Stock is one of the top losers because one of their French subsidiaries is under investigation. My colleague Parth Goel is standing with us to tell us more. Parth, what have you picked up and what's the kind of impact that one should be watching out for?
Thanks a lot, Hiril. So, French authorities have actually initiated an investigation against the French arm of Jyoti CNC. The allegations are that they have violated the European Union laws by exporting some dual-use machinery. However, Jyoti CNC has denied all the allegations and have said that they will contest these allegations and fight them until they are proven innocent. Authorities have seized the French arm's bank accounts, which total to around 4 million euros, and two residential properties that are owned by Jyoti SAS are also seized by the authorities. So these frozen funds and liquidity strains will pass some near-term execution risk for the company, and currently the French operations account for less than 15% of Jyoti CNC's revenues, but all of this is still in the early stages, so let's see how the ultimate financial impact pans out for the company. But you rightly mentioned the stock has taken some pressure and is down almost 15% today. In fact, in the morning it was almost about to hit a new 52-week low as well.
For that, a quick view, Mahesh, in terms of Jyoti CNC, 14.5% downtick.
15% of revenue, but from apart from revenue, that's a more on educational strategy. So I think it's a negative for Jyoti CNC. We can see some more consolidation in stocks towards 600, 640 level at least. So for time being, we are negative on Jyoti CNC because it's not a normal case. It's looking something is serious in it.
Right, that's the view coming in. But adverse impact or adverse news flow is developing in Swiggy regarding the co-founders' exit, and will be starting a new venture. Seems like larger players, there is a trend of co-founders starting their own ventures. But to put that in perspective and what's actually going to impact the stock or not, we are joined in by Mahima. Mahima, how much stress is there for Swiggy because of this news?
Yes, so I think there is stress coming in for the counter, and we've seen this in a lot of new age tech platforms, right, where we're seeing co-founders and CEOs quitting. Nandan Reddy has done the same. He was the head of innovation. He's vacated his position as the head of innovation and the co-founder, and has also vacated his board seat. Now he says that he wants to explore new passionate independent projects. Basically, the entire idea of Swiggy has been built by him as a co-founder. It's been 12 years since he was building this, and he was the backbone when it came to the tech solutions for the company. Some other management changes also were there. Roger Clark was replaced by Alvis Pinto as the board member. This is from the process team. Plus, Fanny Kishan and CFO Rahul both are elevated both to executive directors. Just to give you a brief about the companies that he's already invested in. Nandan Reddy himself, he holds an investment in unicorn that is Raise. EV-backed startup called Vidyut Tech is also something that he's invested in, and Pesto Tech is also something that he's invested in. He's seed-funded consumer startups like Chai Basket, Stance, as well as Mav Health, and he's invested in diverse platforms like Felsti Games, Supernova, as well as Neen. So these could be some of the possible businesses that he could probably expand or explore into after this.
Right, investments and family offices, that's the way to go. Thank you very much, Mahima, for that. Mahesh, I just want to get your view on that. Does it change the fundamental perspective for Swiggy on these announcements, or now these large companies, they can be on their auto mode?
Good. I think stock is already corrected large from 1 year, 2 year horizon. So stock is already priced in many things. But yes, the challenges are there. Exit from ready. It's a sentimental negative for stocks. But if you're looking from a peer comparison, stock is largely corrected lot from higher levels. So these levels are not much more downside we are looking. But we are looking on a numbers. We are expecting that Swiggy can post something good number in this counter or a next counter. So I think we have to wait and watch further for a number specific. If number are coming good, then stock can be re-rated further. From current level, we are neutral on the Swiggy, but yes, we are watching carefully on this app.
That's with regards to Swiggy goes after Zomato. We've seen a change of leadership happening there. A quick view coming in terms of the Bosch conference call, and this is on the back of the consolidation that has happened. My colleague Puneet is standing by to tell us more in terms of what did the MD actually say at the conference call, which would actually matter. Puneet, over to you.
Well, just 3 to 4 key points because, this acquisition, a big one, 9,000 crore that Bosch India is investing in acquiring RBIC or Bosch Chassis Limited. And a lot was made of what could be the potential opportunity. One of them is the two-wheeler ABS mandate. Now, with this acquisition, Bosch India gets the technology for the ABS products in India. And along with that, the braking system, which is, of course, anti-lock braking system. So that mandate was expected from 1st of January of 2026 for all two-wheelers above up till 125cc. So that has been deferred. But once that comes in, whenever that is, it will be a big opportunity that they highlighted. The acquired entity had roughly 3,500 crores of revenue in the 9 months of FY26. Last year, it was 3,900 crores. It has higher margins and higher EPS growth also. So this acquisition will be accretive from day one. Very important, one key highlight mentioned was that why was this entity chosen to be acquired by Bosch India, which is for Bosch Chassis, and not the auto component one. And for them, they highlighted a very important point that is the low margin business. Growth is strong, but that is one of the key differentiation with this business that they get in terms of growth as well as margin growth.
So interesting comments coming in from the Bosch conference call, the stock down 1.5%. But completely out of time. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. And a thank you to Manish Oja as well for joining in. Lots more lineup on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Nifty and Sensex retreat from their day's low but remain under pressure as geopolitical tensions heightened in the Middle East. Broader markets mirror benchmarks as most sectors trade under pressure. Middle East slips back into danger mode. US military threatens to block maritime traffic in and out of Iranian ports while Iran warns of dire consequences. Supply jitters send oil soaring above $102 a barrel. And it's an NDTV Profit exclusive. India Inc. flags a fundraising roadblock. Companies are asking SEBI to revisit QIP pricing rules, arguing that floor prices based on historical averages are misaligned with current market levels. Sources say that the government has rolled out draft CAFE 2027 norms offering a softer phased glide path for fuel efficiency. The proposal gives automakers breathing space while keeping a strong policy push for EVs and hybrids intact. Good afternoon. You're watching Lunchtime Trades with me, Shreyanti Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets right now, and it's not looking like a great picture right now, whether you talk about Nifty or Sensex. So that's the kind of setup that you're looking at broadly. So you're looking at just about a 240 point downtick coming in for the Nifty. When you talk about Sensex as well, that cut does get much deeper, so about 850 points in fact is what you're looking at in terms of that. Now when you talk about the sectoral picture as well, that is also very sharply tilted in the favor of losses as well, and you do have PSU banks that are declining, leading some of those losses as well. Other than that, something like auto, oil and gas, IT, FMCG, PSU banks, like I mentioned, some of those sectors are actually on the back foot. What's doing quite well right now is something like energy or even defense, just holding up with that little bit of green also coming in terms of a sectoral picture. When you talk about Nifty 50 in terms of the top losers, something like an Eicher Motors, Maruti Suzuki makes it to that list from the auto pack as well. Here as well leading losses, and you do have heavyweight Reliance that's also on the back foot and quite much, because 2.8% downtick coming in for a heavyweight like that. Into Globe Aviations as well, about 2.5% odd cut coming in there as well. And even HDFC Bank is down about 2.5%. In terms of top gainers from within the Nifty 50 pack, something like NTPC, Adani Enterprises, HDFC Life, ICICI Bank or Bharti Airtel for that matter, just holding up quite resilient right now in a market like this. But let's also talk about what else is happening in terms of the markets right now. Of course, there's oil prices that are definitely top of the mind right now, and that's also something that we'll be talking about in just a short while from now as well. When you talk about crude, of course, you do have WTI that has surged past that $104 an ounce level, holding up close to that as well. But Brent also about $101, close to $102 a barrel. That's the kind of picture that you're looking at, and we'll get you some more insights shortly. But before we do that, widespread unrest broke out in Noida, in Greater Noida in Uttar Pradesh, as workers from multiple companies in fact staged protests demanding salary hikes, with incidents of vandalism, stone pelting and even arson reported across key industrial areas. NDTV's Anushka Garg reports from the location.
We are in Noida Phase 2 near Hosiery Complex, where several of the workers had staged a protest, after which it got violent and they burnt 4 police vehicles. That we are showing you from the spot, the aftermath of the protest that in fact took place today, after workers who were furious and were saying that they were deceived by the company. They have in fact also said that they were protesting and it caused a stir, demanding higher minimum wages and better compensations. The workers were demanding pay parity with Haryana, citing higher inflation and living cost. The protest got violent, which resulted in this kind of visuals that can be seen here in Noida Phase 2 near Hosiery Complex. We can still see the Noida police who are here at the spot taking cognizance of the incident that took place, where 4 police vehicles were burnt by the workers who were protesting here. Employees were from several companies in Noida. Uttar Pradesh have also in fact taken to street to protest. The workers alleged that they were deceived by companies in the name of salary increase increments. Meanwhile, on Saturday, a clash broke out between workers and police personnel in the Ecotech police station area of Greater Noida. The workers were attempting to block the road, but the police stopped them, leading to tensions and escalation. Videos of the incident went viral on social media as well. Following this, a meeting was also held on Sunday at the Noida Authority Auditorium involving police, government and district level officials. In the meeting, chaired by District Magistrate Megha Rupam, several decisions were taken in the interest of workers. Now, these includes double overtime pay, timely payment of salaries and assurance of safety. But now we are seeing that Monday morning, employees once again staged protest on the streets in Noida, leading to traffic congestion across the country and 4 police vehicles that were burnt. We are showing you another charred remains of the vehicle that can be seen here in the middle of the road, with Noida police and paramilitary forces manning this whole street so that other protests could not in fact brew here. That is why we are showing you the visuals that in fact can be seen here in Noida phase 2, where workers who were furious because of the demands that they were in fact putting in place and demanding a higher pay because of inflation was not met. They took to the streets and violent protests took place in Noida sector phase 2 and also in Noida sector 62, where several workers took to the streets and started protesting here, after which the protest took a violent turn which resulted in 4 police vehicles being burnt by the angry protesters.
No, absolutely. And thank you so much, Anushka, for getting us all of those latest details. Quite unfortunate the way that the situation is unfolding, and also the way that the traffic snarls are being caused right now when it comes to the entire Noida and Greater Noida region as well. But let's also move on. Sources, in fact, tell NDTV Profit that companies, in fact, have asked SEBI to change QIP pricing methodology as formula flows outpace market prices. In fact, Nimit Dikshit is joining in with some more details when it comes to this one. Quite the update that you're looking at right now.
Yeah, Shayansi. So what's happening is QIPs right now, which were one of India's premier fundraising tools in the public markets for the last 2 years, have sort of gone dead this year. Prime database tells us there's only 4 that have happened so far this year, although a few more in the pipeline. Now, industry sources tell us that they've been reaching out to SEBI with demands to change the pricing methodology. Why this is because the current pricing methodology anchors on a very long-term historical average of 26 weeks or 2 weeks, whichever is higher. And in the current correction market that we're in, the 26-week average gives a much higher price than current market price, and investors are not willing to put in that money. So the big concern is how SEBI will look at this now. There's been no formal consultation yet, but where companies are more and more coming out, they're delaying their QIPs for this reason, because they want a price that is closer to the current market value that they're seeing, that is more palatable to investors, Shreyansi.
No, absolutely, and that's quite the update that you're looking at right now. So the way that I look at it, a key friction point in capital raising is what is coming into focus right now. Companies and bankers are flagging that SEBI's QIP and preferential pricing rules, arguing that those floor prices tied basically to the historical averages are out of sync with current market levels. So in a corrected market, this is one mismatch that is delaying deals, deterring investors as well from paying premiums, and also slowing fundraising momentum. So a lot that you're looking at right now. The question now is that are investor protection norms colliding with market reality right now? Is it time to tweak the formula? Let's also get you some more insights right now. Prashant Gupta, National Practice at Capital Markets, Shardul Amarchand Mangaldas joins us right now, as well as Manan Lahote, Partner Head Capital Markets, Cyril Amarchand Mangaldas as well. Thank you so much for joining us, both of you gentlemen. First things first, Prashant, I'll come to you when it comes to the current QIP pricing formula that you're looking at. That is under SEBI effectively, pricing deals out of the market in a correction phase. How are you looking at the latest developments right now, and what is the way forward that you see from here?
Yeah, no, it's an interesting question. Actually, we've been, over the last 15 years, those pricing norms have been revised 3 or 4 times by SEBI. I think what has happened is that the impact of social media, tweets by world leaders, whether it's tariffs or conflicts, etc., has made markets way more volatile than they were, even 5 or 6 years ago. I think 15 years ago we had a 26-week formula for QIPs. Now we actually have a discount-based formula to the 2-week high and low, which was actually introduced a few years ago based on market feedback. I think what's happened is that with the volatility we see in the market, in the first quarter of this year itself, we've seen probably 10 days where the market has been up or down 2%. So I think it becomes difficult to do QIPs in that market. And I think that's where the need to sort of relook at those pricing norms comes from. So I think, if you look at sort of other jurisdictions like the US, which is more free market in some ways from a pricing perspective, there the board has the discretion to price the deal. And obviously the board has to act in, it's in best interest of the company. So I think they leave it to the board. I think India has always been more regulated in that way. But I think at some point, I think, we'll have to relook at the norms again.
Thanks, Prashant. Manan, I'll jump to you here quickly. So what is it that companies really want now in this environment? Would they be happy with sort of a relaxation on the look back period that is there from 26 years to reflect more currently what is the maybe an 8 to 10 week average, something closer, or is it a larger flexibility that they're looking for going forward? Also, I wanted to ask you, is this a temporary measure for the market situation now, or are we looking at a more permanent solution?
Right. Thank you so much. Quite a few thoughts on that one. First up, QIPs have a look back period of just about 2 weeks, like Prashant said. So the problem is more acute if you want to do a preferential allotment, for which the look back period used to be 26 weeks, but is now down to 90 trading days, which is about 4 months. But it is also higher of either 90 days or the last 10 trading days. So it's a higher of these two sort of levels. The flexibility, that issuers or companies are looking for is more for preferential allotment, because the trailing period is obviously much longer. And this is a problem not only now, this is a problem which happens in almost any down market or corrective phase. In fact, it became sort of quite an acute problem when around the COVID time in 2020, and SEBI that time, in a measure to provide relief to all these issuers, came out with a temporary measure. It was temporary in that case, and it doesn't need to be temporary now. And I will speak about what needs to be done now. But what was done that time was, for a period of 6 months, they gave a pricing formula which was linked to a shorter look back period. I mean, there were some of the guardrails. For example, the lockup on those shares was a little longer, not 1 year, but 3 years. Coming back to where we are today, I think we should think of liberalization in a much grander way. Both QIPs and most of the preferential allotments, and I'll speak about preferential allotment in a second, but definitely on QIPs, there is no possibility of enrichment of the controlling shareholders. So we should think about, do we really need any pricing floor? You anyway have guardrails. For example, these allotments require you to take special approval of the shareholders. There are guardrails around what you can do with the money. And of course, market forces by themselves act as a very important guardrail. So we should think of moving away from the period or the percentage of discount and look at the larger sort of, way that when Prashant mentioned in the US, capital is raised, we should bring that framework into India as well.
Very interesting. Prashant, to you, of course, similar thoughts. Do you also have any thoughts, firstly, on how we should do this moving forward? And a part of which Manan already answered, I wanted to understand why SEBI has this law in place. If you could explain to our viewers from an investor protection standpoint, why this law is in place, what is that rationale that needs to sort of move, that Manan has sort of answered, but I'd like you to elaborate on it also.
Yeah, I mean, I think Manan sort of touched upon it. I think historically there was sort of distrust in the fact that proceeds that were being raised not from existing shareholders was not benefiting, for instance, retail shareholders who can't participate in a pref allotment or a QIP. And I think the regulator was basically trying to protect that section of the investing community to make sure that the price at which the shares were being issued were, properly priced. I think the point is that, we're no longer, we're a fairly deep capital market. In the last 5 years, there's obviously been huge change in, the amount of domestic capital, et cetera, in institutions, et cetera. So I think, as Manan is saying, I think we need to sort of, if you want to change something, we have to kind of look forward to where we want to be in 5-7 years in terms of the amount of capital companies should be able to raise. Because in the volatile environment, and, honestly, if you ask Manan and me, we, I think, constantly live in that phase now. I think the last 2 years have, there's 2 good months, then there's, some other sort of geopolitical issue that comes up. So I think we have to be able to encourage companies to raise that. We have to trust boards I think SEBI already has norms on, the number of independent directors you need on a board, etc. So, I mean, if we're not going to go for all the companies, I think a good start would be, for instance, maybe the top 250 or top 500 companies by market cap, which should be allowed to sort of have a freer market pricing, which is just, the board should be allowed to determine it. Maybe smaller cap companies or where there's less free float, I think those companies, perhaps the regulator can still step in, but I think we just have to kind of be more liberal on allowing companies to raise capital.
Absolutely. Point taken there. Manan, I also wanted to try and understand what you think about the companies already exploring alternatives like private deals or structured transactions for that matter, because QIPs are becoming harder to execute. Is that also the way that you're looking at things right now?
Any transaction where you will eventually get equity shares, the pricing floor will apply. The preferential allotment regulations in India are wide enough to cover any security which will convert into or be exchanged into equity shares. So the pricing would still apply if it has to have any element of an equity share eventually.
Perfect. Just before we close, I'd like to understand, there is a pipeline, right? You would agree that there is a pipeline for QIPs and pref issues as well. And it is this market correction right now that's stopping it. So do you see if either the market changes or if SEBI sort of like they did last week, presses pause or gives some temporary relaxations, do you see a pipeline coming through in the future? To both of you, Prashant, you first.
I think the pipeline exists, and I think Manan would answer the same thing. I think companies are still looking at raising money. I think the time for quick fixes or sort of short-term fixes, we kind of need to move beyond that, because by the time we do the quick fix, there's some other issue comes across, right? I mean, for me, the more liberal we are, at least encouraging the larger companies, and the top 250 companies or 500 companies are actually fairly, well governed now. So I think we just need to trust our boards and our companies to do the right thing.
No, absolutely, and thank you so much for taking time out, gentlemen, and joining us this afternoon. So there you go. Those are some insights also coming in when it comes to the entire story that we talked to you about. And that's Prashant Gupta and Manan Dhorte joining us with all of those insights. But like I said, it's very important to take a look at crude prices right now, the way that things have been unfolding, the kind of headlines that you have coming in when it comes to crude prices. With that in mind, let's quickly take a look at crude prices and get you some more insights as well. So you do have WTI that in fact surged past 104. Currently it's pulled back just a tad bit, but still elevated and very close to those $104 a barrel levels. When you talk about Brent as well, you're looking at somewhere close to $102 a barrel, and that's been the situation for much of this afternoon. Let's also get you some insights from Vandana Bharti, Head of Commodity Research at SMC Group, who's joining us right now. Vandana, thank you so much for taking time out and joining us this afternoon. First things first, I wanted to try and understand the way that you're looking at oil prices right now going forward. What is the trajectory exactly that you're penciling in given all of this uncertainty?
Yeah, hi Shansi. Good afternoon and thanks for having me in this show. Definitely, crude oil is going to stay higher for longer this time because their disruptions will be there for longer. So this time their trajectory will be to the higher side. Now we are not expecting any kind of level of $60 to $65 very soon. So from $60 to $65, it has moved up towards the level of $80 to $85. So the base case is $80 to $85. The bull case is here $110 to $115 because the tension is rising, and another straight is the supply side is on a stake. So 25% crude supply is on a stake. So yes, we are expecting a higher trajectory for crude oil prices, and some bans from many countries in case of other commodities like sulfuric acid, which you were talking about. So many restrictions on exports, it is coming soon.
No, absolutely. Many restrictions definitely coming soon. But in terms of price levels, specifically talking about Brent and WTI, you've seen some of those elevated levels come back into the picture right now. Some of the supply disruptions that you have right now, it's also very clear that it might take months to years to fix some of those disruptions. Do you see what kind of levels are you then penciling in given such a setup right now?
in those scenario, like currently, we shouldn't refer the futures prices, because ultimately it is the spot prices which is going to give impact on the economic activities, inflation data, GDP data, every numbers. So when we talk about the price of at what price we are importing from other nations, it is somewhere near $145 to $150. When we talk about the WTI and Brent crude, it is somewhere near $110 to $115 to $104. So the derivative prices is not currently truly reflecting the picture of spot prices, and its spot prices is really very is having really a very big concern this time. Considering the spot prices, I'm expecting that the prices should be on the higher side, $120 to $125, because sooner or later futures prices will reflect the prices of spot prices, and it happened in case of silver. It should happen in case of crude oil as well.
No, absolutely. It makes a lot of sense in terms of some of those elevated levels also coming back into the picture. Of course, 120 to 125 is not a stone's throw away. It's quite some, some barrels, some dollars per barrel to go for that particular price level. Let's see whether or not the situation really boils up to that point. But when you talk about gold as well, you're seeing quite the interesting picture also play out. On one side, you do have inflation fears. The other side, you do have the rate cut uncertainty right now that's both helping but also denting appeal when it comes to gold prices. How are you looking at the next, this particular week going forward? What are you then penciling in by the way of price levels?
Very strange movement we have seen in gold prices, and now it is completely decoupling from the safe haven buying. But last week move, it has indicated that the safe haven platform is already there in gold prices, and we have seen a massive outflow in ETF, no doubt. But yes, physical buying, it is already there in the market. Even central banks to retailers, they are buying on every correction in gold prices, and gradually it is regaining the status of safe haven buying. And April onwards, we are going to get a negative data on many economy fronts, and gold is going to digest all. So this time we can see a recovery in the prices of crude oil, and it has a base near $4,600 in international market. We talk about domestic market, the base should be of near 1,47,000 to 1,45,000. And this week we are expecting an upside in the gold prices, and it is maintaining the level of 50 days EMA right now, and it should stay above the level of 50 days EMA until the time it is trading above that. We are expecting a higher side in this week. And if we talk about the counterpart of part of gold, that is which is dollar index and treasury, they are moving with a very slow momentum. So this
absolutely.
time gold is going to take a second.
Right, absolutely. And we've seen that really interesting tick really when it comes to dollar as well. But very quickly before we let you go, just wanted to get a word in as far as copper is concerned. It's under pressure right now. Do you see that sustaining as well?
Copper, nickel prices, all base metals, they are going to sustain this time, because sulfuric acid export ban, it is going to give impact on the physical availability of these metals. So whatever metals they are there, every big countries, they are making a strategic reserve. Now China is importing more and more iron ore and steel, and because of that, the strategic reserve creation, it is going to give positive impact on the prices of copper as well. So it is not an actual need at present, but sensing the nervousness in the market, every country it is going to create a strategic reserve for every critical minerals to every critical base metal. So copper, it is going to see a good upside in this way, and we're expecting 1250, 1260 kind of level in copper.
No, absolutely. And thank you so much, Vandana, for taking time out and joining us this afternoon. So there you go. Don't be surprised if you see copper prices claw back up after that little bit of loss that they've had just today. But let's also get you some more news and updates. FIR filed against 5 Anand Rathi wealth officials after employee alleges sexual harassment and threats. Ridhima Bhatnagar is standing by with some more details when it comes to this one.
So a woman employee has accused 5 officials of Anand Rathi Wealth of sexual harassment and intimidation. So the complaint has been filed in Shivaji Nagar police station at Pune, and the 5 officials are Feroz Aziz, the named ones, Rakesh and Sonali Rawal and Swapna Chakrabarti and Tejal Shah. So the woman alleges that one of the executive directors, namely Swapna Chakrabarti, had harassed her and followed her while the others ignored her complaint. She accuses that her complaint was repeatedly ignored, and she was also threatened that her job will be lost post that. Now the FIR has been registered and the investigation is underway. Now the company, on the other hand, has said that they were aware of the employee's complaint, and they had advised her that she reaches out to the internal POSH team, but she chose to go ahead to the police directly. And the company also says that the Mumbai police on 24th March 2026 had closed this particular case, and now the case is sub judice in the industrial court. And the company has said that it will comply with all the necessary steps taken for the investigation so that a smooth outcome comes out and it's ensured that women are safe in the workplace.
Absolutely, and it's very important to see how that really plays out for the company as well. Thank you so much, Riddhima, for joining us with all of those details. That's all the time that we have on the show, though. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So what's on the show today? Firstly, we'll be speaking with the management of NPST. Now, the stock is up nearly 37% in the last 1 month, and this is despite the market weakness that we are seeing. So what's the FY27 outlook is something that will question the management on the show today. So stay tuned in and listen to that. Apart from that, we'll be also discussing stocks like DMCC Specialty. Now that stock is up 20%, has hit an upper circuit. It's its biggest intraday jump that we are seeing since April 2022. Strong volumes. The company is a producer of sulfuric acid. So the recent ban by China, how does that help the company, is something that you will get to know on the show today. Apart from that, it's Atul Auto that is also in focus. The stock is up nearly 18%, its biggest intraday jump since September 2025. And will the Delhi EV policy actually benefit the company? We'll get to know on the show. Apart from that, there is Sejal Glass. Now, we spoke to the management of Sejal Glass on April 2nd, and since then, the stock has been zooming up in trade. It's up nearly 56%, has been gaining for the last 7 consecutive sessions. What did the management say and what's the way forward is something that you will get to know today on the Small Cap Buzzers. And lastly, we'll be also speaking about Enviro Infra. That stock has hit a 2-month high. It has been gaining in trade. Multiple order wins is what the company has announced in the last few days. Now, if you look at the market, the Nifty, yes, we are down by around 223 points in trade, but from the day's lowest point, we have seen a stellar recovery from 23,550. We are now trading around 23,800, a sharp 250 points odd recovery that we have seen in the market. If you look at the sectoral indices, on the top, a gainer side, it's the Nifty PSU index and the Nifty Defense index that has been gaining in trade. But on the loser side, we have Nifty Auto, Nifty Oil and Gas, and Nifty FMCG, which are down anywhere between 1.3 to 2% in trade. But when it comes to the small cap space, Mahima, what's been buzzing there?
So, Somit, overall in the broad end of spectrum also we've seen recovery coming in, but not as sharp as what we've seen in the benchmarks. But still, both the small cap 250 and the mid cap 250 trading at its day's high point. But with regards to some specific names, two names that Somit mentioned, DMCC Specchem as well as Atul Auto, both locked in upper circuit right now. Apart from that, you have Jinkushar Industries, which is seeing an uptick of around 13.8%. Birla Cable, which is also up 13%. Kirloskar Electric also seeing an uptick of 12%. India Bulls, despite of Nifty Realty seeing profit booking today is seeing an uptick of around 11%. You have Simplex Infra, which continues to gain in trade today, also seeing gains of about 10%. But on the flip side, you have counters like Moltec Packaging, which are seeing profit booking today down by about 5%. You have Jubilant Agri, which is down about 5% as well. And some counters like Reliance Infra also down by about 4%, and HMA Agra also seeing profit booking down by about 4%. But that's with regards to where some of these names go in the small cap space. But let's also welcome in our guest for the day. As promised, we are joined by Deepak Chand Thakur, who is the CEO and co-founder of NPST, joining us on this side of the show now. Deepak, thank you so much for taking out the time. Mahima this side. My first question to you is with regards to how FY26 has fared for you. You've seen a multifold jump in the past 2 to 3 years when it comes to your top line growth. Year to date, you've done around 134 odd crores. Do you think 200 crore mark is possible by the end of FY26? Sorry, Deepak, I think you're on mute. Yes, go ahead.
Hi, Mahima. Thanks. So 26 has been a roller coaster. I mean, we have been in several efforts around building the SaaS-based platform, recurring revenues, a lot of those pointers around it. So last year, we have actually built a portfolio which helps us cross 200, no doubt about it. And for FY27, we have a much larger output coming through this platform which we have built last year.
We'll just come back to you a quick detour. My colleague is in an exclusive chat with Arjun Juneja of Mankind Pharma on the sidelines of India Pharma 2026. Listen in.
As far as the innovation versus generic drugs debate is concerned, where do things stand right now and where can India take a lead?
I think innovation in India has recently started. I think India was still playing the generic story. I think the generic story now has started fading. And soon we will see many Indian companies developing innovative drugs. We have also started as Mankind Pharma. We have few programs into the innovation space, both in small molecules as well as in biologics. And in the next few years, you'll see something coming out from our pipelines as well.
So as far as the specialty or the innovation drugs is concerned, how much revenue do you expect to make out of it in the next 5 years?
In the next 5 years would be a small revenue because it'll take us at least 4 to 5 years before we come out with some innovative drugs. But I think over the next 10 years, I would say substantial portion of our revenue should come from innovative drugs.
So are Indian companies capable enough to do some big scale acquisitions and especially in the US market?
Yes, I think Indian companies are capable of doing big scale acquisitions. Indian companies have done big scale acquisitions in India. We've recently acquired Bharat Sena, which was about a $2 billion kind of an acquisition. So yes, Indian companies are capable. If they can do acquisitions in India, why can't they do it abroad? And many Indian companies have done it in the past.
And so very lastly, we are talking in the middle of the West Asia crisis. The war has lasted by more than a month. Are you seeing some impact of raw material prices, and especially with the shipping routes and the air cargo routes being completely jammed? How is it affecting your business?
I feel the effect hasn't started to come in yet because the industry was still sitting on older inventories. But I feel in the next 15-20 days or a month's time, effects would start to come in, especially with the shortage of LPG, petroleum-related products, which are used in manufacturing our APIs and formulations. So I think there will be inflationary price hikes which will happen because of the war, and I feel it'll take about 6 months to 1 year. Even if the war ends now, it'll take about 6 months to 1 year before this will all end because there's demand and supply gap, and demand is more and supply is less, and even if all the refineries start, so it'll take some time for the supplies to come back to the original levels.
So thank you so much for being to NDTV Profit. Pleasure speaking to you. Thank you.
All right, okay. So of course that was the management. You heard from the management with regards to Mankind Pharma. But switching back and talking about NPST, we were talking to Deepak. Deepak, you talked about FY26. Just want to get a sense, with regards to FY27. If there are internal targets that you've set for the company with regards to your top line, you've, if I'm not wrong, said that your EBITDA might be in that sustainable range of 30 to 35%. What is the internal target that you're aiming at when it comes to FY27?
I have already given an understanding to the market that for the next 2 years, we continue to grow at 70-80% odd. And that's majorly because of our heavy investment, which we did in RegTech segment. In fact, we recently bagged a deal with one of the large PSU on that front. Parallelly, the investment we did around creating, our own ecosystem around giving the plugin around the digital payments, that has also got launched. So all of these is, and plus the global push that we are currently doing, that helps us achieve this number for the back-to-back 27-28 outlook that we are looking at.
If you could just dwell into more details, the 70-80% growth that you are seeing is on the back of the investments. How are these investments going to help the company, and what is the foreign expansion that you're looking at? What is that expansion? How will that also aid onto your numbers? If you could just delve into more details, sir.
See, like I said, our strong domain has been technology partner to banking and regulated entities. This is what we're doing already. However, we were missing out on the mid to small banks, mid to small regulated entities. To look into that segment, we started investing into a completely new SaaS-based solution, which was possible to sell in a plugin model. So that will be an additional revenue. Secondly, our foray into RegTech is majorly because we have ensured last 2, 3 years, whatever we have learned in payments, how do we secure that entire ecosystem with our risk engine? And how do we provide a risk score to the banks and the entities, to prevent the fraud in the system? Now, that is of much demand in the industry. We launched that solution and we got the first order. We believe this is also going to add a lot of revenue to the organization, which is again incremental. And beyond this, we are also seeing global demand for the Indian technology companies, which are majorly into digital payments. Because I'm proud to say that we are first world in this particular segment, India, and whatever we have built here, there are others who would like to replicate that. So we stand at a cusp wherein whatever we have built, learned, use cases, what we have solved in this country, these are straight away, something that Africa, Middle East, LATAM, Central America, and even Southeast Asia. These are the areas where the demand is high.
Okay, Deepak, you talked about your international, business scope going forward as well. Just want to understand, as to going forward, let's say 3 years down the line, how much meaningfully do you expect these, international counters to contribute to your business? What is the scale looking like?
Right now, what we have seen is, at least for next 2 years, anywhere around 20 to 30% contribution coming from the global market.
Okay.
And that's majorly on the technology partner role that we are playing right now in India. And as and when we go forward, the success of RegTech in domestic market will help us multiply that particular piece as well in the international market. So maybe 2 years down the line, the contribution will increase on that front.
I just wanted to understand any other capex plan that you have for FY27.
Majorly investment into digital currency, what RBI is looking at. That's one area we would love to look at. Secondly, reinvesting into the RegTech segment in the areas and the use cases which are multiplying day in and out. That's again our investment. And thirdly, whatever we have built around the service aggregation business, how do we take it to the direct, customers? So far, we have been servicing through our orchestration platform to the payment aggregators. There is a need for the large scale merchants on the technology front, and that is the area where we are investing now.
Just one last question, Deepak, from my end is that what are the top risks that you're seeing? Because regulatory reforms and around this are also tightening. What is the kind of 2 to 3 big risks that you're seeing? Is it execution? Is it regulatory framework? What is it that you foresee?
Any solution which, as per the regulatory requirement, is not required, and if that is something that will come up, then our portfolio where that particular product is servicing those customers, that is where it will get impacted. And at the same time, we being on a technology front, any reform coming in from the regulation, any impact from the decision coming from the regulator, that will either bring down the revenue coming in from that particular product or provide an opportunity to create a completely new product. So being a tech partner to them, I think there are certain areas where we find a risk around the product, but we also see an opening for the new opportunity coming up.
Okay. All right. Deepak, thank you so much for taking up the time and helping us understand as to what the future of the company looks like. Thank you so much for joining us here at NDTV Profit.
Thanks, Mahima.
All right. With that, let's also welcome in Narendra Solanki, Senior VP and Head Fundamental Research Investment at Anand Rathi, joining us now. Narendra, you heard the management. Any particular views or thoughts on NPST?
Good afternoon. First of all, let me start with disclaimer. We do not have any active recommendation on this particular stock. And now coming to the plans heard from the management, I think the growth is very strong and the future plans are also very aggressive, which should continue to maintain these high level of growth. Now, looking at the valuations, I think that the market has already priced in 3 to 4 quarters of earnings. Now, the further return would depend on the timely execution of the growth plans and how soon the the overseas business ramps up for the company. So that would be the key to watch for the company. And at this moment, yeah, it's an interesting stock to track.
The next stock that remains in focus is DMCC. Now, it's a manufacturer of sulfuric acid. The stock has hit an upper circuit of 20% on the back of strong volumes, and this is its biggest intraday move that we have seen since 2022. So, is China banning export of sulfuric acid the major reason behind this move? Let's get in Varsha to understand more.
Yes, so today, yes, this is one of the reasons why the stock is under focus, as China is supposed to halt sulfuric acid exports starting May, and this move will. So if you see why DMCC is up, let's see the 4 points. One is, of course, the China restriction supply leads to global chemical prices rising, and DMCC is a specialty player which can pass on the higher sulfuric acid prices to its customers. Now they'll also benefit from higher realizations in sulfuric acid and the derivatives of sulfuric acids, which DMCC is actually into, being a specialty player. China Plus One shifts will lead to potential increase in export demand, and of course specialty portfolio, if you see, of this company gives pricing power versus commodity players. So these are key main reasons why DMCC is up. Talking about their business updates, well, their sulfuric acid operations are running at 95 to 100% utilization, and the sulfur cost increases have been passed on so far. So this gives us the confidence that company will be able to pass on these prices going ahead as well. Onto the Europe outlook, exports to Europe dropped sharply due to demand collapse, and the management is pessimistic when it comes to Europe recovery, and they are seeing this as a structural issue and not cyclical. Onto the capacity mix, that is specialty versus commodity. Specialty chemicals are operating at 50% of utilization, and significant unused capacity remains, but the specialty segment carries higher margin, and Europe loss has hit specialty utilization at the most, which is expected to recover soon. So overall, China limiting it or banning its exports of its sulfuric acid is what letting this stock buzz as of today.
Right. Ms. Narendra, you heard Varsha. After that 20% up move, would you recommend this stock to your clients?
Again, we do not have any coverage on this, but if you see after the West Asia issue, the oil supplies have been impacted substantially, and sulfur is also one of the key ingredients, which is a side product of oil refining, etc. And India is an importer of sulfur. I think 60%, 65% of the sulfur demand is met through imports. So definitely there is a crunch in the both domestic as well as import markets, and the prices have been on the rising side. However, it remains to be seen because sulfur is also used in lots of downstream industries like fertilizers. So how much the price can company pass it on to its end users would remain to be seen, because ultimately if prices rise substantially, then the government should step in and impose some kind of price control over there. So that would be a key risk for the company. So you have to keep in watch that aspect in the moment, and I think it's good days for the company if it's in fact supplying the sulfur at this time in the markets.
Okay, all right. So that's the view coming in on DMCC. It's time to take a look at the F&O space, and we have Sharad joining by to give us a perspective. Sharad, have things changed from when we last spoke?
Well, yes, there was a recovery at play coming in, but definitely we cannot rule out volatility, especially in the last 1 hour of trade. The VIX itself is still, you could say, elevated. It has not corrected as much, but yes, there was just only one green last time we checked. That was NTPC, but now ICICI Bank, Bharti Airtel, Sun Pharma and BL also make it to the list. So there is a minor recovery at play, but it's not that convincing because HDFC Bank, Reliance are still not participating, and the concerns definitely for the auto stocks, especially look at Maruti, that stock is down 5% as well. And BankX also, there are mixed signals coming in, but let's focus on the stocks where the action is and where we are seeing long build up. And that has not changed yet. It's the power theme which is doing well, be it JSW Energy and Tata Power. Let's see what's there in the short covering. And if you could just pull out the stocks, we have Voltas and Hudco. Voltas, remember, the AC related stocks are in focus. IMD is going to come out with its update on the monsoon also, and it seems like there might be a little bit buying again in this cooling theme. Long unwinding for PNBC and Housing Finance and Samvardhana. And lastly, I'd like to point out the short build-up, and that's definitely happening in the auto space. Maruti Suzuki, Hero Moto, and there is definitely a concern in the NCR space as well. So these are the important stocks which should be in your radar.
Right, let's go across to Danish to understand what the management of Biocon has to say.
Seen a lack of availability, but of course costs have been moving north. We've seen shipments, logistics being challenged, and there is a general availability of connections for products to move in and out, which has been challenging than before. But fortunately, so far things have moved in the right direction. Let's hope that it solves itself soon so that we can get back to the business of getting people their treatments on a more regular basis.
So would we see any kind of an inflationary pressure on the pharma companies and kind of some price hikes on medicines later on?
I mean, you typically do not want any of these to be passed on to patients, and typically these kind of charges in the longer horizon should even themselves out. But in the shorter interim, you could see some cost build up that would happen purely on the logistics and the availability side of products, and there could also be a supply that would be intermittently affected, and that's where these things will affect in the shorter window.
So there's one big famous debate in the pharma industry about the generics versus India taking a lead as far as innovative drugs is concerned. So how can we take an advantage as far as specialty or innovative drugs is concerned?
See, India has been exceptionally good in terms of what we do, in terms of making sure that we can supply large quantity of drugs, which is why we are called the pharmacy of the world. And cost arbitrage has really been an area where we've excelled. What is the shift that we see happening is that we move towards more capability-led leadership, which is where we move from volume to value. And I think India is on that upward trajectory. There's a lot of conversation even here at the FICCI event that we are in today, where the Honorable Union Minister J.P. Nadda ji talked about it. The Honorable Minister Anupriya Ji Patel talked about it, where the whole focus is to see how can we encourage Indian innovation. And that's the shift that we see happening. Of course, cost will be an advantage, but if we can move that up the value chain, then India will build towards a Viksit Bharat.
So very lastly, how can Indian pharma companies have an edge over the US companies, and would we see some interesting acquisitions in the future?
I think more than having an edge over anyone, I think there is certainly a lot of capability that exists within the country, a lot of talent, and I think with the right policy framework that I clearly see when the union budget was presented, it already sets that framework. India is really set to do far greater things than what we've done so far.
Many thanks for speaking to NDTV. Pleasure speaking to you. Thank you so much for giving your time, sir. Thank you, sir.
So that was the MD and CEO of Biocon, Shreyas Tambe, speaking at the India Pharma Event 2026. But let's focus on our next small cap buzzer. Sajal Glass is the one that's been buzzing since the past 7 sessions. And we have Varsha joining us to give us a perspective. Varsha, it's locked in upper circuit today as well. What did the management exactly tell us and why the stock has been buzzing?
Yeah, so it's been like 7 days since we spoke to management, and the stock has been on upper circuit or has been buzzing since that interview. And let's see the key highlights of that interview. Well, they're expecting FY26 revenue to be 400 crore with profit of around 30 crore when it comes to FY26, and they're expecting 25% growth in FY27, and they're also targeting EBITDA margin of around 18% in the same period. And they're also seeing utilization ramp up at their acquired plants. Talking about the product mix shift, that is value added and specialty glass. So the strategic focus remains on higher margin specialty products. This will actually lead to increase in the EBITDA margin, which also includes fire-rated, bulletproof and digital printed glass, and the margin expansion is expected through that mix improvement. The key watch-outs would be, of course, one is will the management be able to execute what they have told to NDTV Profit, number one, and also the integration and the utilization ramp up at the acquired units is one of the key factors that investors should watch, and the fire-rated glass commercialization timing should be on your radar, and of course the commissioning of UAE tempering line and the margin recovery are the few key things that investors should watch out. So overall, a good guidance has been given by the management, and hence we are seeing the upper circuit since last 7 consecutive sessions.
Okay, Varsha, thank you so much for getting us those details. In fact, that conversation that Varsha was talking about with the management that we had a while ago with Amrut S. Kada, the founder and promoter of Sejal Glass, he said that company is expecting PAT to cross 7.25% in the coming quarters. Let's listen to exactly what he said.
Q4 mostly we will maintain the same or maybe 1% extra because our this Taloja unit, which is now Taloja and Erode, is now performing better. The last this finance year we have acquired, and this is the Q3 for that unit. So we are working, and mostly we will PAT will be around 7.25% this quarter. We are on track that 25% growth on FY27 we are considering on the moderate, and if the geopolitical situation will be under control, then I think we will surpass 40% of the growth.
Narendra, any view on Sejal Glass here? The stock has been on a tear, 56% up since April 2nd.
Yeah, again, we have no recommendation on this, but yeah, the results and the numbers posted by the companies are good, and the growth number which they are talking about, plus the improvement in the margins, which are currently hovering around 5% and targeting 7.5%. So that's almost 50% kind of a jump. So I think the markets have been reacting to that, and if it comes and if it continues to maintain the kind of pace, so I think there are better days ahead for the stocks.
Well, thank you, Narendra. Thank you for joining us and giving us your perspectives on the stocks that we discussed on this show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ खास होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and get to all your stock-related queries. So do start sending them on the WhatsApp number that's flashing on the top of the screen. You can also call us, speak to us directly, as well as to our guest on the number that's flashing on your top of the screen as well. That's the landline number if you want to call us and speak to us. But before we do all of that, a quick check of how the markets are doing, because another very important session for the markets today, the Nifty 50 continues to be plowing back in terms of what was lost in the morning. So we're down about 150 points, but you see an inward essentially buying across the day, and the chart's moving towards the highest point for today. Now, it'll be important of where we end, because 24,000 continues to be a long-term support for the index as well as the resistance at this point of time, because we last time also on Wednesday last week we touched 24,000, got back down again, and then of course what we've seen today, a 300 to 400 point downtick in the start. So almost recovered around 250 points on Nifty 50. The heat map also reflects this gain as well, because we started off with almost 40 to 45 stocks in the red, and while they are still dominating, we've seen some key gainers like Adani Enterprises, HDFC Life, ICICI Bank and NTPC. Amongst the losers is the Auto Pact. It's down and out today. So is Bajaj Finance, Indigo and Jio Finance. And in terms of the sectoral heat map too, gives you that perspective. PSU Bank Index continues to be under pressure, so does the Nifty Auto. And Nifty Auto and PSU Bank have essentially exchanged positions twice since the start of the trading session. So you're also seeing the FMCG index, which is down, and also the IT index down by about 1%. The broader markets though look a little better. The mid cap and the small cap index have been something that's been much better than the benchmark, and there you go, just down 0.2% at this point of time for the mid cap 150. The small cap too is just very close to getting into the green, so it's a very positive screen going into the last 90 minutes of the trading session. BSE 500 also very quickly before we start taking all your stock related queries. Of course, in terms of Zydus Wellness is up 10.5% as we speak. So is Tata Investment Corp, AstraZeneca and Thermax. While on the losing end, you're seeing Maruti, Eicher, Asai India and Hero MotoCorp down in trade today. Let me welcome in Tapan Doshi, research analyst at CATapan.in, as well as Akshay Bhadwaj, senior VP at JM Financial on the technical, joining in now. Gentlemen, both of you, thanks so much for joining. It's a good time to start taking your stock related queries now, given where we have seen the markets to be. But let me go across, take the first query on Mazgon Dock. Now, our viewer, Mr. Rao, wants to know if it's an advisable time to buy into this counter right now at 2488 odd levels. What would you suggest, Akshay? Good afternoon. Welcome to the show. Your view on Mazgon Dock?
Yeah. First of all, good afternoon to all. For Mazgon Dock, if you look at the price charts, it's been a good recovery since the past few trading sessions. The recovery has come from a strong support zone of 2100. If you're a very short-term trader, now we are dealing with a temporary resistance of 2560, and this resistance should be overcome if you are looking at the next round of momentum. So right now, as a short-term trader, it's a wait and watch, but for an investor or someone having a time horizon of 3 months plus, continue to hold for positional targets of 2800.
2800 to watch out for Mazgon Dock according to Akshay. But let's go across, take the next query on IndusInd Bank, and our viewer is holding shares at 1154. Now they're holding roughly 500 odd shares, so currently sitting on a loss and wants a 3-year view on the stock now. So the key question largely being now, what should he's bought it at 524, so must be holding for a really long time, and stock's trading at 820, of course. Now, Tapan, we've seen just a very brief period of where the stock went all the way up to 900 and then reversed back down now. You've seen some key hirings there within the banks under some important functions. Do you feel it's a good time for our viewer to continue hold since his buying price is 520?
Good afternoon, Puneet. Yeah, see, there were in the past corporate governance issues, and lot many things need to be answered before someone think about long in IndusInd Bank. See, it's been from last few quarters, everything is been promised, but it has not been delivered at a result point of view. Still, I feel lot of catch up need to be done, and still NPA issues are still there. And when the whole banking industry is falling, I think much better. You can say the exceptions and other options are available. So I think better to go that. Here I still feel that 1 or 2 quarter one has to wait. So my take is I think better to go out from here and go to a better private bank.
Got that view, Tapan. The next question coming in now from Shankar, now from Bengaluru. He's trying his luck again with TVS supply chain. He asked us this question on Friday as well. But he's holding shares at 102, stocks trading at 111. Akshay, what would we suggest for his 250 shares? Because he also is looking to buy that same quantity yet again. Would you recommend that?
So looking at the price charts on the weekly time frame, I think the stock is trying to make a comeback, but my understanding is it's going to be more of a short term with a 1 month outlook, which fits the setup currently. And I think the recovery rally with the stock price at 111 can see the best case as 135. So if 135 target works for you, it's advisable to take a buy trade. 90 is a strong support. So it's more of a trading pullback for which you can work with.
Trading pullback and something that you can work with is what Akshay recommends. Stock's been in a downward trajectory since it listed back in 2022 or 23 odd at almost 190 to 200 rupees. So hasn't done well for investors at all at this point of time. But let me go across, take the next query. This one's on Yatharth Hospital, and Ekambara is asking us this question. Now, Tapan, it's a two-part question. He is holding 50 shares of Yatharth at 560. Now, stock's trading at almost 760 and wants to know if he should exit this and buy Aurobindo at the current time. Is this the correct decision, or should he continue to hold with Yatharth since he's in the gains?
Given the two options, of course, I think he's for the long term. I think Yatharth may give a better result here because you see, whole hospital industry is doing well, and again, the management of Yatharth is positive. Again, if you see even the profitability point of view and sales growth point of view, they're done very well. I think much more better growth is also available for the future. So my take is better to stay in Yatharth rather than Aurobindo.
Staying Yatharth is what Tapan recommends, and hopefully Ekambara either answers your question. Let's go across to our first caller for today. It's Sanjay dialing in from New Delhi. Sanjay, very good afternoon. Yeah. Welcome to the show. What's your query?
Yeah, thank you for taking the call. I am having a LIC of India at the rate of 810 shares.
Right.
Now today I heard about the bonus meeting is going on, and the bonus will be there, and the price is zooming somewhere around 800.
Right.
So I wanted a short-term view. Whether should I go for a bonus or I should quit at my cost prices, because I have a very short-term view.
Correct. Now Sanjay, of course, you rightly mentioned that today's the board meeting is there today, and there's been a long-term trigger that the government owns 96%, and at some point of time that selling pressure will have an impact on the stock. So you're thinking in the right direction. But on the charts, Akshay, would you suggest him to exit this counter now, or is there any early indication of rally? Because I know it's a very difficult position to be in. Stock could run up till the date of the bonus essentially at this point of time. But what would you suggest?
See, on the price charts, the trend is negative, and the negative view will see a reversal if we manage to surpass above 550. So that's pretty far off, almost 30-40 points from where we are right now. I have a feeling that the stock will try to make a breakout, but since the viewer has maintained a short-term stance, I think around 530 to 540 on spot is the level where you consider taking an exit or booking out your profit if it is a short-term trade.
Got that view, Akshay, and continue to monitor LIC today, and it's going to be a very important board meet coming at a very crucial time where the stock has underperformed over the last couple of years. Do remember the IPO price was 904 for LIC, so hasn't given any returns for investors since it listed as well. But go across to the next question now. Now that's coming in on MV Photogenic, and our viewer Dilip from Kolkata holds roughly 350 shares at 213. Let's pull up that counter now. And Tapan, his question largely being whether he should continue to hold this counter for the long term. Would that be your assessment too?
Well, if we talk about this stock, now the stock has come up from the bottom, and if you see even the profit growth, sales growth is good, but the thing is the valuation is still, I think, on a higher side little bit, I think. But I think he can hold the stock. See, currently there is a lot of pricing pressure in this sector, so there we have to see whether they are able to handle the margin on. So my take is that better to have a stop loss and hold the stock for a little bit longer.
Got that view, Tapan. But हमारा अगला सवाल जो है वो एक कॉलर से है. सुंकी पाल जी हमसे जुड़ रहे हैं वेस्ट बंगाल से. सुंकी जी बहुत बहुत नमस्कार. कैसे मदद कर सकता हूँ आपकी?
हमारा RVNL 200 शेयर है, 400 गौड़ है, 400 रुपीज
400 में लिया है, करेक्ट.
अभी क्या करूँ? हमारा रुपया चाहिए, 1 महीना 2 महीना की सेल कर देंगे.
अच्छा, और ये आपने कितने समय से बाय करके रखा है सुनकी जी?
मई जून तक.
अच्छा, जून. अच्छा, मई जून में आपने लिया था पिछले साल, समझ गए. देखिए सुंकी बाल जी, क्या है कि ये स्टॉक थोड़ा डाउनवर्ड ट्रेंड में है, जैसे काफ़ी गिरौती हुई है इसके शेयर प्राइस में. बट मैं तपन से एक व्यू लेता हूँ. तपन, RVNL पे सुंकी पाल जी ने 400 रुपये में लिया है, उनके 200 शेयर है एंड उनको ये एग्जिट करना है. क्या वो फंड कुछ चीज़ों के लिए रुक सकते हैं? क्वार्टर अभी रिजल्ट्स के लिए वो कितना टाइम तक रुक सकते हैं? तो क्या आपका व्यू रहेगा तपन?
ये स्टॉक में प्रॉब्लम है एग्जीक्यूशन का. अगर आप देखें इनके पास ऑर्डर बुक तो बहुत बड़ी है, लेकिन एग्जीक्यूशन नहीं हो रहा है, एंड वो काफी क्वार्टर से ये हो रहा है. अभी देखिए तो स्टिल आई थिंक लास्ट क्वार्टर भी इतना अच्छा नहीं गया. आप वेट कर सकते हो एक आध क्वार्टर, लेकिन मेरे हिसाब से अगर ये क्वार्टर भी अच्छा नहीं गया तो आप बेटर है एग्जिट करके. आई नो लॉस थोड़ा बुक करोगे, लेकिन बहुत सारी इंफ्रा स्टॉक भी नीचे है. जैसे L&T की मैं बात करूँ, अगर 3 साल अगर आप L&T को, आई थिंक L&T आपको अच्छा रिजल्ट दे देगा कंपेयर टू RVNL. यहाँ अभी भी मुझे लग रहा है कि थोड़ा एग्जीक्यूशन का प्रॉब्लम रहेगा, तो मेरा टेक होगा एक आध क्वार्टर में देख के फिर स्विच करना है तो आप कर दीजिएगा.
सो सुंकीपाल जी, होपफुली ये आपकी मदद करे. 3-4 महीने तक रुकने की तपन के व्यू है, 1 क्वार्टर या 3-4 महीने रुकने का आपका व्यू है. उसके बाद आप वापस हमारे साथ जुड़ सकते हैं देखने के लिए एक आपके व्यू के लिए RVNL पे. बट होपफुली ये आपकी मदद करे स्टॉक पे. बट let's go across, take the next query now. Now that's coming in on Coforge. Now Lalita from Bangalore, who's a regular viewer, is holding shares at 1325 Akshay and roughly about 16 shares. What would you recommend her to do now? She is currently, of course, sitting on a loss. Would you recommend buying a little more, or the charts suggest otherwise?
IT has been a pain point since the beginning of the year. It's just that the last couple of weeks has seen a pullback in most of the IT names, and that is because it is more of a short covering in the futures and the option space ahead of the quarterly numbers. Now, technically, if I were to look at Coforge Limited, still the technical trend is weak. So it is better, I feel, that if it's a more of a short-term 1-month view, take an exit from the stock at the current market price and be invested in better or stronger chart names in the IT pack, like an Emphasis, a Tech Mahindra, or an HCL Tech over Coforge.
Would be the 3 picks for Akshay at this point of time. Let's go across to our next caller now from Chennai. Natarajan has a stock query for us. Natarajan, good afternoon. Yes. Welcome to the show. What's your query?
Very good afternoon. First of all, my appreciation to NDTV for this Ask Profit program.
Thanks so much, Natarajan.
One program which I eagerly look forward to on a daily basis because you give a lot of constructive advice.
Thanks so much, Natarajan. Appreciate you calling us and letting us know about it. Go ahead with your query.
Yeah, my query is on Zaggle Prepaid. I bought 100 shares of this company at 360 in September 25.
Right.
Now, ever since that, the share has been on a continuous decline. And currently, I think it's holding around 250. Despite a lot of positive news of the company almost on a daily basis. Every day I see that some agreement the company is entering into. A lot of positive news, but the share price keeps going down and down.
Right.
So what should I do now? Should I hold or should I dispose of the share?
Right. Now, Natarajan, that's a very fair question. Stocks actually corrected from 560 at the start of 2025. And that's purely based on either valuations. But you're right, they do come out with every client win that they get essentially across products. But Tapan, would you recommend Natarajan to continue holding Zaggle, because we started to see some momentum yet again, and then that So I think it was at 180 just a week ago, and then we've seen buying now. What would you recommend, Natarajan? Is this a more long-term, medium-term bet of 2 to 3 years, and maybe it comes back? Should he buy back a little bit more now, average down?
Yeah, but I do agree, because results are coming okay, but somehow no stock is not running. So you can say no, here it is consolidating, and I think the valuation looks okay to me. It's not too much high, and I think if you can wait so 1 or 2 quarter more, I think some recovery will be coming from here. The overall, if you see the order book and compared to the whatever wins they are getting, they are good, and the management is also positive. So I'm okay with this stock at this valuation. Better to hold it.
Got that view, Tapan, but let's go across, take the next query now, and hopefully, Natarajan, that advice helps you at this point of time. It's coming on Navkar Corp. Now, it's a smaller counter, Akshay. Sanjay Samtani from New Delhi is actually holding roughly around 3,000 shares at a bought at 100. Now, stock's very close to that level. What would you suggest? Should he exit or continue to hold this counter from some upside?
Now on the weekly time frame, on the technical charts, the support of 75 to 80 is a massive support zone. I think in the last couple of months, there are numerous instances where the stock has shown a tendency of recovery from the levels of 80. And I believe the same kind of a pattern may unfold again, where you can look forward for potential targets of 125 to 130 with a time horizon of 2 to 3 months. So continue to hold for worst case scenarios, maintain a stop loss below 70 on this buy position.
Got that view, Akshay. The next question coming in on Vinati Organics. Our viewer Nagaraj is holding 100 shares at 1,300. Tapan, would you recommend him to continue holding average down, because chemical names haven't done well in the last few years?
It's not done well, and again, if you see the profitability also not coming up again, because of this war situation, still a lot of problem is there in this sector. So still, I am not too much optimistic. I think if we can wait for few quarters more, otherwise for next 2-3 quarters, still I feel there will be some pressure. So if you can wait, better to wait. Otherwise, you can move out, because I think he has to own this stock at least for 2 years if he really want to have a meaningful gain from here.
Got that view, Tapan, but a very interesting question coming in now from Ranjit. He's from Hyderabad, and Akshay, he wants to know what's the right time to invest in steel stocks. So between JSW, JSPL, Tata Steel and SAIL, or any other counter in the metal space that you're tracking, would you recommend entry at this point of time, or wait for a bit and buy into? What would be your recommendation?
Yeah, so I bullish on the metal space, and I believe most of the names have strong technical setups, and the sector can do well with a time horizon of next 2 to 3 months. So looking at gains of 5 to 7% from the current market prices, and the best stocks which have healthy technical setups where you can consider a buy position will be a Jindal Steel, 1. Second can be Vedanta, 2, and third can be a JSW Steel. So these are the top 3 names. You can also consider Steel Authority, but if you want to buy in cash, because there is a breakout approaching around 175, if it does manages a breakout, then you can look forward for targets of 200 plus.
Got that view, Akshay, and hopefully that does answer your question. The next question now coming in on Jyoti CNC. Now, our viewer wants to know, after this correction of almost 14%, let's pull up the counter still, and it's trading still at the bottom end of that chart. Tapan, he's asking actually if it's a good time to enter the stock. Now, we've seen latest news come in from French authorities, taking questioning of the international subsidiary. Would you recommend even venturing out, or just wait for more clarification?
No, Puneet, I'll wait for more clarification, because we have to see whatever update is there, is it materializing or not. And again, the stock is falling a lot. There are a lot many, their competitors are doing well comparatively. So my take is, even though if I see the profitability and all that, that is looking okay, but only based on this news, I'll just wait for this news to pass and see that, then only take a position here.
Got that view, but let's go across. Take another caller now from Chennai. And Bhaskaran has a stock query for us. Bhaskaran, good afternoon. What's your query?
Yeah, this is Bhaskaran here. I want to ask, I am holding Reliance shares of 500 shares. I bought it around 1,219.
Okay.
But it seems to be one day it's going up and suddenly it's coming down. I mean, So what to do? Whether I have to hold the shares or I can exit?
And Bhaskaran, would you be okay holding the shares for a little more while, or is this more of a short-term question where you want to exit and looking for a exit price?
No, I want to hold it because this share I'm holding more than 10 years.
Okay, more than 10 years. Okay, got it. Well, Tapan, we could expect, Q4 to be a little weak for Reliance, but over the medium term, you'll see another listing coming from the Jio basket. Would you recommend Bhaskaran to continue holding?
Yeah, please hold it, because I think next value unlocking will be that listing of Jio and Jio Telecom. If that is happening, I think a lot of value unlocking will happen. So based on that only, and in future, maybe Reliance Retail also. So yes, and again, the valuation is quite okay at this level. Even though the oil prices are up, that may also help Reliance in a way. So yes, at this level, he can even add also if he wants, but yes, hold for the long term.
Got that view, but it's time now for the rapid fire round. Viewers as well as Akshay and Tapan in this edition of Ask Profit. The first question now coming in is from Soumya from Bangalore on Canara Bank, bought at 132. What's a short-term view, Akshay? She's holding 500 shares.
Short-term view is a hold with a potential target of 145.
The next question coming in now, it's on Nestle. Priyanka wants to ask if it's a good time to buy for the long term. Tapan, would you recommend that?
No.
Next question coming in now on BEL, and actually this is from Mr. Gupte. He's bought 600 shares after adjusting for bonus is what he mentioned. That's 43. So that's almost the 10x gains that he's holding on. So must have bought it a really long time ago. Tapan, should he continue holding?
First of all, congratulations to him. Of course, hold this stock for the long term.
Pradeep wants to know if it's a good time to enter into a fresh position for a long term on Ather Energy. Would you recommend that, Tapan?
On dips.
On dips, okay. HAL bought at 5050. What should Seva do, Akshay, with this counter now?
Continue to hold. 4500 can be the potential short-term targets.
Avanti Feeds bought at 1117 rupees per share, Tapan. Now he wants to hold for 3 years. Would you recommend that or book some profits now?
No, book some profit.
The next question coming in is on BSE, trading at an all-time high now is what Vinod recommends. Should he book profit now, Akshay, or is there more legs to this rally?
More legs to the rally. 3200 is the support. 3500 to 3575 can be the short-term upsides.
Shriram Finance bought at 1020. Anish wants to know what should be his target in the short term. What would you recommend, Akshay?
For Shriram Finance, the short-term targets are working around 1075.
Tube Investments bought at 2800. What would you recommend for Piyush Shah to do, Tapan?
Hold it.
And for how long?
Yeah, longer, for 1 year at least.
A short-term target also on Tata Power here, Akshay, on the charts.
Tata Power is on the verge of the breakout. The breakout has not happened, so 420 is an important point you need to consider. Only if it breaches it, then we will review it. As of now, book near 420.
Sudhakar has a question on DLF, bought at 520, Tapan. Should he continue to hold for the long term?
Yes, hold it and he can buy also at this level.
The next question coming in now is from a viewer, Shruti. She wants to buy into a few stocks within United Spirits, Indian Hotels, Pidilite, amongst others. What would be your view, Tapan, out of the three?
I think Indian Hotel.
Our viewer holds, Gopi holds almost 2,000 shares of Tata Investment Corp, bought at 641. Should she exit or sell some now, Tapan, at 720?
Yeah, better. No, we don't know. There is a lot of uncertainty in this company.
Got it. Well, that is the end of the rapid fire as well as this edition of Ask Profit as well. Thanks so much for that, Tapan as well as Akshay, for helping us solve almost a lot of queries, because we were at 57 in the morning edition. Now we're at 92. So thanks so much to both of you for helping us solve all these stock related queries. But viewers, all the time on this edition of Ask Profit, stay tuned to NDTV Profit. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
कुछ बड़ा होने वाला है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus
Welcome. You're watching India Market Close, and it would be safe to say this is a much better picture than what it was looking like at opening. Here you have the Nifty 0.75% down, but remember you opened with a 2.5%, nearly 3% cut. The intraday of the Nifty will show you the extent of recovery that we've seen through the day, and it's not half bad, considering that we opened the day with the fears of a double blockade in the Strait of Hormuz. All things considered, markets have shown some resilience.
Yeah, it seems as if probably they are discounting the fact that the war is going to continue. What happens to the ceasefire? What happens to... probably this is going to become the new normal, and that's what markets are discounting.
Yeah, you know, so three reasons maybe. The expectation of another taco trade. Pull up the heat map while we're at it and not just stay on this. Let's just look at all of the data going through. The expectations of another taco trade. Remember, the deadline for the US blockade to start is at 7:30 this evening. And I ask you, of all the deadlines that have been talked about since the start of the war, has even one been met? So, which is why perhaps that expectation of a reverse. All right, Eicher Motors, Maruti, all your auto components and automakers in pain. Indigo in pain, not surprising. I mean, it's bad, tough time for any airline. right now with ATF prices and exports on ATF also going up. Reliance Industries also in pain as once again the Strait of Hormuz gets squeezed not once but possibly twice. On top of that, you have the Iranians coming and talking about another strait that they're going to shut off, the Bab al-Mandeb, and we'll get that map up for you. It's quite interesting to see how that works out. Just on the winning side, at least, Adani Enterprises, ICICI Bank, HDFC Life. So smattering of stocks that are really pulling the markets up.
Yeah, and one more thing I want to add, Tamanna, over here is if you see auto, it's very interesting to see a Tata Motors PB which is in the positive versus the others. And I think this is the Delhi EV policy play because it's Tata Motors PV who has higher exposure when it comes to EV models. So probably it's that trade which is playing out versus a Maruti and Eicher if you have to look at the EV players.
Is it though? Then why not a M&M?
That's what I was just trying to scout for where is M&M over here. Yeah, but in terms of the kind of losses that a Maruti and Eicher are seeing, probably that could be one of the reasons why you're seeing this trade. But in terms of broader markets also, it's very interesting to see the kind of gains and losses that are coming in. If you just pull up the mid cap and the small cap, I mean, that recovery from the days though is spectacular here on the mid cap and the small cap 250 as well. And that's prevalent in the advanced decline ratio. If you pull up the advanced decline ratio from the way we started off this morning to the way it's actually closed its mouth, it's narrowed pretty much.
Yeah.
That's telling you that somewhere, one, traders are trying to close their positions today because one, it is expiry. And two, you have a holiday tomorrow.
Yeah, that market holiday tomorrow makes sure that you don't want to, but usually you would not want to leave anything on the table before a market holiday. That's not necessarily what's happening. Let's look at the sectoral heat map very quickly before we get to a recap of what's happening in the markets today and what's working there. India defense looking decent. Realty stocks have recovered. So have energy stocks. Auto, oil and gas are the big losers today. So here's what's happening. Nifty has conquered 23,900 on an intraday basis. Strong intraday recovery on weekly expiry despite opening nearly 500 points lower. Real estate and PSU banks are seeing the most buying at the lower end. Value buying is also continuing among mid and small cap stocks. Meanwhile, power stocks are seeing buying interest amidst rising power demand in summer. Remember, we're set for a heat wave in some parts of the country. Auto stocks are seeing selling owing to the draft cafe norms and the Delhi EV policy. Strong support levels seen at 23,550. Resistance stands around 23,900 to 24,000 levels. Bank Nifty resistance 55,800, 56,000 and 56,500. Supports for the Bank Nifty at 55,400 to 55,000. Let me go across quickly to Hemen Kapara to start off the conversation this afternoon. Hemen, how are you doing? Were you pleasantly surprised with the kind of recovery we've seen in the Nifty?
Oh, very good afternoon, Tamanna. Thank you for having me on the show. It was a pleasure. Yes, pleasantly surprised. Recovery, yes, because it opened with a big downward gap. We had a bullish gap to support, but yeah, it has been a pleasant surprise. And after months of turmoil, I'm not saying it's a light at the end of the tunnel, but yeah, pleasantly surprised, absolutely.
Yeah, very interesting. Hemen, hi, good afternoon, Alex here. And so therefore the question, individual stocks, there are a few that are bucking the trend that are doing particularly well, and I'm looking at the broader, I'm looking at the benchmark Nifty 50 and I'm looking at ICICI Bank, for example, that has made a pretty sizable comeback from the low point of the day, 3.5% or thereabouts if I'm not mistaken. So what are the individual counters that you're looking at?
Very good afternoon, Alex. Nice to see you. Individual counters, like you said, quite a few of them are frankly speaking all over the place. Metals is something which I like, and they have been doing well. So firstly, a buy call on Steel Authority of India sale. Upward bar reversal coming in today about the 55-day EMA. The mechanical indicators are a crossover buy. High tops, high bottoms, not only the daily but the weekly. So a buy on Steel Authority at 168, stop loss of 162, target of 180. It's a small trading buy, but yeah, if you have the patience in a market like this, the stock is going to 210 in the next 3 to 4 months, or maybe even more. Second one is a buy call on Adani Ports, Alex. There was a bullish gap. It has covered partially. It's taken support on the 55-day EMA, MACD, RSI, stochastics.
all crossover buys. Stock looks good. Short-term bottom in place. The medium-term bottom is probably happening or is underway. So buy on Adani Port at 1470. Stop loss of 1420. Target of 1570. Alex.
Okay, it's time to look at the stock of the day, and it is Zydus Wellness. It is in focus on the back of the stock performance and also strong outlook going ahead. What exactly is this outlook, and what do analysts say about it? Where do the valuations stack up? We've got Mahima joining in to tell you about all of that and more. Mahima, how does it look, and why are we calling it the stock of the day?
Right, so today, of course, the stock is seeing gains of about 10% and it's been the case since the past few days as well. This is one of the FMCG stock, in fact, which has stood out in terms of stock performance. 1 month, it's up 32%. 6 months, it's seen gains of about 17% where markets were clearly under pressure, and year to date also, it's given returns of around 15% to its investors. Now, overall, if you take a look at how and what's been working since the past couple of quarters for this particular counter, Comfort Click, which is overall now integrated, is expected to have double-digit growth going forward. Management is very constructive and positive on this particular product segment. With regards to RightBite, which is the recent acquisition, they're expecting a growth and a revenue potential of around 500 crores in the near future. Neutralite, which has been their stellar product, is expected to see that double-digit growth continue, which has been the case for the last 6 years and which has sustained the 6-year CAGR as well. Everyuth and Nycil have grown in 2026 year to date in double digits, and they're expected to grow further because of harsh summers. And Glucon-D, which is also one of the products which runs very well in harsh summers, is expected to boost sales going forward in the next 2 quarters as well. With regards to outlook, management has said that they're expecting and confident of delivering a 2-year CAGR of EBITDA margin, and overall the margin enhancement trajectory is also going to be very good going forward. They've not given the exact number, but overall a double-digit growth is what they're penciling in. In terms of where valuations go, right now the valuations stand at 49 times versus its 5-year average of 48 times. So in line with where the 5-year average valuations stand, and 1 year forward, it's slightly expensive at that 52 times. Even in terms of comparison it to its peers, it's largely at the same levels with regards to where the FMCG peers stand. Lastly, in terms of Bloomberg consensus estimates, there's still 8 buy calls on this particular counter, no sell or hold call on this one. The highest target price given is 590. The stock has a return potential of around 1.5% on an average versus what the target prices have been given by these analysts. So this is the overall view of what's happening with Zydus Wellness and the sell run that we've seen in the past 1 month for this one.
So Zydus Wellness, let's take a look at Zydus Wellness. Has been one clear outperformer, I would say, of the day, about 7% up. Himan, you look at the stock on the charts?
Yes, I had a look, Tamanna, while you guys were talking about it. All-time high, Tamanna. This is even after a 10-to-2 split. Higher tops, higher bottoms, has been an uptrend for what, 16 years or more. Looks good. No known resistances, clear blue sky. I'm not saying it's a buy at these levels after a move from 370 to 555 in a few weeks, but looks good, and the long-term uptrend remains intact.
Okay, I'm just going to pull up what you're seeing on your screen. It's an exclusive story on NDTV Profit, and just look at what's happening to the stock price as well as that story is now coming about. So here's what we're learning, and that spike over there as that story is breaking on the ticker. We'll get Shimi Chaudhary, who has that story, on the phone line in just a second. So government has unlocked 10,000 crores in MTNL that it's set to gain. It's 10,000 crores worth of assets from BSNL and MTNL have been unlocked. The asset realization is now complete. 3,000 crores for BSNL, 7,000 crores for MTNL. So exclusive sources that you have coming in. Monetization includes land parcels, non-core and unproductive assets across India, including Mumbai. Paperwork is underway and asset realization will be reflecting in balance sheet in 30 to 45 days. So if you're wondering why there hasn't been any exchange filings, because the money hasn't hit yet, but the paperwork is underway. The process has pretty much been completed. Proceeds will be used to service MTNL debt and clear bank dues. Government aims to maximize value and unlock idle assets, improving productivity. These are, of course, sources that we have learned from. Of course, asset monetization is part of the cabinet-approved revival plan, and the government is targeting 900 crores from BSNL in asset monetization in FY26, 4,573 crores from MTNL in this financial year. 1,350 crores has already been monetized. Look at the size of the debt, though. It's 34,000 to 35,000 crores. Obviously, this is a counter which doesn't have too much volumes in it or liquidity in it. But having said that, very, very sharp spike and reaction to the story that we've just spoken. We'll just catch me up on for more on that story.
For now, I'm very curious about whether Hemen has an opinion on the charts for MTNL, because as you've pointed out, it's not the most, it's not the most liquid counter. But having said that, let me come across to you, Hemen. The 8% spike can be attributed to the exclusive source-based information that is flashing on the screen right now. But what do the charts look like?
Okay, this is good news. But to be completely honest, Alex, these things have been coming and going. Okay, this is an actual deal. But last 20 years, we've had a lot of such things happening in MTNL. Having said that, oversold, volume spike, not enough. I mean, it's not even crossed yesterday's high. I'd say a recovery. Past has been disappointing to say the least. Small caveat, I had 3 MTNL phones. I don't have any, but that's on a lighter note. A recovery is underway, Alex. I'm not sure if one can attach too much of importance to it. Yeah, a bottom has been made. Will this sustain? 20 years have shown it hasn't. So let's hope it's better this time around.
No, so okay, the difference here, and I get your point that a lot of announcements have been made, but what we are reporting is that the assets worth 10,000 crores have already been unlocked. So that's really the core difference, and maybe why you're seeing this reaction. And we have to understand that the government is getting pretty serious about asset monetization at this point.
It's not just, and what I think is more important, and this may not just be a case for MTNL, though that is today's story, but remember what the finance minister said during the budget is very clear in terms of assets that are owned by public sector enterprises. And even if you go around the city of Mumbai, you will realize what we're talking about here, because you have, for example, if you go to South Mumbai, you will look at a telegram office. Now, guys, this is in South Bombay, in Colaba or Fort, where you have huge real estate assets. So we're talking about a significant amount just for MTNL that could be productively utilized. Those proceeds, of course, will be utilized effectively by MTNL. But we've got Shrimi Chaudhary, who broke this story with us with that exclusive information. Shrimi, take us through the details here, and what will these proceeds be used for?
Yeah, absolutely. MTNL is definitely back in focus as government has unlocked over 10,000 crore worth of assets from BSNL and MTNL, with proceeds from these, assets set to support, one, of course, to reduce the bank dues, as well as the entire sovereign debt which MTNL has. What sources indicating that asset realization has been completed, and BSNL alone is contributing around 3,000 crore, which means that the assets belonging to BSNL is going to have unlocking of 3,000 crore, while MTNL is about 7,000 crore. Now, these monetization include, all sort of assets like land parcel, non-core and unproductive assets, etc., and across the country, including Bombay. And paperwork is what we are learning is currently underway, and the impact of these transactions will be reflected in the balance sheet of both BSNL and MTNL within 30 to 45 days. But we are also picking that the monetization exercise is of course the part of the cabinet, but what it's exceeding the target, because what government target initially for BSNL 900 crore in the just concluded financial year, that is FY26, and MTNL target at 4,500 odd crore. So BSNL already realized 1,300 crore as on July 2025, and now this 3,000 is over and above the 1,300 crore which they realized already. Now, MTNL, as you know, it's remain under significant financial stress, and this is going to help that because your sovereign debt is coming at 34,000 to 35,000 crore, and the bank dues, the default exceeding 8,500 odd crore to PSU Bank. So this is a key step, of course, because the idea is not just to what government's also saying to unlock the value, but also to make all those unproductive assets to work in full capacity, and could be in the form of whether you are maximizing the value through rental income, or you are transferring those assets to third party to run it efficiently. So with all these focus, of course, MTNL back in focus.
Yeah, this is going to be back in focus. And what's interesting is, they're sitting on a debt of close to around 36,000 odd crores. And as Shrimi was mentioning, 8,500 to 9,000 odd crores is the kind of bank loan defaults that MTNL is sitting on. So clearly, the money that MTNL will get on the back of this monetization is going to be used to retire some portion of the debt. What quantum it will be, all the details will come in shortly, but clearly 36,000 crores is the kind of number that you're talking about in terms of MTNL on the debt profile. But moving on, the stock as well, let's just once pull that counter one on the screens, because 8.5% it's sustaining the kind of gains. A mild downtick coming in there, but little over 8% is what you're seeing on the back of MTNL. But to note that the volumes are absolutely thin when you talk about a counter like this. Moving on, Delhi's proposed EV policy could bring a major cost advantage for electric car buyers in the city. Now, how will this actually benefit the players and what it entails for the buyers? Puneet is here to share all the details. Puneet, interesting moves in names like Ather, Tata Motors, PV. Though you have a Ola, which is down under pressure today, in terms of the EV policy as well, what are you picking up and how does it benefit the individual players that we're talking about?
Well, thank you for that. It's definitely a key mandate, because from 2027 onwards in Delhi, especially for three-wheelers, only the electric ones will get registered. For the two-wheelers, it's going to be 2028, and for school buses, minimum 30% of those will have to be electrified by 2030. Now, these are aggressive timelines, but to achieve those, there is a subsidy that's been announced across these three verticals and these categories as well. Now, for two-wheelers, you get in year one almost 10,000 rupees per kilowatt hour. A general scooter is roughly between 2 to 3 kilowatt hour in terms of electric, so you get 30,000 benefit in year one itself if you buy a 3 kilowatt hour electric scooter. In terms of that benefit for three-wheelers, it's a straight benefit of almost 50,000 in the first year, and then reduces gradually over the year 2 and year 3. And specifically for electric good vehicles, where the price of electric goods are more pricier than the autos, in essentially three-wheelers, you're seeing a higher benefit of almost 1 lakh rupees in the first year, followed by a 50,000 rupee benefit in year 3. But what's interesting is all these companies, especially the pure play EV companies like Ola Electric and Ather Energy, will be in focus for the two-wheeler space. But TVS, Bajaj, Hero, as well as Eicher Motors now with the Flying Flea will also get some focus back for the legacy players. Within the bus makers, Electra and JBM, and both stocks are reacting today, will be clear winners here because of their pure play CV venture, and specifically amongst others, Mahindra and Mahindra also on the commercial vehicle side will get that benefit. But while this is the news, it's also important to get our take on this as well, because it will be very difficult to ban vehicles from getting purchased from 2028, because almost out of 167 vehicles in the two-wheeler space are all ICE right now. So that's point number one. And the other very, very important aspect, electric cars do not get a direct subsidy. They do get some benefit of road tax being waived off, but no definite benefit there as well. And for specifically the two-wheelers, targets might be very aggressive at this point of time. So those are some of the key aspects to watch. But buyers might go across and purchase from NCR and then make these vehicles available in Delhi at this point of time. But difficult to implement those bans at this point of time.
I agree. But directionally, it's an important move. It's been seen as negative for a lot of the OEMs. I want to get a perspective from Electra Green Tech. Mahesh Babu, the MD of Electra Green Tech, now with us on the show. Thank you so much for joining us, Mr. Babu, and great to have you on. Just trying to understand whether you see this as a big shot in the arm. From your perspective, this is great, isn't it? With Delhi trying to implement more EV vehicles on the road.
It's a very positive move to EV industry, and also I would say for auto industry. While we overall look at it, the policy is clearly incentivizing as well as mandating adoption. This is what is followed globally. I think it's very effective, and Delhi has been a pioneer in getting the electric vehicles into the region, mainly because of reduction in pollution due to mobility and many other challenges faced by Delhi. I think it is a very forward-looking, very positive policy. I feel that it will give a boost to EV industry, and it's well balanced. I think next 3 years, a clear map on two-wheeler, three-wheeler cars, even buses, school buses. This is the first time a mandate is being given to private institutions, which is a very positive step. So I see this as a very positive step. Sometime back in Niti Aayog, we industries have been discussing about a lighthouse city where there is one city where it will have complete EV. I think Delhi is moving towards it with the challenges of pollution and also other mobility challenges. I think it's a perfect example. If this goes well, I think it will be a perfect example.
May I ask, and some of the incentives in registration, etc., are there, but in every policy to promote electric vehicles, all governments stop short of incentivizing the buyer, at least for passenger vehicles. Why is that? Is that not seen as big of a concern or in terms of numbers?
Yeah, I think personal vehicle choice has to be given to individual. I think promotion can happen in certain segment, incentivizing can happen in some certain segment, and mandate has to happen in some segment. So all of them have to play a role. So government has to decide where to incentivize, where to mandate, where to give a fair field, and I think that's what they have balanced. Commercial vehicles run a lot and they consume a lot of fuel, and they also pollute more in the city, and personal vehicles typically are run in a very short distance. So that's the main balance government have to do. I believe the Delhi government have done a very fair balancing between incentivizing, mandating, and giving a clear roadmap for next 3 years and so on. I think industries will look at stable roadmap, clear mandate and clear incentivizing for the sector which needs to be promoted. I think commercial, three-wheeler, personal two-wheeler are the segments which government wants to incentivize, which I agree with.
Okay, Mahesh, good afternoon. This is Hira here. My question to you then is, we're talking about the incentives that are coming in for the buyers. For a company like Olectra, how do you stand to benefit? That's the question that even Tamanna is talking about. Because of this policy shift, does Olectra benefit in any way? And number two, is that you contract manufacture or anything of that sorts?
See, I think what is important is Olectra will benefit because we are in the commercial bus and truck segment. If you look at the commercial bus segment, only 20% is government purchase. Almost 80% is private. If you look at this policy, the biggest chunk of entry into private is school buses. There is a very clear mandate, 10% to 30% adoption from now till 2030 on school buses getting adapted to electric. It's a very positive one. Move into sustainability, particularly in school children, young children coming in. So this will benefit us because private is the 80% of sale in bus segment between 5 meter to 12 meter. And till now, we have seen humongous adoption in between 9 and 12 meter buses, which are mainly STUs and city-run buses, which government has given a PME Drive, PME Seva, and other schemes to promote. Now, I think we are in the second phase. The second phase, definitely private has to be mandated or incentivized. I think Delhi government has very clearly told what they will mandate in terms of school buses. So we welcome it and we'll support as an industry to make sure the schools are economically benefit by our products, and hence our sales will definitely have a positive impact.
So it's your school buses as a business which comes in as a benefit to a company like yours. Thank you, Mahesh, so much for joining in. Always a pleasure to speak to you. So Olectra Green Tech, that's a stock to focus on. Atul Auto, all of these are actually seeing some smart moves as we speak. But, let me actually head across to Ashish Chaturmota. Ashish, good afternoon and welcome. My question to you is, with the new Delhi EV policy, how are you seeing the benefits actually trickle in? And if you have to divide these between segments, two-wheelers, PVs, CVs, where do you actually, see maximum benefits coming in?
Hi. So I think as far as, clearly the benefit is towards a lot of these, CVs, and that's where companies like like JBM and as you rightly mentioned, Electra Green Tech is one company which is going to be a big beneficiary. But I think the biggest beneficiary in the longer term, according to us, could be Mahindra, which has transitioned itself into a great EV company, and the new launches of some of its passenger vehicle products in the in the IEX category is also getting a lot of good response, and there's a huge amount of booking for this product as well. So I think Mahindra could be a good long-term compounding bet within the entire EV segment. If we have to bet on the two-wheeler space, then I think TVS Motors products are very superior, and I think they've gained good market share from its peers. So that's where TVS has been consistently gaining market share, and that's where our belief is TVS will continue to do very well. So in a chronological order, I think Mahindra, TVS Motors, and then Electra Green Tech. These are the three names which we like within the large cap, mid cap, and small cap space.
Right. Okay, so that's the view on the automotive pack as a whole. Let's go across now to Soumit Sarkar for the regular feature on the show, which is to get you a sense of what the dealing room checks are giving you. And Soumit, we've seen an interesting comeback from the low point of the day, seemingly buying, and this is very interesting. So what individual counters stand out in your check?
Well, multiple of them. Firstly, it's Page Industries and Jaiswal Neco. Now, other one is a cash stock. Now, there are buy flows on the large HNI desk on both the names, and dealers indicate that the fourth quarter numbers for both the names are expected to be quite strong, and hence this buy flows coming in on the large HNI desk. For Max Healthcare, the stock has been under pressure for quite a while. Dealers are now indicating that the selling pressure is largely over when it comes to Max Healthcare, and the stock could rebound from the current levels. And then a bunch of stocks, BHEL, Engineers India and Torrent Power. There are buy flows on institutional desk on all the three names. Delivery volumes are also expected to be on the higher side. Now specifically to BHEL, some MSCI flows are also expected in the last half an hour of trade. So keep an eye out for that counter as well.
Okay, we'll take a very short break. What I think is important to note is the kind of recovery that we've seen in markets despite that clock counting down to the blockade beginning. That'll be a double blockade on the Strait of Hormuz. What is that picture going to look like? We're going to talk about that with Lev Aran, political analyst, after this very short break to break down what the next 24 hours could hold. We're coming right back after a very short break. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Tamil Nadu votes decisive uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu to get you the real picture. From the OG of Indian elections comes the next big political blockbuster.
Because
Tamil Nadu
votes only the way Tamil Nadu does. Tamil Nadu elections on India's original election watch.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Okay, the next few hours is going to be vital because a US blockade of the Strait of Hormuz is set to begin. At least that's what the claim has been, with a deadline set over the next few hours, about 7:30 p.m. India time. If you pull up live satellite imagery from the Strait of Hormuz, this is from marinetraffic.com, you will see that the space is pretty much empty. So now we have a ceasefire, not quite a ceasefire, and we have a set of talks that has failed. What continues to happen? Lev Aran, political analyst, joining us from Israel at this point. Lev, thank you so much for your time. How do you see the next 24 hours developing?
Look, we are all drinking down out the talking points of Iran, of Israel, of America, and we need to keep up with reality. Iran has now two choices. One is to keep the ceasefire for the next, let's say, 10 days, and coming back again to Pakistan or Oman or other places, or decide that it starts a war again against America and against Israel. So Iran has this sticky wicket, and they will have to decide.
What about the latest Trump memo? And Lev, good afternoon from where we're at. This is Alex. What happens about this blockade that comes into effect later tonight? And this is apparently an attempt to counter Iran's own move to control the Strait of Hormuz. How does that pan out? Because ultimately, it has the potential to move warfare from a regional warfare out into the open seas.
Trump is beyond redemption, okay? We cannot predict what he will do. And even if he does something today and he does the opposite tomorrow, we will not really be surprised. So right now, the only thing that we can be sure about is that for, let's say, the next week, America will check how Iran will react. Because unlike Israel, where the war is, let's say, quite popular, both in Lebanon and in Iran, because it feels like a war for survival, I don't feel that many Americans really believe that Iran is a true threat to America. So in America, it is like a top-down war from Trump. And right now, he believes that the only way to bring Iran back to Islamabad is to close the Hormuz and even to sacrifice the Emirates, Qatar, Saudi Arabia, etc.
Right. Lev, good afternoon. This is Hiral on this side. My question to you then is, right now we're talking about the Strait of Hormuz, which is getting blocked. There is a potential of the other strait, which is Strait of Bab al-Mandeb that we're talking about, which will be blocked as well. If that's the scenario, hypothetically, what happens in terms of trade and the geopolitical, issues surrounding both of these straits then?
The Houthis in Yemen, they are not as strong as Iran.
Okay.
So they can threat. And of course, they can cause a lot of damage. But you cannot really compare a state like Iran, which has the same regime since 1979, and compare them with the Houthis in Yemen, that some of them are like venal and corrupt, and some of them were bombed and they're much weaker. So I do not try to play down the damage that they can cause, but I would not compare it to the damage that Iran could cause in Hormuz.
Lev, I think it's important, therefore, and thanks for putting all of that into context. The next 24 to 48 hours and heading into the next week are absolutely critical to track, and hopefully this dissipates and resolves itself. Thanks so much for taking the time. All right, let's head across now to Chakri Lokpriya of LGT Wealth, as well as Amit Goel of Blue Oak Wealth, joining us on this leg of India market close as we wind down to the close of trade. We're heading towards a midweek market holiday as well. I wonder whether some positions are getting closed because of the kind of swirling uncertainty that continues to exist. And good afternoon to the both of you. Amit, I'll come to you first. In the kind of bounce back that we've seen from lower levels, are you also seeing signs of short covering perhaps, and of an instance of maybe people saying, I don't want to carry on positions beyond today?
Yeah, hi, good afternoon, Alex, and thanks for having me. It's always a pleasure to be here. Yeah, the short covering has been evident since the beginning of the trade in the morning. The market did hover around the opening mark, which was 23,389 or thereabouts, and 23,689 and thereabouts. And then after about 15-20 minutes, did a very sharp and smart recovery, and that has continued towards throughout the day. The trend has been very clean on an intraday chart. So there is a very strong recovery. In fact, Nifty has been bouncing from the 21 EMA mark, and the fresh leg of up move can happen once Nifty crosses previous closes high, which was roughly about 24,100 or thereabouts. So I am positive on the market, and as long as we hold this range, which is the day's low, it should head up towards at least 25,000 in the coming days.
35,000 is what we are watching out for. I mean, we have to take this with a pinch of salt as well, whether to discount what's happening in the geopolitical markets. But Amit, what would your top picks be at this hour?
I would play in the defensive arena. I would look at Lupin. I would look at Loris Labs. I did have Ether Energy in my kitty, but it has already given a very sharp breakout. So there could be some bit of profit booking over there. So Lupin is a good candidate. It has been showing strength in this entire, uncertainty in the market and the down move. So Lupin is a good candidate to go long from a swing perspective at current levels, also keeping a stop of about 2,300 for targets of about 2,400 or thereabouts. Along with that, Loris Labs also is another candidate, which looks like a technical breakout candidate with a very sharp W pattern getting formed right at the top of the market, and with 1,088 as the current market price and a stop of about 1,040, one could look at targets of about 1,175 or thereabouts.
Okay, I mean, you're talking about pharma companies, and in fact, today there is a FICCI Pharma conclave which is ongoing, where my colleague happened to speak to Mankind Pharma, Biocon, and it was an interesting commentary that came in from Mankind Pharma, where they said that the price hikes that could be on the anvil right now because of supply chain disruptions, and they're expecting raw materials to see an impact in the next 15 to 20 days. They're expecting inflationary price hikes due to the war. Chakri, let's say mid-May onwards is when probably price hikes is something that could be on the cards, and pharma as an industry is somewhere insulated and controlled to to some extent by the government as well in terms of couple of drugs. How are you looking at the impact and what could happen in the first and the second quarter on the back of price escalations that could be coming in on the cost side?
Pharma as a sector has been fairly resilient because A, it's not part of the tariff, and B, I guess people need medicines to live. Third, because of all this, the earnings has been fairly intact. The export picture has actually kind of helped because the rupee falling, it's actually strengthened the export outlook. And on the domestic pharma is very well intact. So Mankind Pharma, Torrent, they're all well positioned to grow north of 15-18% earnings. And therefore, if in turbulent times, these might be companies worth looking at.
All right, it's time to go to a special story, and I'm joined, of course, at this moment by Jasmeet, who's going to talk about India's top companies which are facing, in the IT space, of course, which are facing the toughest growth phase in years. But the question that a lot of people are asking now is, can a transition to AI spark the next growth cycle, or is the slowdown far from over? Puneet is joining in, or not Puneet, Jasmeet is joining in rather, to break this down for us. Jasmeet, a lot of people are talking about that revenue contribution from AI. Where does it stand right now, and is it likely to accelerate the next growth phase?
well, that's something to watch out for, even for other analysts and the companies as well. But quickly understand what exactly has happened all this while on the back of the AI and how AI is leading to the overall slowdown in the growth. Starting off with the key comments of what has happened in the past times. Well, TCS reported their first ever dollar revenue degrowth since the time of listing, which has created the overall IT pack into the radar, and I've seen the degrowth. While further, the AI concerns have put the entire IT sector under a scanner over last few months. Even the Feb, we did make a note that the stocks were down almost 20 to 25% on the back of that new plugins launched by various IT companies and AI companies out there. Further, we also say that the tariff fear and the global uncertainties have made overall FY25 and FY26 key questionable, where we have seen degrowth in terms of CC growth and also negative for a lot of companies, and that still continues. And now, as we are out of tariff fear, we also have the over client spending change towards the AI. Further, the AI is adding more fear on the revenue deflation, and the companies have been planning to do more inorganic growth. That's why in the past quarter, we did make a note where a lot of companies have done a lot of acquisition in terms of AI and different spaces to grow the inorganic revenue that they're earning. Lastly, the overall growth has been slowing for these companies over last 3 years, and there's no sign of revival so far. So what we have done is we have gathered the data for last 13 years for the IT companies, starting off 2013 up until 2026, to get the overall growth picture in terms of dollar revenue growth. So if you look at the overall dollar revenue growth, 2015 we did make a note, the overall digitalization came into play where the revenue growth dropped. Further, the COVID came in where the revenue growth dropped to 0.6 odd %, and then we see a spike coming in for TCS at 16 odd % post the COVID revival, and since then the revenue has been slowing down, and this year the company reported a negative degrowth as of FY26. Now we have similar analysis for HCL Tech and Infosys as well. Now what we noticed for HCL, for Infosys, we do make a note that again during the COVID a drop to 6.1%, the gain back to 20%. Then again the slowdown continued over the past few years on the back of that AI the company has been doing. And lately in the last FY25 we did make a note the lowest growth for the Infosys at 1.9%, and FY25 was a 3.9 slight revival in the company. But something to watch out how the FY26 pans out for the company, and will they further degrowth, and will there be a pickup from here on? Now for HCL Tech, the image looks a little better compared to other two folks, given the companies into the product business as well, along with the software. We do see growth staying as high as 2.7 during the COVID year. The spike comes at 13, and the overall downtick is a little slower than other companies, but currently at 3.76%. Again, this is the lowest in last 4 to 5 years compared to COVID years. So now FY26 becomes a key year to watch out. How does the overall revenue growth span for the company, and how will the overall AI revenue start adding up to the overall top line for the company going ahead?
Got it. All right. Interesting. And I think a lot of people are looking at the valuations of large cap IT companies and saying that the downside from this point is limited. And so therefore, it provides an opportunity because of that downside being limited. Chakri Lokpriya, do you agree with this thesis to say that the margin of safety from this point, considering that they've been beaten down so much, and even if I look at the last week, when the market as a whole gained, and you had the Nifty 50 that gained, what, 6+%, you had the IT index was up only about 2%. And so therefore, is there an opportunity to be had here?
You know, currently IT is probably penciling in somewhere about 3 to 5% terminal rate revenue growth, which kind of, those numbers kind of is slightly different for different companies. TCS is growing slightly slower, HCLT is slightly faster. And on the other hand, the rate of replacement of the loss of revenue is because of two factors. One, there has been a slowdown in general discretionary spend because of tariff, war, visa issues have all slowed down the business. So these are temporary issues. Therefore, the trendline revenue growth goes back up. Second is, now for TCS, 7.5% of the revenue comes from AI. So as that percentage, and that revenue is growing 25-30%. So as that percentage of AI revenue comes in, increases, and therefore that will add to the overall revenue growth. So against this backdrop, I think the terminal revenue growth rates for the sector is likely to move up from the 3 to 5% to, let's say, 4 to 6%. And with the current valuations, I guess right now you're somewhere bouncing off the bottom. There's not much downside, but the gradual increase because you need the war to stop, you need tariffs to conclude.
So that's with regards to where Nifty IT goes. It's an interesting play that one is watching out for. But, coming back with a couple of other, news flows, you have the arrest of 6 employees in a sexual harassment case where TCS has confirmed it has suspended all implicated staff from its Nasik office pending an internal inquiry. Jasmeet is here with us with more details. Jasmeet, what do you have for us?
Well, thank you for that. While Nasik police investigates multiple such allegations against TCS employees, well, this thing comes under the play as a woman accused a colleague for the rape, and further they also gave a false pretext about the marriage. So it was a rape based on the commencement of the marriage. Now, while police investigate this case further, and they further got to know there are 7 other more women with similar complaints, and the accused for this same cases are similar people who were accused in the first case as well. While after this, the police has arrested 7 people and 1 has fled from the overall location, while 7 employees have been arrested so far, including the HR of the company. And this particular incident has spanned over 4 years, starting off from Feb 2022 up until March of 26. So we see this is a long history of the case where the Nasik police is still looking into the matter and get more clarity on this. While post this, TCS has come out with a statement where they say that company has suspended all the employees on the investigation given the inquiry. Further, they also make note that the company has a zero tolerance policy towards the harassment, and further they state company will fully cooperate with the police to find a solution for the overall issue that we saw at the TCS BPO in Nasik.
Okay, so that's with regards to where TCS goes. We've spoken about a few of these IT majors already. But moving on, let me just take a quick view with Amit. Amit, if you have to look at large cap IT, if you have to look at mid cap IT as well, where are you seeing charts which indicate good entry levels now?
Charts on the large cap IT space, if you look at the IT index, it did try to touch 28,000 levels and has smartly recovered from there and is, if I'm not wrong, hovering around 31,000 levels. So there has been a smart recovery of about 6 to 8% on the index level of large cap IT sector, IT companies. But it is not able to sustain those levels. So I would like to rather see it sustain, create a base, and then move up about 31,000 levels on the index level. That is when one can look at investing in IT rather than trading in the large cap IT sector. Though in the small cap and mid cap IT sector, there is this company which I see from a chart pattern promising, which is Persistent Systems Limited. And if you look at today's price move, it is a positive move. However, even though it is down by about 1% or so, the price action seems to be very, very positive. And I would like to attempt taking a small punt here, keeping today's low as stop loss for targets of about 5,600 or thereabouts.
Right. But specifically, and Amit, we were talking about a few individual counters as well, and I want to actually go to the broader markets as well to ask you about a few of